international oil market and its prices in the long run may help, the inflation in the country. But I don't think, except an economic fallout, there is any political fallout that he's worried about at this point.
And thank you so much for taking time out and joining us this morning, Professor. So there you go. That's the entire word coming in terms of what a credible off-ramp looks like for both sides right now and what could really force Trump's hand when it comes to this particular war right now. But let's also get to the FNOQs in terms of what they have in store. And it's quite a mixed bag that you're looking at, Puneet. On one side, you do have a decent picture coming in as far as Wall Street is concerned. US futures, though, quite steady.
Well, most certainly, but we are expecting a gap down, at least at this point of time for the Indian markets, as suggested, has been very volatile. And while yesterday we did see almost a 400-point recovery on the Nifty 50, closing above the 22,900 level, at least for now, a 175-point downtick at the start for the implied open. In terms of the Bank Nifty as well, that's been the other area where we've been consistently looking at. Saw almost 1,500 points in terms of gains yesterday for the Bank Nifty from the lows. So you saw buying at the bottom end of the pyramid, led by also HDFC Bank in yesterday's trading session. So around the 52,600 mark, there are no meaningful supports here. So you will need to go around 600 to 800 points more on the uptick to even form the first layer of supports at this point of time. But continue to monitor all these trends bright and early this morning. In terms of the cash markets, you've seen yet again a selling by foreign investors. They've sold roughly $12 billion in the month of March, and that trend has continued going into the first week of April, while DIs continue to pump in almost 8,000 crores. In terms of the index long for foreign investors, we've been consistently highlighting around 15 to 16%. That now has inched to 17.55%. So yesterday, maybe a lot, while there has been a sell figure in the cash market, maybe some index long positions being added on. And the put call ratio also has actually inched up to 1.26, which indicates more shorts in the system. So these two numbers have given a slightly more divergent trend in that sense. We continue to monitor all those positions as well. In terms of open interest distribution, we've moved away from what we saw last week at the starting point of 21,900 because of the positions being moved in across the board. So you've seen 23,000 now. See one of the biggest moves in terms of calls consistent with what we've seen last week as well. But 20 to 500 is starting to see some open interest increase for the puts at this point of time. But largely barring the rest, only 23,200 for the calls stands out, while the rest have been maintaining their positions. And in terms of stocks also, before we wrap up, we've seen in terms of gainers, Force Motors, as well as Adani Power, Vishal Megamart and Hyundai Motors, which has been in a consistent downtrend, down 25 to 26% from the highs of almost 2,800. Now trading at sub 1,700 levels, has seen short build-ups in the system for all these names. And in terms of open interest losers, you continue to see Blue Star and Bharat Dynamics being the top losers, along with Astral, which wasn't focused yesterday. But the open interest thins out very quickly. So overall, look at all these plays which have done well for the markets over the last few months, but continue to see a downtick, at least at the start for the Nifty.
No, absolutely, and let's see how that really pans out for us, Puneet. Thank you so much for getting us the FNOQs as well, bright and early this morning. But with that in mind, let's also move on and try and take a look at some of the stocks that are going to be in focus. In fact, there's an entire list that Varsha is looking at right now. In fact, Varsha is standing by with that entire list. Quite a lot of stocks that make it to your radar this morning, Varsha.
Yes, absolutely. Let me start with the positive ones, or which will open on a positive note. You have ONGC and Oil India, wherein Brent crude, if you see, remains elevated post Trump commentary. You have Storecraft and TTK Prestige, wherein government have relaxed energy efficient norms for 6 months till Jan 1st for induction hobs. You have GMDC and NMDC, which will be in focus. Now government eases norms for mining of deep-seated critical minerals. Aurobindo Pharma will also be in focus, considering the positive results for one of its biosimilar product. IRFC rupees 1,000 crore financing agreement has been done with Mahagenco. You have Titagarh Rail, wherein the arm there's an approval for brownfield expansion in West Bengal. PDS will be in focus as they have received 450 crore rupees contract with US retailer. Deep Industries has got 59 crore order from ONGC. You have Brigade Hotel Ventures, which has signed MOU with Hyatt. Tube Investments of India has announced a key announcement which will be in focus. You have Acme Solar, wherein they've commissioned their battery energy storage system project. Well, 2 to 3 stocks will be in focus on the negative side. I would say you have Kolte Patil, wherein 58 crore tax notice have been issued to the company, and Pace Digitech and Glottis will be in focus considering the share lock-in expiry for both of these companies.
No, absolutely, and thank you so much, Varsha, for joining us with that entire list. So there you go, that's a bunch of counters that actually make it to her list. But let's also move on and talk to you about the AI overhang that continues. When you talk about some of the counters in the IT sector amid rupee depreciation and optimal valuations. In fact, Jasmeet is standing by with a sectoral Q4 preview that's going to be highlighting which companies will fare better than peers as well as industry estimates. Jasmeet, good morning.
Well, very good morning and thank you for that. Now, if you look at the overall Q4, the major concerns remains around the AI. The key trends that we see in this particular quarter remains on the overall AI, which overhang is expected to continue in this particular quarter. And apart from that, the rupee depreciation as well as the overall valuation seeing a degrowth is something that will be a key positive for the quarter. The second trend now, JP Morgan says first time in last 8 years, it has become very crucial to look at the overall revenue guidance commentary by the IT pack, given the overall AI is impacting the revenue and the deflation, something that's expected by the companies. So the commentary remains the key. Thirdly, if we look at the Accenture commentary, which is generally read as a bellwether for the IT company, we have seen the overall macroeconomic has not changed much for the IT pack. The demand still remains the same, but again, it's a cross trade. But we also made a note that the overall AI booking for the company has picked up for Accenture. So that's something which will watch out clearly for IT pack as well. While the fourth trend that we note is that overall brokers expect on the QOQ basis, the Q4 to be much more better when you compare with the Q4 of FY25 in this particular quarter, given the companies have had a low base in the Q3. Now, in terms of the lastly, we expect that the IT service companies to do really well when you compare with ER&D companies. ER&D companies have still the global overhang, which they are working on, which will take some time to recover in trade. But IT in this particular quarter do much more better when you look at the ER&D names. While lastly, the overall commentary on the acquisition, the Q4 has been a key quarter, given a lot of companies have acquired many entities in the Q4, majorly the top IT5 companies as well. So the overall commentary on the acquisition, further how the ramp up and integration works will be a key thing to watch out for. All in all, we do see a good quarter for Q4 for IT pack, but it's a wait and watch of how does the overall revenue guidance commentary by Infosys, HCL Tech as well as Wipro pans out.
No, absolutely, and thank you so much, Jasmeet, for getting us that roundup. With that, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India market open on the other side of the very short break.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit for your profit. Presenting the all-knowing, all-powerful tech. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open, and the markets are nervous this morning, isn't it, folks? Did you guys manage to catch glimpses of that press conference?
This morning.
This morning, no. So I saw it that evening, and of course, a lot of it was talking about the daring rescue and operations. But all of that optimism about a ceasefire, some kind of conversations between the two warring sides, I think got deflated with the kind of angry rhetoric that came in. I want a deal that suits me, otherwise I blow up every bridge and power plant, and that was reiterated. That's probably what we're going to see on the screen this morning.
And to that, you have Iran also, who's coming out in the same tonality, right? So you don't see any signs of things easing.
Yeah, there's no off-ramp as things stand right now.
Yeah, and Iran has frankly shown no signs of wanting to give in at any point in any case.
It's got a stranglehold. Why should it give up
without what it wants, right?
So it's getting more and more tough. Okay, let's get to the highlights of what US President Donald Trump said in that press conference took place at about 11:15 last night. And net, if you were to think about what's really happening, there is a deadline. It's 8 p.m. Eastern time. That means about 6:30 tomorrow morning. 4 hours after that, if Trump doesn't get the deal he wants, he says he will blow up every bridge and power plant in Iran. Listen to a few of those excerpts.
I gave them an extension. They asked for an extension of 7 days, right? I said, Steve, give them 10 days. 10 days is up actually today, so I gave them 11, I guess, indirectly. I thought it was inappropriate the day after Easter. I want to be a nice person. They have till tomorrow. Now, we'll see what happens. I can tell you they're negotiating, we think, in good faith. We're going to find out. We're getting the help of some incredible countries that want this to be ended because it affects them also. A lot of people are affected by this. But we're giving them till tomorrow, 8 o'clock Eastern time. And after that, they're going to have no bridges. They're going to have no power plants. Stone Ages, yeah.
Last week you suggested that Europe should take the lead on reopening the Strait of Hormuz. Has circumstances changed now that you're issuing a direct 48-hour ultimatum? And secondly, would a new ceasefire include Israel, or would it just be between Iran and the US?
I can't talk about ceasefire, but I can tell you that we have a active, willing participant on the other side. They would like to be able to make a deal.
In order for Iran to successfully meet your deadline tomorrow, do they have to make a deal, open the strait, or both?
We have to have a deal that's acceptable to me. And part of that deal is going to be we want free traffic of oil.
Okay, so that's what Trump wants. Meanwhile, Iran is insisting any deal must lock in strategic gains and reshape regional security. Tehran has issued its own ultimatum to Washington, warning of severe retaliation if demands are unmet. Iran has also unveiled a 10-point blueprint seeking security guarantees, full sanction relief, end to hostilities. They also want reparations for all the damage done during the war. This is the only way they will open the Hormuz, but under tighter control. On the other hand, Israel's Benjamin Netanyahu reportedly has urged Trump to avoid a premature ceasefire, flagging security risks in any Iran truce. The US holds firm that any deal requires Tehran to surrender enriched uranium, exposing sharp divides over all of these terms. Amidst all of this, the IMF chief, Kristalina Georgieva, has flagged that the war has triggered severe global energy disruptions as Iran's Hormuz chokehold curbs vital oil flows. The blockade threatens sustained crude volatility, supply shocks, and wider economic risks. Meanwhile, US markets closed with mild gains after that press conference, even as Trump has reiterated the Iran deadline. Indices were pretty much flat to positive in trade. And if you look at futures, you're seeing a similar trend going through in trade right now. On the flattish side, frankly, nothing much happening there. Bond yields have stayed steady. The 10-year was at 4.33%. And all eyes are on the March CPI data, which will be out Friday. That becomes important because it's the first data set coming in which will have some impact of the war baked in. Oil prices, meanwhile, have stayed elevated after Trump threatened to destroy every power plant and bridge in Iran if a deal is not reached. 110 is where the Brent is. Asian markets opened up in the green, but have not been able to really keep up that momentum. Hang Seng nearly 1% down, but it's India which is looking like it's going to have a shaky start. Nearly 200 points down is what at least the implied open is showing us. Ajay Bagga joining us this morning, market expert who tracks global happenings very, very closely. Mr. Bagga, thank you so much for joining us this morning. Great to have you on, as always. Is there any sign of an understanding between the two sides? If I separate the rhetoric, the memes, the social media posts, and all of that, and try and understand if there's actually a dialogue and a ceasefire possible, is that seeming likely to you?
Yeah, that's an excellent question, Tamanna, and that is the crux. We have to cut through all the talk from Trump and look at the actual action. Probability that the market is discounting in is that there will be another extension, though Iran has said no to the 45-day temporary ceasefire. But the feeling in the market is that there will be something that will come through. So it is a little bit of a binary outcome tomorrow, but will there be a very heavy bombardment and all that? The market is not discounting that in. The oil price is showing that. I think what we have to look at is what is the market action? Second, the oil price. I think that is giving us some amount of clue. Otherwise, very difficult. There are 4 actors and all on a different timer. The US wants to get out as fast as they can. Trump is looking at November midterm elections. Iran knows that the longer they keep everybody in a quagmire, it becomes a Vietnam for the US. They want to extend it without incurring very heavy damages. Israel and the Arabs don't want US to exit right now because Iran will come after them after it has recovered. And the world wants an end to this and a normal oil and gas shipping to restart. So that's where we are at. Markets are taking a more optimistic view that something will come by and we will get through this. Again, because Trump has to exit, he cannot keep getting involved in this and incur a potential November loss. So that clock is ticking very loudly for Trump, no matter what all he's saying. And we had expected that he would exit out and leave the Hormuz opening to the others to negotiate, which 35 countries actually got together, India included, and they were ready to negotiate that out. And then he came back running and he's put a spanner in that because he doesn't want any deal without him being involved. So it is very confusing. It is something that is not rational, something that's not linear, but markets are still discounting a higher probability of something working out.
Understood. All right. So that's the context, Mr. Bagga. Thanks so much for that. Cameron Brandt, Director of Research at EPFR Global, joining us at this moment as well. Cameron, thanks so much for taking the time. Let me ask you about the flows data, because if anything, this entire geopolitical crisis has accelerated something that was already underway, at least seemingly from India's perspective, where you have had an exit by foreign institutions, and that has only gotten exacerbated over the past couple of weeks. What else are you seeing in terms of flows into other asset classes as well, with bond yields also spiking?
The past sort of 10 days, it's been more of a plague on all houses. Very few fund groups have been attracting fresh money. That includes some of the ones you would expect to do better in a period of tension like the one we're living through. Even cash funds, liquidity funds are seeing money go out, I think, in part because people are either meeting margin calls and other demands stemming from the sell-off, or in the US, we're coming up to the end-of-year tax payment point in the middle of this month. But very few fund groups are doing well. Those dedicated to Korea is probably the sort of standout at the moment. Korea offers a reform story. And there is still some interest in the AI story. Now that some of those stocks have gotten beaten down, investors are looking to continue to build up their positions there. But from a fund flow perspective, it's very muted, very defensive, very few what you might call winners.
Okay. Good morning, Cameron, Hiral on this side. My question to you then is, with the outflow that we've seen in the month of March, what specific valuation reset, or maybe if we can call it the moves that we are seeing in terms of the currency as well, would be needed to actually see a trigger a reversal back into the Indian equity markets? Because that becomes key for Indian viewers as well.
Well, India has a number of headwinds, and it isn't just a question of valuations. I mean, the ones you obviously are on top of, which includes India's dependence on imported oil. But unfortunately for India, one of the things it tends to suffer from in situations like this is that in the emerging markets universe, it is one of the more liquid markets. And there's a lot of price information, good financial reporting. So when investors are looking to sell in the emerging markets universe, India is often a first port of call. So, I don't sort of see an obvious bounce back point at the moment. There are multiple actors in this particular crisis. Very little of what they're saying actually meshes at the moment. So I think, the sunlit uplands are still a few weeks away.
Ajay, just to round things off then, from the Indian perspective and for the Indian investor, you very aptly described how the situation is panning out right now on the geopolitical side. But yesterday in trade, we saw that any whiff of a ceasefire or dissipation in the violence gets bought into very dramatically. Yeah. So what is the kind of response that you think that the Indian investor should have?
I think stay on the sidelines. This is not over. There is a very big event coming post the state elections concluding on April 23rd. How will the petrol and diesel prices get allocated out? How much is the fiscal deficit going to increase? What will be the OMC losses that will be forced on them? And how much comes to the consumer? So that 15 rupees on petrol, 20 rupees on diesel has to be allocated out post April 23rd. The oil prices will not be down at least for 6 months to the older $65, $70 that we were buying oil at. The Brent December futures are still at $88 to $90. So clearly, this is not ending soon. Yesterday, all the Gulf airlines have given out this full refunds up to July. Up to July, they don't foresee the restoration of their flights. We don't have good news for investors to get in. I think staying out is the best option you can exercise right now.
Got it. Mr. Bagga, Mr. Brand, thank you so much for taking the time. Pleasure speaking with you this morning.
You're welcome.
All right, let's talk about what happened in trade yesterday. And you had Indian equities that took off a weak start to end high. And that possibility of a ceasefire was all it took for the bulls to run riot. You had the benchmark Nifty 50 that gained about 1.1%. The broader market's actually doing pretty well, gaining about 1.4% for the mid-cap index. Similar gains for the small-cap index as well. The Nifty 50 actually jumped as much as 425 points from the day's low. And it was quite the dramatic move for the financial pack as well as for Larsen & Toubro, which accounted for more than half of the points for the Nifty's gain. In fact, that rise would have been higher if not for one heavyweight that underperformed, and that was Reliance Industries. It ended lower by as much as 3.4% despite having gained over 1% from the day's low. The expectation of a flat EBITDA performance in the fourth quarter has actually weighed down on Reliance Industries. We had our colleague Soumit Sarkar lay that out for you in closing yesterday. HDFC Bank's gain, however, countered Reliance Industries' drag, and the Nifty Bank was among the top sectoral winners, up as much as 2%. Consumer durables, realty, defense were also gainers in trade yesterday, and the broader markets more or less kept pace, as I pointed out already. The market breadth shifting very sharply. If you can pull up that chart, actually, it would be very nice to showcase that, because we started off in a very wobbly fashion, but we ended with a pretty wide gap between the advances and the declines. No, that's not the chart that I'm talking about. I'm talking about the advance decline ratio. Okay, so we'll try and pull that up later.
Okay, so that's with regards to yesterday's session. But clearly, if you've seen the way markets ended yesterday, categorically it seemed to be a short covering rally. The expectation is that this kind of short covering could continue in today's session as well. But this is only to levels of 24,000 levels on no negative news. That was the caveat. Now, because of the back and forth that's happening between Iran and Trump, I don't know where this would actually lead. Now, more than earnings, the management commentary, crude price volatility, that this is what will actually dominate markets, and the volatility is expected to remain high as well. What is interesting is the emerging market ETFs. Now, traders have been pulling bets from emerging market ETFs for a fourth straight week. And this is the ex-China strategies that are still looking attractive as of now. If you talk about the shares MSCI Emerging Markets ex-China ETF that recorded its biggest monthly inflow in the month of March since 2024. In addition, if you talk about gold as well, that's going to be important because it's stepped into the new week on the back foot where the message from the market is becoming clearer that gold is trading less like a shield and more like a risk asset. And that's the strategy when it comes to gold as well. And with gold's correlation to US equities strengthening to almost 0.78 in the first quarter, its sensitivity to geopolitical shocks seems to be fading. And besides the geopolitics, you have to look at the US inflation prints. That could be another test for gold in the second half of the week. One more thing I want to mention about the JP Morgan CEO, that's Jamie Dimon, who's come out and given a note in his annual letter. And he cited risks in geopolitics, I beg your pardon, AI and private markets. In fact, he's identified geopolitical tensions as the primary risk facing his bank, namely the wars in Ukraine and Iran and their impacts on commodities and global markets, and said that the deeming war is the realm of uncertainty. In fact, the outcome of the current geopolitical events may very well be the defining factor in how the future of global economic order unfolds, is what he said. And then again, it may not. He's also cited a realignment of economic relations in the world that have been brought by the US trade policy. And US President Donald Trump has made tariffs a signature policy of his second term in office. And he's introduced higher duties on dozens of trade partners and import categories. So interesting comments coming in there. And Alex and Tamanna, his worry that the war will impact one of the largest banks is probably giving you some indications that do the financials have to worry now?
Yeah, and Jamie Dimon has been very clearly a supporter of the Trump administration so far. He's largely been in that corner, so clearly he's getting worried as well. I mean, in terms of the factors to look at, the implied is showing you the worry on the screen. I was speaking to someone yesterday who tracks markets very closely, is very much in the market ecosystem, and I was saying, okay, have worries eased? And they had a very interesting take on it. They said people are tired of selling and they're looking for an opportunity to buy. It's a hope trade that we saw yesterday. Will it continue today is difficult to say because Nifty is at a critical crossroad after 3 days of gains. The index has closed just a whisper away from the psychological 23,000 mark and is now entering a heavy resistance zone. That's 23,000 to 23,100, just as the Trump deadline for an Iran ceasefire looms. Now, while domestic buy-on dips and strong Q4 banking updates are providing some fuel, the global engine is sputtering. During this specific conflict, the Nifty has never risen for 4 consecutive days, and today is day 4. So we have to see if that streak is broken, and if it does, it would be the strongest technical signal yet that the worst of the correction is over. Experts warn that while the short-term trend is positive, you need a sustained move above 23,400 to 23,500 to confirm a structural bull reversal. Sustained 30-minute trade above 23,000 targets with 23,200 and 23,450 is required. Support levels have shifted higher to 22,600. A break below 22,540 would negate bullish momentum. Now on the Bank Nifty, a move towards 53,100 if sustained could catapult towards 54,000. Immediate hurdle 53,000 to 53,100, and crossing this opens a path to 53,600. Supports at 52,000 and 52,100 is now this firm floor for the week. But let me go across to Puneet for the F&O setup as well. Puneet, what are the indications you're seeing there?
Well, definitely the downtick in the implied open does indicate a start in the red, but a crucial expiry today, a weekly expiry for the Nifty 50. As we've seen almost a 400-point recovery yesterday from the lows, maybe short covering, maybe a little bit of indication. Today's trade also gives you that perspective for the Nifty 50, but for the Bank Nifty as well, a 1,500-point recovery we saw yesterday, but we're at a zone between 50 to 600, where there's a lack of support at this point of time. So you need to go up almost 500 to 800 points for the next meaningful support, meaning we could see some volatility, at least in the near term, for the banking index as the result season starts through for the banking names, early next week. In terms of, the performance, we've largely seen yet again, foreign investors sell 8,000 crores, adding to the $12 billion that they sold in the month of March. And DIs continue to plow in and support the markets at this point of time. But the index long has interestingly made its way just above 17% now for the foreign investors. So, and the put call ratio on the other hand is giving us an inverse reaction as of now, up to 1.26 now in favor of the puts for the foreign investors. So these two numbers go in conjecture right now at the opposite end of stream and the spectrum as well. In terms of the open interest distribution, we've now moved to 22,300 compared to 21,900 as the lower level that we were watching out for based on the open interest. So 23,000 continues to be a key level for the calls, while 22,500 has seen an increased interest for the puts as well. So we'll continue to monitor this very crucial level, at least in the near term for the puts. But in terms of the stocks, the open interest gainers, you've seen a massive buildup of shorts in terms of Force Motors, Vishal Mega Mart, as well as something like Hyundai. Hyundai is now down almost 28% from its highs of almost 2,800 rupees, trading sub 1,700 now, and continues to be a stock that's under pressure. In terms of the open interest losers, things are very quickly in terms of OI change with Blue Star, BTL and Astral continue to be in focus in terms of coverings of shorts as we saw in yesterday's trading session. So very important one today yet again, but continue to monitor this date, April 7th, because last year, April 7, 2025, we hit the low 22,100. So we've kind of formed an M curve in the last 1 year, but an important trading session nonetheless for the markets.
Yep, crucial one really, because, and you're right, Puneet, the Nifty expiry just adding that pressure. All right, let's talk about stocks. At least what we know, and one thing we saw from yesterday's session, that good business updates are getting rewarded, and the reverse is also true. There's some mixed outcomes as far as those Q4 business updates are concerned. And I'm starting with Lodha. Just come in actually, and it's not that exciting. They've achieved a quarterly pre-sales of 5,890 crores in Q4. That's 23% plus year on year. Pre-sales for the full year are up 16% at 20,530 crore. March saw select deferral of sales due to the Iran war, leading to pre-sales being slightly below guidance. I think this is important and might have a spillover impact on the entire real estate pack today, so it is clearly a thumbs down. This is 470 crore below guidance. Net debt was reduced by 800 crore to 5,370 crore during the quarter on the back of strong collections. Collections were up 18% year on year. Now, Nomura had estimated the pre-sales to be around 6,200 crores, and Investec had estimated a 6,852 crore figure. So Lodha is one to watch out for. I thought this JP Morgan note and aluminum stocks was interesting because while there are, I would say, target price drops and very few upgrades right now, this has both. So looking at Hindalco and Vedanta here, Hindalco has been upgraded to overweight from neutral, and the target price hiked to 1,125 rupees from 875 by JP Morgan. Vedanta has been upgraded to an overweight from a neutral, and a target price hiked to 850 from 680 rupees. They say that the West Asia conflict is likely to keep aluminum prices higher for longer.
In terms of Vedanta, the risk reward looks attractive. Energy inflation not a major concern. For Hindalco, worst likely behind for Novelis, and the India business tailwinds should ease debt concerns. Another piece of news, because we're talking about Vedanta, Newswire reports that Vedanta is among the companies, along with Hindustan Zinc, who will be bidding for rare earth magnets. And that scheme which the government has put forth. Tata Motors is the other one we're looking at. And, we talked about Tata Motors yesterday in the context of JLR, but their domestic passenger vehicle sales are actually pretty decent. The Q4 update shows that compact vehicle output grew 13% year-on-year, 32,297 units, while the UVC production surged 28% to 1.2 lakh units, and UV2 production grew 71% to 15,334 units. So that is one positive coming in. Very quickly, Fino Payment Bank had strong core numbers. In this quarter, at least the updates that they put in. Deposits have hit an all-time high of 2,950 crores. Disbursements are up 96% at 600 crores. And strong credit growth was seen, but digital transactions were impacted. They expect recovery in the coming quarters. They've made no major commentary on small finance bank transition. So those were some of the stocks on my radar this morning.
Interesting ones. I've got a couple of quarterly updates as well, and these are interesting ones. Shyam Metallic is up front, and across category, let's pull up that chart actually, which kind of showcases the production in each of their categories, and they've got a variety of categories that they do manufacture in. A lot of those categories are seeing an uptick in volumes as well as in realizations. Many of those, so that's what I've seen. So essentially sponge iron volume has disappointed, but the realization has risen. You have a stated guidance which is talking about a revenue and EBITDA uptick to as much as 2.5 times over the next 5 years. In fact, I actually pulled up a table for you, which we will showcase to you in some time. Gallant Ispat is the second stock on my list, and it's got an uptick in utilization, which stands at 91% in the fourth quarter. It is higher than the 86% that has been reported through FY26. The total Q4 steel production has reached 2.4 lakh tons. That's up as much as 9%, and the total Q4 steel sales have reached 2.3 lakh tons, which is also up as much as 9%. Pellets, sponge iron production have risen by 59% and 38% respectively. Billets production has also risen quite substantially to as much as 30% year-on-year growth. By the way, the previous stock, which is Shyam Metallics, the increase in production and in realizations I've looked at on a sequential basis, so it's quite considerable when you talk about the kind of increase that they have seen. The last stock on my list is in fact Globus Spirits, and it's launched a new tequila brand. It's called Terai Tequila, and the launch marks the company's entry into the premium tequila market. It's going to be priced at 3,600 to 5,815 rupees per bottle, depending on the state taxes. So those are the three stocks on my list.
Okay, I think it's more all to do with either metals or consumption, and a few BFSI ones which are coming in. But on my list, I have a Godrej Consumer Products. Now, the broad-based momentum has continued in terms of the India business. The domestic business is expected to deliver double-digit revenue growth and high single-digit volume growth is what they've indicated. Excluding the soap segment, volumes are expected to grow in double digits. If you have to talk about the standalone EBITDA margins, they are expected to remain in the normative range is what the management has said. Talking about Indonesia, they are witnessing stability with competitive intensity which has been increasing, and mid-single digit range is what they are seeing in terms of volume growth. So there you could see some bit of concerns coming in. Consolidated performance, they're expecting close to double-digit revenue growth and EBITDA to grow in line with the revenues. And in terms of commodity inflation, they're anticipating inflationary pressures to come in the first half of FY27 on the back of the war. With Brent crude at $100 to $110 per barrel and palm oil prices at 4,500 to 4,800, the cost headwinds are estimated at around 6 to 9%. And they're saying that this would be offset majorly on the back of pricing, cost savings, and operating leverage that they would be looking at. Secondly, you have Jubilant Foodworks as well, but they've said that India's The like-for-like growth is 0.2%, which is below estimates, so that is a negative. And that's mainly been due to the constrained LPG supply. This also implies an underlying same-store sales growth decline of approximately 1.5 to 2%. So this is going to be a negative point, due to which you could see a negative reaction coming in on this counter. Overall, if you talk about FY26 revenue growth, around 13% is what they're watching out for, again below estimates. And the store additions in FY26 remained broadly in line with expectations. Domino's India like-for-like growth stood at 0.2%. Again, it's the impact coming in on the back of LPG crisis. And the Turkey operations delivered a growth of around 9%, and this is relatively stronger performance in international markets. Moving on, if you see in terms of the last one, I have Aurobindo Pharma, where one of their arms has reported positive phase 3 results for a biosimilar product, which is omalizumab. They've said that the study has met all primary endpoints in patients with chronic spontaneous urticaria receiving the 300 mg dose, and they're planning to use results to support their regulatory submissions, in Europe and US. So this is going to be a positive for Aurobindo Pharma as well.
I believe we have to slip into a very quick break, but on the other side, we'll talk about the key trading strategies that you should keep on your radar, and we'll get you a fundamental analyst or rather analysis on all of the stocks that we've talked about so far.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Welcome back. You're watching India Market Open. You'll see the implied not looking great this morning because there was an expectation that some shape or form of a cessation or an end to the Iran war would be clarified or communicated last evening in US President Trump's address. That's not happened. What will probably add to the woes of the market is this update which has come up from SkyMet. Now, in the light of everything going on, this monsoon update becomes pretty crucial as well. And here's what SkyMet is saying. It's saying it's seeing September rainfall at 89% of long period average, and August rainfall at 92% of long period average, July rainfall at 95%, and June at 101. So you're seeing actually a weaker monsoon initially than expected. Normal rainfall in the South Peninsular area and in Southern Peninsular India actually, and below normal rainfall in Northwest and Central India. Above normal rainfall in East and Northeast India. El Nino is expected to strengthen, impacting the second half of the monsoon. So that's, I think, going to be a factor which the markets will also keep in mind while trade today. Parag Thakkar, Kushpora, very good morning to you. Did you all watch the Trump show very closely last evening? What has come out of it?
I think very important days tonight, right? So tomorrow morning for us when he
6:30 a.m.
Yeah, when he's
No, but actually it'll be about 10:30 a.m. if I'm taking those deadlines seriously, because it was when the deadline ends at 8 p.m. and then within 4 hours is when they're saying that they and it's just, I don't know, it's worrying that we talk about the possible destruction of so much infrastructure and lives so casually now, but we live in the times of war.
It's very sad. But let's see now. It's a final, and so many people have lost their lives. Innocent. So it's very sad.
What would you do in the markets today?
So basically today, see, as we are entering into that final leg, definitely, and yesterday there was a good rally, I will keep calm today in the market. I will not do a rush in to do anything today. But from my side, the inputs are that we have spoken a lot about BFSI. So I will not speak too much about a BFSI now, but metals, so steel, I think should report very good numbers in Q4. Steel prices have gone up significantly. So JSW Steel, Tata Steel, all metal stocks. And cement prices have started going up in a good way. So I would say Ultratech, Kremco kind of names, where you will see that. So steel and cement, basically today is a commodity day in my view. And of course, because going into the event, we have nicely rallied. So I would stay calm today.
Did you see some of the smaller inputs? I'm talking about Shyam Metallics, Gallant Ispat. These are companies that posted their quarterly updates, and these are manufacturers of long products, manufacture of pig iron, sponge iron, all of these things as well. In the case of Gallant, you've seen, and actually Shyam Metallics, you've seen a pretty sharp improvement in...
because their stainless steel capacity is getting ramped up, and they are still very small player in stainless steel. Stainless steel, of course, the biggest is Jindal Stainless, which has 66% market share. But they had a shutdown in March quarter, but we have seen good amount of promoter buying there, and stainless steel prices have also gone up by 12-13% last 1 month. So I would say that, so basically you should keep all steel stocks, aluminium also, and for that matter, cement also.
But when you're talking about that, yesterday you had NMDC which went ahead and increased iron ore prices, which somewhere becomes negative for these steel companies.
But the steel prices have gone up so much that I am not worried too much.
Okay, it makes up for the...
Yeah.
More demand will come in at some point.
So my number suggests me that JSW Steel can easily do 9,000 crore EBITDA in this quarter. Tata Steel can do 9,000 crore EBITDA in this quarter.
Watch out for metals. Do you think there'll be some sheen on the Nifty at some point? Is there scope for short covering, or are we looking very soft today, Kush?
So we've already had that for the last 3 sessions, but just a couple of points picking up from what you've mentioned. I think आपने कहीं बीच में mention किया है with the word expectations. I'm just going to go back to ancient Indian wisdom, right? Expectations are cause of sorrow, and with this, whatever is happening in the world.
You know, when a pre-market show starts talking philosophy, it tells you about the state of the world.
That, and the second one is, I think you mentioned about speaking to a market participant who said कि भाई बेच के थक गए, buying करना है. In all likelihood, that gentleman or that lady, उनकी दुकान यहाँ पे चल रही होगी market से. If you speak to anyone for whom market is a side activity or a second income activity or an investing activity, they've reached point of indifference. अब भाई इतना हो गया है कि अब जब तक पोर्टफोलियो पूरा ग्रीन में नहीं दिखता, अब तो जो करना है आपको कर लो. Because if you're down 15%, another 2-3% for such a long time really will not matter. So everyone's gotten to that phase now where it's exhaustion, it's indifference. I'm just keeping it very light, but the fact is that people have reached that indifference वाला stage कि ठीक है, अब आके बोलोगे और खराब होगा तो और कितना ही हो जाएगा वाला. So, and that is why perhaps, that is also from a psychological standpoint, investing standpoint, the stage of capitulation, not from just prices levels, but from a psychological level also.
Are you seeing volumes shrink to that extent? If what you're saying is the case, then you would have seen market volumes really shrink, in any real fashion. That's not really happening because your DI buying is still coming in.
Yeah, excellent point. That is why the volumes are not shrinking. DIIs के पास पैसा आ रहा है, उनको तो deploy करना ही है, and FIIs for their own reasons उनको तो एग्जिट करना ही है. इसके लिए आपको इंस्टीट्यूशनल एक्टिविटी की वजह से वॉल्यूम उतना श्रिंक होता हुआ नहीं मिल रहा है. व्हेन एलेक्स टेल्स मी कि अब जाके एसआईपी फ्लोज कम हुए हैं, that's when you will start see any kind of meaningful dip in the volumes. Up until then, the institutional activity will keep those volumes afloat.
Yeah,
at least.
Hopefully that will not happen because these are the best times in a long-term period to build up that capital. What about your picks for the day?
Sure. So I'm going with 2 longs and 1 short call. Nalco and Laurus Labs on the long side. ICICI Lombard, which has not really been doing well. Yesterday's recovery also was on very, very, very thin volume. So that continues as a short call. Just as far as levels go, for Nalco 413, 418, these are your targets. 403 is where you keep that stop loss. Laurus Labs 1080, 1098 are your targets. 1030 is your stop loss. And for ICICI Lombard, 1700, 1680. These are for April futures. These are your targets on the short side. 1740 is where you keep that stop loss.
All right, so interesting stocks, but let's take a look at the watch list this morning and quite a few to talk about. We've spoken about a few already, but let's round up the list. ONGC, Oil India, you have Brent that remains well above $100 to the barrel, and that's positive for upstream companies. Keep an eye on that. Stuffcraft as well as TTK Prestige, and this is because the government has relaxed energy efficiency norms for these induction players. Watch out for those as well. They've been in focus for the last several weeks. GMDC, NMDC, another SOP coming through for the mining of deep-seated critical minerals, and that is a positive there. Aurobindo Pharma, we've spoken about already, positive results for their biosimilar. We've got IRFC, there's a 1,000 crore financing agreement with Mahagenco that has come through. Titagarh Rail has gotten a nod for a brownfield expansion. PDS has gotten into a 450 crore pact with a US retailer. Deep Industry has got a small order, 59 crores or thereabouts, and that's from ONGC. We've got Brigade Hotel Ventures, which has signed an MOU with Hyatt. Acme, which has gotten a battery energy storage system project commissioned, and Kolte Patil, as well as Pace Digitech on the negative side. Kolte Patil has gotten a 58 crore tax demand, and Pace Digitech, a share lock-in expiry is taking place. We've not seen too much of a reaction in quite a few of these stocks where lock-in is expiring, but keep an eye on this one if it reacts negatively. But from that entire list, I'm wondering, Kush, whether anything stood out to you on the charts.
So, for now, I'll avoid the railway names, by the way. There has been an uptick in the recent past, and hence there have been a few queries here or there. But the primary trend remains negative for a while now, so that's something that I'll avoid. But what looks interesting, two of them. PDS has had a good recovery, volumes also very healthy. And the other one is Deep Industries. It's rallied quite a bit in the last month or so, 200-day moving average resistance acting up plus the market volatility. But other than that, if you see, this has had a good recovery. I think once it crosses the 450, 455 zone, where it's hit that resistance band a couple of times, beyond that, I think you could see the stock move higher to about 480 levels also.
Okay, so that's with regards to where Deep Industries goes. Apart from this, a couple of FMCG business updates that have come in that we've been talking about. Godrej Consumer, you have Jubilant Foodworks also, which is given out their update. Parag bhai, how are you looking at a Godrej Consumer? Because overall seems to be pretty strong.
Yeah,
it's only Indonesia which is a slight pain point right now.
That has been continuing, and they have said that it is bottoming out. So it is also not a problem. The only problem is that with crude oil prices, a lot of this input like palm oil prices, they also go up. So they have guided for a FY27 first half to be muted in terms of margins. That is the only negative which I saw in the. Otherwise, on the domestic side, the high single-digit volume growth was a surprise. Basically, everybody was penciling in 6% volume growth for them. But I think they are going to do high single digit, which is very positive. So this quarter company has done well. But in the business update itself, they have said that H1 FY27 will have margin pressures due to palm oil prices going up. So, but the valuations have corrected meaningfully now. It is trading at 35 times.
So would you be a buyer currently in spite of the pressure that they're talking about in the first half?
But Marico's business update was far better, and the outlook is also far better. They are saying double-digit EBITDA growth can sustain. Their value-added hair oil portfolio is doing very well. Bangladesh is doing very well for them. And the new products which they have acquired, the stuck-in acquisitions which they have done, they will become very big. So Marico is, in my view, a structural long-term buy in FMCG space.
Okay, so interesting one in terms of Marico. Kush, quick view. If you have to look at Marico, Dabur, you have, Godrej Consumers, anything that looks good on the charts right now?
Yeah, so largely a lot of these names have seen, a short covering bounce more than anything else. It's been a short covering bounce in a lot of these names. The only one that actually does have a slightly different structure, as Parag bhai has rightly pointed out, is Marico, where it's not seen the kind of gashes, not seen the kind of cuts, and the primary trend still remains positive. 200-day moving average has been respected multiple times. So 730, 735, that zone being a stop loss, you could still consider a positional long trade on Marico. However, the likes of HUL or Patanjali, which was a short call yesterday, some of these names have only just seen a short covering bounce. For it to turn into a meaningful uptrend, I think there's still some time.
Okay. All right. So let's talk about some more updates that have come through. In fact, there's a BOFA note on banks, and what they've done is that they've maintained their buy on ICICI Bank and cut their target price to 1,500 from 1750. That's a pretty big cut. HDFC Bank, they've maintained their buy call, but they've also cut their target price here to 950 from 1,175. They're saying that the price correction is overdone and value is emerging in large banks. They're saying that they have a buy on HDFC as well as ICICI on the back of strong fundamentals and attractive valuations at this point. Lower downside risk exists at this point, and this is amidst growth evolving and a macro setup that is looking positive. The NIM upside from potential rate hikes is also something to pencil in. Healthy EPS trajectory is supported by loan growth normalization, and the NIM uplift and benign credit costs are positive. Valuations are below the long-term average. This is music to Parag Bhai's ears.
No, so we actually pulled this up because the fact is that Parag Bhai, you were ahead of the curve in this. My only question is, and you know, not in the context of HDFC specifically, it never had a performance issue, but it currently does have a perception issue.
So basically, the perception issue lies in the mind of people, right? So with the way I have worked there, I know them, I have understood the bank, their DNA, they are very prudent lenders, they have a good deposit franchise, and what it requires for a good bank is these two main things, right? You should have OPEX under control, you should have a very good asset quality, you should have a very good deposit franchise, and you should have a very prudent lending. All four boxes are ticked. And valuations, as Mufa is saying, you know, 1.4 times FY28, 11 PE, same, and of course ICICI Bank is without all these issues, and it is also trading at 10 PE on FY28. And
so if you had a choice between the two,
I have both 11 to 12% in my portfolio.
Okay.
So,
but incrementally, if you have a choice,
11 to 12% between both banks.
No, between both
each.
Individually.
So 22% of your portfolio is ICICI and HDFC Bank.
Yes.
Wow.
So the other thing is that I have to wish that this situation of war gets ended very soon.
Don't worry, a lot of people are wishing with you for everyone.
Because ultimately, see, banks are leverage proxy to economy. So I am also aware of the fact that if this situation persists along, it's a problem.
No, but there is the conflicting views there, right? It's also being seen as a fail-safe. Relatively,
because the valuations have become so attractive, and not everybody is going to say
it's a domestic. It's also a domestic-facing business, right? So not all of its clientele is SMEs, MSMEs who will be impacted by exports.
And if the system at large get affected, then government will have to also come out with something which they came out in COVID, that they'll guarantee some loans of SME and MSMEs.
So downside protection and potential for improvement.
If this war situation ends, suppose, and if the oil starts falling from say 110 levels to 100 or below, then I think these banks are best placed. 15 to 18% EPS growth you are getting at 10, 11 PE.
Okay. All right. Let's go across to Soumit Sarkar, who's joining us with all that's heard on the street. Mood seems to have changed this morning, Soumit.
Well, mood as well as some technical indicators also working against, given the fact that 23,000, 20,100 is seen as a strong resistance. So some pullback is what we are seeing around those levels. But do remember that yesterday also we started on a negative note, but we ended up with around 200 to 200 plus points on trade. So it would be interesting to see how markets react in trade today as well. Few stocks that dealers have highlighted: Jindal Steel. Firstly, there are some sell flows on the hedge fund desk. Dealers indicate that weak Q4 guidance is what is coming in, and apart from that, the iron ore price hike is also something that will be negative for Jindal Steel. For Eternal, there are buy flows on the large HNI desk, and dealers are indicating that for Blinkit, the EBITDA number could be much better compared to what the street is estimating, and also compared to what the company reported in the previous quarter. For Delivery, there are buy flows on the DI desk. Delivery volumes were also on the higher side. For Aurobindo Pharma, there are buy flows on the PMS desk. Amoxicillin prices have increased to around $32 to $35 per kg, and this improves the realization for Aurobindo Pharma by around 17% and supports its Pen-G plant. So that's quite beneficial coming in for Aurobindo Pharma. And then there is Bosch. There are buy flows on the large HNI desk. The buzz on the street or the rumors suggest that there could be consolidation of Bosch India's subsidiary. So watch out for this. The company will be holding a board meet very soon. And lastly, we did indicate about Reliance Industries yesterday that the stock was down largely because of expectations of weak Q4 numbers. In fact, we also did highlight that the EBITDA number could be weakish on a Q-on-Q basis. And today, ICICI Securities and Nomura have come out with the preview notes for oil and gas sector, where for Reliance Industries, ICICI Securities is seeing a 4% EBITDA decline on a sequential basis, while Nomura is seeing a decline of nearly 3% on a sequential basis.
Okay, so it's kind of a khabar confirmed, absolutely. Thanks so much for that, Soumit. You saw that decline in trade yesterday for Reliance Industries, 4.5% at one point. It ended down about 3.4% or thereabouts, but off the low point of the day. I do want to ask about a couple though. You have Jindal Steel, which Soumit has pointed out, but he's saying that the buzz is for sell flows on hedge fund desk, which only means that there is an opportunity if the stock goes lower to buy. And two is Aurobindo Pharma, the amoxicillin update where the price increases as much as $32 to $35 per kg. Do you see that as positive?
Yeah, that's a very big positive for Aurobindo, no doubt about it. Because earlier they were selling at $17. So now that price has gone up significantly, and government has also intervened and put a duty. So I think it's a big positive for them. They have invested big behind this plant, and so now this plant will actually give them profits.
And valuations wise, do you see
valuation wise, Aurobindo has been always comfortable. Okay. And there is a buyback also going on. The buyback announced yesterday.
Are you comfortable with Oro Pharma on the charts?
Oh, absolutely. I think it was yesterday also that we mentioned Oro has its share of volatility, but if you see the primary trend is very much intact. And like I did yesterday, I'll still go ahead and add a couple more names. Strides and Granules, a couple of stocks that we've discussed in this space, in the recent past. So they also continue to do well. Oro, if you do have a position, it's a good idea to have a stop loss around the 1310, 1305 zone. That's a support zone. But yes, primary trend intact. If you have, you should continue to hold.
I just want to look at some of the consumption plays that have come in. Jubilant, disappointing updates, I would say. Godrej Consumer, as usual, the Godrej Consumer, I've seen this pattern. Q4 updates in the business update always looks very positive, results are good, but then it kind of peters out. It doesn't keep up the momentum. What did you make of both of these?
So Godrej Consumer, as we discussed, this quarter looks good. Because high single-digit volume growth was not expected from India business. So this quarter looks good. And X of soap, actually, it is a double-digit growth. Okay. The only thing is next year, first half will be, the margin will be under pressure because of the input prices.
Costs.
Because palm oil prices actually follow crude oil prices. So palm oil price has gone up. So that will be a problem for them. But the valuations have also now taken a big knock. So 35 times FY28, which is below historical average.
But the problem is with the valuations thesis, valuations of everything has taken a knock. So it's the entire tide has come down.
That I agree. So but it's a good quality company, which has now
Godrej versus Dabur?
So I would say that in the FMCG pack, actually, I like Marico the most. That's what I have said. That Marico is my favorite in FMCG from structural point of view, which I would like to keep and hold on for next 2-3 years.
Kush, Godrej, Jubilant, Dabur. So let's add Marico also because it's
even technically, structurally, Marico stands out because this one has an upward sloping channel, upward sloping trend line support. So a lot of these things going for it for sure. Whatever the fundamental views are, definitely reflect in the price movement as well. Jubilant, by the way, is like a short call. Portfolio hedge karna hai, to jaise upar aate aap short karke rakho. That's the kind of trend it's had for the last year and a half, 18 months or so, right? So I wouldn't really be constructive. Just that the long-term averages of 425, 430, they're being tested. So maybe you could see some consolidation, but nothing to write home about. Godrej Consumer, Dabur, a lot of these names have seen a short covering bounce at best. So really wouldn't turn very constructive from a momentum perspective on some of these names.
Okay, so that's the FMCG play that one should be looking at. In fact, moving on, your Indian Railway is actually aggressively pushing for rollout in terms of where Kavach 4.0 goes. And this is with regards to indigenous automatic train protection, and it's designed to achieve zero accidents. A couple of beneficiaries that do come out on the back of the fresh developments that are happening on this front. My colleague Sharad Dubey joins in. Sharad, good morning. This is going to be positive for a couple of companies when you talk about Kavach 4.0. What is the announcement and who could be the beneficiaries? Because some of them are already sitting on a very large order book specifically for Kavach 4.0.
Right. Good morning, Hira. You're right. The order book is significant for at least the small cap players, and interestingly, an incremental development has come on Kavach 4.0, where the Indian Railways has approved almost 1,365 crore rupees worth of Kavach development, and also there will be a signaling modernization project as well across multiple zones. There will be installation of Kavach 4.0 in the southern railway locomotives. Roughly around 209 crore rupees is allocated for that, and for the optical fiber communication also upgradation will happen almost 3,200 kilometers in the northern railways, and the fiber OFC network would be there. But the companies which would be in focus, will be a positive beneficiary, this includes KEC International, but HBL Engineering and Kernex Microsystem is something you should be watching out, where there will be more reaction in the stocks because the order book is very lumpy. Kernex Microsystems order book is 2,000 crore plus. It's only on the Kavach I'm talking about, and HBL Engineering, that's roughly 1,300 crore rupees. They make a lot of parts around the rails in this Kavach segment, where they are the approved vendors also, and even Railtel Corp and Quadrant Future Tech, these are the stocks as well which are having tie-ups and JVs, and roughly having, you could say, between 260 to 1,000 crore of orders coming in. Concord Control System and KEC International also have it, but it's on the lower side, of course. But keep an eye on Kernex Systems, Microsystems and HBL Engineering. There will be more action in these two counters.
Thank you, Sharad, for that. I mean, all of these stocks are the ones which actually move somewhere in terms of any of these order wins. Kush, on the charts as well, are you seeing any strength when you talk about any of these railway companies or the ones who will benefit out of Kavach? You're talking about a Railtel, a Concord, anything that looks strong?
I'm going to have to agree with Sharad, at least on one name, which is Kernex Microsystems. Now, the reason for that is that if you see the last about year and a half, 18 months again, in that kind of time frame, this stock has not taken as big a knock as the other ones mentioned. KEC International, HBL, at one point in time, these stocks practically halved from their high points. Kernex, on the other hand, has seen consolidation. So while the momentum on the way up hasn't really been as significant, the fact that it's holding ground and consolidating is a good sign, especially in a market like this and over a period of 12 to 18 months. So that is something that I would focus on. And this is again not a momentum trade, although these stocks could have an uptick basis this news. But I would suggest more of a positional bet on these names. On the downside, support for Kernex comes in relatively deep at about 880, 890, but if it's a positional bet and you buy that, that should be a stop loss.
In yesterday's up move, where you saw a bounce from the low point, and I'm talking about only the frontline stocks, you saw Larsen & Toubro that ended up with gains of 3.2%, right? So would you say that there's a structural shift, a bottom has been found, and you can potentially venture out and buy at this moment?
Purely incidental, that I think just before market open, Tamanna mentioned that which is one war-proof stock that you would buy. Parag Bhai had Bharti Airtel. I said I wouldn't really call it war-proof, but something that has been affected by the war. So Larsen & Toubro, made that cut. The reason being that whether the bottom's being formed or not, only we only come to know in hindsight, the risk-reward ratio seemed extremely favorable, and not just yesterday. If you see the past 15 sessions, the stock has been attempting those up moves, every now and then along with the market. So yes, there was an attempt of buying at lower levels, reflected in the price. Glad to see that it transpired that way yesterday. I still maintain that from a risk-reward perspective, Larsen & Toubro still, despite the kind of move that it's had yesterday, still a good buy. If you don't want to put a very deep stop loss of recent lows, still the levels are around 3,500, 3,530. These are good support zones, and from there on also you'll have a fairly decent upside. So yes, I would bet on Larsen & Toubro, but from a positional standpoint, 3 to 6 months kind of a perspective, not just an immediate one.
For how much upside?
See, look, the immediate resistance comes in at about 38.25, which is the 200-day moving average. But once that is taken out, you're looking at the 39.50 as well, and then 4100. So you've got fair degree of risk-reward ratio on this one, 200 points of downside and about 400 points or more of upside.
Okay, your implied deepening in the red as we're getting into the pre-open session. But sometimes the implied can be more of a directional guide than an actual guide. So we'll see really what happens. In terms of the global news flow, if that's the biggest driver, it's definitely not positive this morning. On the other hand, FMCG will be in focus as some Q4 business updates have come in. Mahima actually joining in to, not just FMCG, the whole consumption pack. Mahima joining in to give us a quick run through of some of those key updates. Good morning, Mahima.
Good morning, Tamanna. So I'll, start with PC Jewellers. Well,
overall in this quarter, they have shown a growth of around 32% in their revenue, which is lower as compared to what they've done in the past 3 quarters. If we take a look at Q1, the growth was at 80%, Q2 at 63%, and Q3 at almost 36%. So that growth has been declining, but this is also on the back of a very high base that they were sitting on. Plus, if we take a look at the stock performance, also the stock has nearly halved in the last 1 year and has now almost become a penny stock at that 8 rupee and has been hovering in that range. In terms of where the update go, FY26 revenue has shown a growth of around 49%. They've reduced their bank debt by 23% this quarter, and the subsidiary that they've set up is going to, soon start its mining in Chad as well. The next one is coming in on Kalyan Jewellers, where strong growth definitely coming in for this one, both domestically as well as internationally. Consolidated revenue growth of 64%, India revenue growth at 65%. Same-store sales growth has been very strong for them at that 45% mark. International business, despite of the war, has seen a 45% growth. Middle East revenue also seen a growth of around 39%. Candor has recorded a growth of 360% this quarter on the back of festive season. They're saying that ongoing war has kind of, hampered their supply chain disruption. In terms of store launch, they've launched 28 stores in India and 14 Candor showrooms as well. FY26 overall consolidated revenue growth at 42%. India operation revenue growth at 43%. But this is largely led by the kind of prices that we've seen in terms of gold price hikes go. So this is the overall view of how these jewelry companies have done this quarter.
Okay, thank you for that, Mahima. Parag Thakkar, Kush Bora, let's talk about jewelry companies. Kalyan Jewellers, Senco, PC,
Titan.
And Titan.
Yeah, so Titan is the favorite of all. And generally speaking, I don't see any other jewelry company apart from Titan.
But value upside be also you have to see, no? Where is the value upside?
But I have been seeing Senco Gold's business updates and interviews. It seems like a company to watch out for, definitely. But of course, within overall, so from 25 years I have been seeing markets. But I think Titan has remained Titan in terms of jewelry business. It is.
But Parag bhai,
gold
Titan,
is gold.
Titan, okay, gold is gold, but Titan at 75 times plus PE
so I'm
versus a Senco Gold at 11 times PE trailing.
So basically what I'm trying to say is Titan is a company which I track. Titan is not, I'm not owning Titan at this point, unfortunately.
But my question is, with all of these jewelers, this is an upside which is on the back of gold prices, right? It's not volume led, it's value led right now. The moment gold comes off, what happens then is the question.
So, yeah, correct, absolutely. That's why I'm not buying at all. But and I don't understand why world is so much crazy after jewelry. So I don't relate to it.
Is the world crazy or the women crazy?
Hey.
I know, but I don't know. It's about valuations of those companies more than anything else. And as a store of wealth, I would say that all the jewelry fans have been proven to be more astute investors than anyone else.
That is 100%.
So, okay, Kush, on the charts, any of these companies you like?
Yeah, you mentioned 4 companies, Senco, Kalyan, PC, Titan, right? I'll add one more, but before that, the avoid, hold, Titan, add, Thangamile. I have been maintaining for the longest time, यही एक company है जो आपको add करनी चाहिए, especially on declines. The only problem is decline आता ही नहीं है. If you see monthly or weekly setups for this one, just goes into a long consolidation phase, long time, big spurt, and then the base is shifted higher. That's happened for the last 4 to 5 years. Something similar is happening right now. So if you want to catch it before that big spurt, whenever it comes, difficult to call that, right? But right now it is in that consolidation phase. This is a good stock that you can add positional stop at lower levels, close to the 33.50 mark.
Okay, pre-open rates are in. Pull them up actually as we're speaking. The Nifty 50 is not trading with gashes as much as we were initially anticipating, just about 1/3% for the Nifty 50, but those rates will settle. In fact, let's bring you a host of newsmakers. We've been speaking about these, but let's pull the charts up while we're speaking. Varsha is joining in to tell you about some of the stocks that you should keep on your radar. Varsha?
Yeah, good morning. Well,
Morning.
let me start with the Titagarh rail system, wherein ARM has received approval for brownfield expansion in West Bengal, and the company will receive 129 crore as subsidy under government scheme. Then you have PDS, wherein they've entered into SaaS contract with the major US-based retailer, and the deal is expected to drive almost 450 crores of volumes. Then you have Acme Solar Holdings, wherein they've commissioned the 5th phase of battery energy project in Rajasthan. Brigade Hotel Ventures will be in focus as they've signed a management agreement with Hyatt, which follows its previous deal for Grand Hyatt Chennai ECR. You have Storecraft and TTK Prestige, which will be in focus. This is on the back of government relaxing energy efficient norms for 6 months, and the relaxation is till Jan 1 for induction hobs. Then you have GMDC and NMDC, which will be in focus as government has amended mining concession rules, and they have eased norms for mining of deep-seated critical minerals. And lastly, Pace Digitech will be in focus as 13% of outstanding shares will see lock-in expiry as of today.
Okay. Pre-open rates, let's just take a look at what's happening there. Jubilant clearly hurting because of those updates coming in, which have not been too exciting. So that's about 6% down. The fact that even the IPL and the World Cup and all of that has not lifted their numbers is something that is being seen as a bit of a negative. I want to look at Credit Access Grameen. The updates weren't half bad, and that is reflecting maybe in what you're seeing with the stock. Same with Kalyan Jewellers this morning. So that's another one to look at. Ventive Hospitality, a brokerage upgrade over there, and actually we'll get to that in just a second. So that's showing well. Shyam Metallics, also decent updates. And so business updates is one of the themes that you'll probably see this morning. Brigade Enterprises has announced some tie-ups, I think, with Hyatt Group. So maybe that's why you're seeing that stock looking interesting. But let me go across to Sharad Dubey. He's there with our big brokerage call of the morning, and Ventive Hospitality is in focus. It's already popping in the pre-open session, Sharad.
Well, yes, good morning, Tamanna. The technicals are looking good for the stock, and even HSBC has turned bullish on the counter. They have upgraded it to buy from hold rating, and the target price that has been cut from 856 to 685 rupees per share. Now they have stated that the valuations are favorable at the bottom levels, and a strong January-February has been offset by March softness coming in from the corporate travel and MICE disruption. MICE is, of course, your corporate travel and events, which we talk about. The average room rents are likely to remain stable, and the diesel shortage is a key risk that could close the Malay operations, which is there in Maldives, and they're expecting a week of closure that could wipe off at almost 1% of FY27 profit. So that means no major disruption is expected to come in for the counter, and HSBC is bullish on this.
Okay, so that's with regards to where Ventive Hospitality goes, 5.5% up move coming in there. A quick view we'll take from Parag Bhai on this one, but before that, Kunal Shah, Senior Technical and Derivative Analyst at Mirae Asset Sharekhan, joins in as well. Kunal, good morning and welcome to the show. You know, with the way markets are panning out right now, yesterday we did see that little bit of short covering that did come in. Are you seeing a continuity of that, you know, even if you have to look at the second half of the trading session with regards to the setup? Because right now, your implied open is still indicating a gap down. So what should that strategy look like in terms of Nifty and Bank Nifty?
Good morning to everyone. So I think definitely yesterday we saw some momentum from the lower levels, but for Nifty what I'll be tracking is 23,060. So the recent fall what we had, we are still trading in that channel, downward channel, and we have not broken on the upside. So there might be some volatility kicking in. But within this, I think 2360 is what one should look out for. Once we get a close above it, then probably a confirmation will come in for the pullback rally towards 23,850 on the upside. Now, yesterday, even Reliance being 4% down, we were up. So again, clearly on the lower levels, we are seeing buying interest, at least on the index perspective. Today being a Nifty expiry, it has to be a little bit on the volatility side. Yesterday 22,800, 22,600. These are two critical supports for the markets on the downside. Within this range, I will be again on a buy on dip mode, or dips to be utilized as a buying opportunity where your risk to reward ratio is favorable. My first hurdle is 23,060 on the upside. And once that is taken out, then probably we'll see a good rally on the upside toward 23,500, 800 on the upside. So for me, Nifty continues to remain as a buy on dip mode. 22,600 is a very important support zone for the markets. Yesterday also we saw put writing at the lower levels. That needs to be held in today's trading session. The PCR was also above the level of 1, that is 1.3, 1.4 is where it was trading. So clearly put writers were heavy on the call writers. That needs to continue in today's trading session to have the follow-up move on the upside. Now for the Bank Nifty as well, I think Bank Nifty has again also witnessed some smart recovery, but again we have the RBI policy coming up this week. So you might see some consolidation at the higher levels even for the Bank Nifty index. But overall, here also my view will be buy on dips. Dips should be utilized as a buying opportunity rather than going aggressively on the long side. Again, Bank Nifty has also been trading in this downward channel. We have not been able to break on the upside. So again, for the level for the Bank Nifty on the upside, what I'll be watching out is 53,200. That once that is taken out, that will give you a confirmation for the higher levels of 54,300, 54,500 on the upside for the Bank Nifty index. So again, both the indices, Nifty and Bank Nifty, continues to be in the buy mode, but again, not aggressively at the current market price. Dips to be utilized as a buying opportunity.
Any picks, Kunal, that you're finding interesting? And very good morning to you, Tamanna here.
Good morning, Tamanna. I think a couple of calls again on the buy side is what I'll be focusing. Relative strength again in these markets, that is where one should focus on. So first on the cash front, I'll look at for Ether Energy. I think a good breakout what we had got into the stock. Now we have tested the breakout again, the support, and we have formed a good reversal from the current levels. And here the upside is huge even from the current levels. And in a weak market, this has been one of the outperforming stock. So we continue this outperform on the upside. So Ether Energy for me is a buy with a stop loss of 745, looking out for targets of at least 830 to 870 on the upside. So Ether Energy would be by pick from the buy side. The second stock again is from the FNO space, and the setup looks good. That is MCX. Yesterday we got a clean breakout into the stock volume base, and I think one last leg is left on the upside, which will surpass the all-time high. So MCX is what I'm expecting to continue the buying momentum. The stop loss on the downside for the stock will be at 2,400, and on the upside, one can at least expect targets of 2,700 to 2,800 on the upside.
Okay. Since you talked about an Ether, I want to look at what an Ola is doing. Ola had seen quite an interesting breakout because of the kind of news coming in that they suddenly have order flows, etc. Not really holding out today. Now that we have the pre-open session in place, let's get a technical view from you as well, Kosh. And clearly the pre-open session not looking as scary as the implied. 4 minutes to go. What is the Nifty view? Is it also a buy call like Kunal?
There's every possibility that the way we've rebounded from the lows of the day in the last two sessions, that could well pan out. And today's pullback also is not really very surprising. We've had 3 sessions of gains in times like these, PCR close to 1.2. I think even Kunal mentioned that the downward sloping channel resistance at 2300, that was hit but not surpassed. So until that happens, I think there could be some range play that could come about in the Nifty. So 22,700, 650, that's the support zone. On the upside, 23,000 to be broken. However, I take heart from a couple of other data points, which is yesterday we spoke of how the index futures long position has gone to 17%, up from 13-14. Now it's gone up to 18. Also, another interesting point is that the stock futures, they have seen it's 4 consecutive days of buying by FIIs, but I'm not including the very first one because the last day of expiry, rollover activities. So the last 3 sessions have seen stock futures, have a positive bias and net positive flows. So which means there is some buying traction coming in from the FII side as well on the index, on the stock front, which is what perhaps is reflecting in the market as well. So not too perturbed by what is happening. Even if this slides to another 50, 70, 100 points lower, I think there is support zone around the 22,600, 700 mark that will kick in, and we could perhaps consolidate ahead of that yet another deadline press conference, that is expected tomorrow. Sorry, my bad.
I don't know if there's a press conference tomorrow. There is a deadline.
Yeah.
But there might be a lot of statements before that we can expect for sure. Okay, looking at what is really buzzing in the pre-open session, would you look favorably, say, at an Avenue Supermart? We spoke about that yesterday as well, Avenue Supermart, and once again, there's an important upgrade which has also come for Avenue.
Actually, yesterday when we spoke of Avenue Supermarts, we missed one thing. Parag bhai ke saath hi-fi.
अभी कर लो, अभी कर लो.
Yeah, we discussed it at around 3,850.
Yeah, the reason we say that.
Okay, this is a mutual admiration, self-congratulatory move.
So it was, I think, Wednesday or Thursday,
Yeah.
where I think even Chandan
The store
was
addition, when we saw that, that's the day
18
before.
stores in the last 2 days of the financial year, and I think it was a consensus buy between Parag, by myself, and I think even Chandan was
Chandan
on
was
air
there.
that day, and all of us said कि ये तो हम भी Parag भाई के जैसा ना table thumping buy करके दे रहे, and it's had a good run. Now you have to be a little cautious because it's already shot up quite a bit. So long term के हिसाब से थोड़ा सा dip आएगा तो बिल्कुल buy करिए. अभी ट्रेडिंग के हिसाब से I would suggest थोड़ा सा प्रॉफिट बुक कर सकते हैं. If you did buy it at lower levels, close to 37, 3800 or those levels, it's a good idea to book profits. I mean, especially in a market like this, अगर ऐसा handsome profit मिल रहा है, so why not take some money off the table?
Okay, and to add to this, with Avenue, you had V-Mart, V2 Retail, all of those retail players which gave a strong store addition count.
Even Trent.
Trent as well. The store addition count has been very strong. So probably, I don't know if this is a play that you should look at.
Yeah. So basically, this theme has done well in this quarter, at least. And Avenue Supermart, of course, I also agree with Kush that it has gone up too much. It has outperformed other stocks by significantly. So now I would not buy at these levels. But definitely this is a... So actually, if you see all business updates which have come, Jan, Feb, March, India has actually done well. We were on a very good track for FY27. And that EPS upgrade, which everybody was seeing 15 to 18%, was very much on the cards. It is just that this war has spoiled the entire thing.
So we've got 30 seconds left. Kunal, a quick last pick based on what you've seen in the pre-open session.
I think overall, I think we should more focus on the F&O space here. I think auto ancillary is something which is looking good for me, and we have already seen a good correction in Motherson from the high levels. And for Motherson, what I'm looking out is the previous swing low that has not been broken even in this fall. And that is somewhere around the mark of on the lower end, the mark where we have seen the reversal is 104, 105. So I think it's a good risk to reward opportunity at the current level, at least from a technical setups. We have seen a strong buying, and I'm expecting a follow-up move today. So Motherson would be a buy for me.
Motherson, a buy on the F&O segment. But let's look at what the mood of the market is this Tuesday morning. Remember, there's expiry. Remember that deadline is looming, and we don't really know what's going to happen in the next 12 to 14 hours. Well, the Nifty looking weak on opening, actually more in line what the pre-open session showed us. The fact that there is no clarity on a ceasefire, there's 15-point proposal from one side, a 10-point revert from the other side, and none of it looks like either side is going to agree, is exactly what you're seeing on the screens this Tuesday morning. 220 points down on the Nifty as we open. The advanced decline ratio actually not looking that bad, so this could be more of a Nifty problem than anything else, although the Midcap is also lower. The bank, Nifty Bank, is also lower. I'm going to pull up the Nifty heat map for you, and let's take a look at what your big stocks are doing, or your mega caps are doing right now. Only Hindalco and Wipro in the green. This is definitely a market which is worried. You have the Wix also edging up about 3% up. The fact that it's the weekly expiry for the Nifty does not help. Hindalco, there's of course a note today talking about how Aluminium stocks are going to do well, and metals is going to be in focus. Wipro carrying on from its news yesterday about an 8-year pact that they have inked with a big client, but for everyone else is looking quite worrisome. Eternal, M&M, they're at the bottom with Eicher Motors. So some of those auto players are showing weakness. Of course, crude prices going up beyond a point is going to be a pain point. Tata Consumer also not looking that great. So having said that, the biggest hit on the lower side is less than 2%. So while it is looking on the face of it like a painful start of the morning, this is seeming to be more cautious than anything else compared to what we've seen. ONGC also peeping into the green. Just the India VIX very quickly, 2.5% up at this point. Alex, I think more action maybe on the broader sides, and maybe stock specific you might see pops of green, but otherwise the mood is a bit cautious and a little somber. The advanced decline ratio also getting worse.
Absolutely. I just want to pull up the sectoral indices just to drive home that point, because if you saw private banks that were ruling the roost yesterday and the Nifty Bank as a whole that was doing particularly well, that isn't the case today, because you look at the bottom of the screen and you will see PSU banks here. You see the Nifty Bank right here with cuts of about 1.3%. Both ICICI Bank, HDFC Bank trading with cuts of about 1% or so, and it's broadly negative. Parag Bhai was telling you this morning metals are something to watch. In fact, that is the only pocket of green on the screen right now. A few quarterly updates stand out, and in fact that's pretty much what I'm going to be starting with regard to individual stocks. And Jubilant Food hasn't had the best time of it, so let's pull that up right up front and see how it's doing at the start today. It is taking it on the chin today. In fact, 6.5% lower, perhaps one of the worst performers in the broader markets, but a whole host of other companies have actually posted a reasonable set of numbers. So let's pull those up. Credit Access Grameen, perhaps some of the pressure that they've had on the asset quality side is dissipating based on the latest updates that they've given us. 9% up. Guarantee's Path is up as much as 8%. We spoke about the update today. Significant improvement in both production as well as realization. Shah Metallic, another one for you, where you're seeing a significant quarterly performance as well, and they have a very high capacity utilization. They're building in capacity additions as well. ONGC as well as, actually before that, Kalyan Jewelers, let's pull those up, as well as PC Jeweler. PC Jeweler, remember, is a penny stock, and so don't read too much into the percentage increase. Having said that, it was a decent set of numbers that came through in the quarterly update. ONGC Oil India on the one end, with regard to oil prices remaining elevated, the upstream oil companies remain positive. Downstream oil companies likely taking a bit of a beating today. So let's pull up the OMCs. The IOC, HPCL, BPCL, they're losing ground. BPCL down as much as 2%. I wouldn't be surprised if IOC is also in that same light, losing ground. You have a few more stocks. So Aurobindo Pharma is a stock that is benefiting on account of amoxicillin price update, but the stock is taking a little bit of a knock today, just about 0.1%, perhaps some money being taken off the table. PDS is a stock that could be reacting on account of an order, 450 crore order from a US company, a retailer there, up as much as 7.4%, arguably one of the stocks of the day as well. Deep Industries has gotten a 60 crore, close to 60 crore order, not doing too much from ONGC. Brigade Hotel Ventures is the other one that you should keep an eye on and is doing reasonably well. It's gotten an MOU with Hyatt. So there are a few stocks that are doing particularly well, even while the texture hero is not particularly supportive at this juncture. I'm wondering whether you have more luck finding stocks in the broader markets that are doing well.
Not as much as what you've already spoken about, Alex, because what I see is a Kesoram Industries which is seeing some good moves. Hindalco we've already mentioned, but again on the back of aluminium prices, some good moves coming in on that front. But categorically, KFin Tech is slightly under pressure, Hero MotoCorp under pressure as well, along with the RBL Bank, which is down about 2 to 3% as we speak. So no major movers, but let's just quickly pull up the advanced decline breadth and see what's happening on that front, because that will tell you where the markets are slightly moving from where we went. There you are seeing that narrowing again, which has started to happen. I know it's just a couple of minutes right now, but as the way markets have opened, anything that you see, Kush, in terms of what's happening and any topics coming in there?
Been a while since that happened.
Yes.
No, but it depends. Kunal
Fair enough. Fair enough. No, I think we'll take this. We'll take this move as long as Nifty is able to hold above those support levels of 25, 650, 700. This is more of a consolidation move. And like I said, 3 sessions of gains, some pullback par for the course. So I wouldn't read too much into it. Maybe if there is some pullback, from the lower levels of the day towards the second half, as it has been for the last 2 sessions, I think that'll actually be a win. Doesn't necessarily have to close in the green.
Okay, so this does not have to necessarily close in the green. That's the key thing that I'm picking up so far. But thank you so much, Kunal, Kush, and I think that was a little bit of hand-eye coordination issue that I faced probably, and Parag Bhai for joining in, always a pleasure. to speak to you as well. This week we have IT as a sector that will remain in focus because you have TCS that will be reporting numbers. In fact, we will have Sumit Jain, Senior Research Analyst of CLSA India, joining in. But before that, let's get in Puneet, my colleague, to set this conversation up for us in terms of what is the key expectation, because all of us have been wanting to understand what should one watch out for. Some analysts have called it a year for IT. Some have said that AI is a threat. So this quarter becomes very crucial, Puneet, right?
Well, most certainly, and probably the first time in all those years where revenue growth will come back into focus. Now, we've seen a correction. Those stocks valuations are lucrative at this point of time, but a lot of focus on this quarter will be on revenue growth as well as on guidance for FY27. That will be the key aspect. There'll also be revenue. There'll also be the positive impact because of the rupee depreciation that will be visible in all these companies. So that will be the key first aspect. But of course, the AI overhang continues as one of the key aspects that we continue to monitor. Most brokerages penciling in better growth for large caps versus the tier 2 as well as the mid caps at this point of time, and that's visible in what we've seen as well. The other key aspect for this quarter has been the acquisitions. Multiple key acquisitions announced both in FY26 as well as in Q4 by TCS, Infosys, Wipro very recently announced one yesterday as well. So all of those, how will that come into focus yet again in FY27 in terms of numbers will be the other key aspect. In terms of overall growth, we are expecting some decent growth for the large cap players. EBIT growth has been a key focus area over the last few quarters, but revenue growth will come back into focus in this particular quarter. 2.3% expected for TCS, while we are expecting HCL Tech to be one of the key ones to watch out for in this quarter. Consensus estimates are below par for the revenue growth, but continue to monitor this particular stock as well in terms of focus. And in terms of tier 2, it's been an interesting space yet again. We've seen a big acquisition done by Coforge, but valuations have been hammered for that particular counter. So LTM, Coforge, you will see a 6% growth in terms of revenue, in terms of constant currency, but largely continue to monitor the commentary for all these players. But a big quarter nonetheless for the IT players for Q4, and a lot of impetus going into FY27 in terms of commentary.
Thank you for that, Puneet. Sumit Jain, Senior Research Analyst at CLSA India, joining us this morning as we get into that space where we start looking at IT. Sumit, thank you so much for speaking with us. In a way, a bit of relief for IT companies that no one is talking so much about the AI threat anymore because they're larger existential threats to the entire world. But when we look at their numbers more closely, this one question will pop up, isn't it? And do you see the global economy and the turbulence there impacting client additions and some of those metrics this quarter, or it's too early to say?
Yeah, I guess it's too early to say, and I think we have seen some deceleration in the client signings, or rather the deal announcements. So if you look at, I think the March month in the last quarter, we have seen a lesser number of deal announcements by the large cap IT players compared to the same time in the December quarter. And then a couple of companies in our discussion have also called out that there is slight delay in decision making in some of the industry verticals. So yeah, I think it's just the beginning. And of course, the extent of duration of this Middle East crisis, that will have an impact on inflation, interest rates, and discretionary demand. So as of now, nothing quite alarming yet. And that's where we believe from a macro standpoint, we are still in a better situation compared to same time last year when the tariff war had started between US, Mexico, Canada. So yeah, this is where, we are expecting a decent guidance from HCL and Infosys, better than what they might end up in FY26.
What probably adds tailwinds also is the rupee depreciation. Are you going to see some impact?
No, definitely. I think whenever, oil prices go up, and India being a net importer, rupee takes a knock, and that is obviously a big tailwind to the exporters in India, particularly the IT service companies. But just to mind you, with few months lag, the rupee depreciation gets passed on to the clients. So you typically do not see margins expanding quite materially because of rupee depreciation. But yes, your dollar revenues and the earnings gets upgraded whenever rupee depreciates. Also to flag, the valuation of these companies do not move with rupee depreciation much. It's mostly the earnings. And that's where, it's very important to understand from the FII community standpoint, they do not get a significant benefit in terms of dollar earnings out of rupee depreciation, but it's more of a benefit for the domestic investors in India.
Sumit, hi, morning, Alex here. So I'm just wondering how you're looking at this whole flurry of announcements, even in the last quarter, right? With some of these frontline IT companies hastening to announce, okay, we're also doing AI, we're also working with such and such company, we're tying up with such and such company, press conferences being called and leaders saying vociferously, look, we're transitioning, we are enablers, etc., etc. How much of that very quickly is going to translate into numbers, or is it just positioning at this point?
Yeah. No, so actually, I think this narrative in the tech sector gets built every 10 years when, the technology changes. I think everybody is too keen on focusing on the deflation in the existing projects. And that's why we extrapolate too far as to how much will be the overall negative impact on revenues. But we fail to understand the incremental volume opportunity that's going to come because of the new tech cycle. And that's where, you need to understand in the last 2 months, the whole narrative that has got built that Anthropic and OpenAI tools will lead to a massive deflation for both SaaS and IT service companies. I mean, in the last 2 months, we have actually not seen any on-ground proof that the AI-led deflation has gone up because of the latest tools from these two players. And that's where you need to understand if these new technology tools have to be implemented in the enterprise world, there will be a lot of work for system integrators. They are like plumbers to reorient the data pipelines and shift to cloud, which will get accelerated because of AI. And that's where if you look at the last 20, 30 years, the global IT services spend has been quite resilient, despite we seeing 2 decades back SAP Oracle ERP implementation, which was touted that will hurt the bespoke app development work for system integrators. Similarly, a decade back when cloud and SaaS came, again, there was a huge deflationary headwind to the IT service companies. But I guess, these IT service companies build wrappers around the new technology tools. And that's where their business models are quite resilient despite the changes in tech cycles. So I believe AI is going to be a net tailwind for the sector. And this narrative will get squashed away when these companies report earnings beat. And by the way, for the last 2 quarters, we have seen these companies reporting earnings beat. And we could probably see a similar quarter panning out in this month as well.
Good morning, Hiral on this side. So are you saying that the new AI-led volume is something which will finally start probably offsetting the pricing pressure that we've already seen, and it will be visible in the 4th quarter itself?
Yes, I think it should be visible in the guidance given by HCL and Infosys, where we believe the Infosys guidance for FY27 at the midpoint should be better than where they will end up last year. And that will clearly, underscore the fact that AI is just a new tech cycle, and this is going to bring in a lot more incremental work. And 80 to 90% of the revenues of these companies are still linked to macro. And this is where I think each one of us should be more inclined to look at how the macro shapes up around Middle East. If this war continues for long, there will be an impact on inflation in US and hence the bond yields and hence the discretionary demand. So I guess to me, that's a bigger worry than AI in the immediate future.
And in terms of the mid caps versus the large caps, I've often seen you have mid caps in your portfolio as preferred picks as well. With the recent correction that's happened in terms of evaluations do you think the large caps make it a point? You would make it a point to see them as more attractive in FY27 versus the mid cap companies then?
So see, I think the issue with mid caps is there are some companies who are executing extremely well, the likes of Coforge or Persistent, whereas there are a lot more other players which are not doing that well. So we are more positive on those two companies in the mid-cap space where they have been consistently gaining market share for the last 6 to 8 years under the current management. And they have a unique business model where they are doing proactive selling and not relying on typical requests for proposal kind of contracts. And that's why I think irrespective of the technology changes or the macro cycles, these mid-tier IT companies, what I talked about, will be in a better position. And from the earnings growth standpoint, we believe they will give a better earning growth than the large cap players. But yes, you need to understand if the beta for the market goes up because of Middle East prices extending, then the capital preservation could be higher in the large caps in the near term. So you need to balance your portfolio accordingly in the IT, depending on how you see the Middle East war panning out.
It's a good point. Just to close out, Sumit, may not obviously be something that pans out in the fourth quarter. I'm just wondering if it will in FY27, whether you factored that into your judgment for what will pan out for these IT companies with US exposure. Just the latest readings, the commentary saying that private job creation is not very significant, and the worry about slowdown in that economy, already you have question marks about discretionary demand there. So is that something that you're already factoring into your expectations for FY27?
So yeah, clearly, I think we are building in that pessimism to some extent. And, so we are building in a 2 to 5% kind of organic CC revenue growth for HCL and Infosys. And given their historical growth over the last 5 to 10 years, this 2 to 5% growth is definitely, I would say, building in some caution around discretionary demand revival. And the US job market has been weak for the last 3 to 4 years now. So I guess the 2 to 5% guidance in that lens is a pretty conservative guidance to me. And to me, rather than AI being a big headwind for the industry, the bigger headwinds are the growth of GCCs in India, which to some extent are taking away share from the IT outsourcing companies in India. Similarly, the market share gain of Indian IT has not been happening for the last few years. All the global IT service companies have a scaled presence in India. So I guess those are bigger worries for me on a structural basis rather than AI in the near term. And I think US economy is going through Goldilocks. So that way, the cost optimization, vendor consolidation deals are still the flavor of the market. But maybe, 6 to 12 months down the line, who knows, once we have lower bond yields, the discretionary demand starts reviving. So yeah, I think because of Middle East, some bit of tailwind for the sector has been pushed out.
Sumit, thanks so much as always for taking the time. Very insightful conversation ahead of the earnings presentation, starting with TCS. And even as we're speaking, I think there's a spurt of green for the IT pack as a whole. It is at the high point of the day. Thanks so much for taking the time.
Thank you.
All right, let's talk about iFinance. It's a new, I shouldn't say kid on the block. It's a new listing and something that we're tracking now. Along with the rest of the financial pack. And it's reported a largely inline Q4 business update with improving asset quality trends. We will be speaking to the management very shortly, but before we do that, let's go across to Sharad, who's got us a snapshot for the Q4 business update. Sharad?
Well, yes, Alex, a largely inline set of numbers coming in when it comes to iFinance. And remember, the operational update is largely in line with what the street was estimating. The improvement was seen in the asset quality, but remember the business model as compared to its peers is a bit different. The asset quality, even if it goes on the lower side, it's fine. We had covered that in KYC as well. The collection efficiency has reached its highest levels in the month of March. AUM is a decent up move of 11% on a sequential basis, but of course 20% plus move in the YOY basis. And disbursements also was strong. That's up almost 26%. But of course, the concern is not the March numbers, but what happens next, because the collection efficiency or the MFI stress, if it comes, and it's likely to come in the month of April, that is where the key concern would lie. But net, the March numbers have been decent.
Got it. All right. Thanks so much, Sharad, for getting us those details. Let's speak to Sanjay Sharma, Managing Director of iFinance, joining us right now to talk about the Q4 numbers. Mr. Sharma, thanks so much for taking the time, and pleasure speaking with you as always. Let's start by talking about those Q4 numbers, inline set of numbers, but the initial trends of asset quality. The question is, with everything that we're witnessing right now, does that change in April?
Good morning, and thank you for having me on your channel. iFinance, I think we have seen a good year pass by, and it was a difficult year as we started, but we have delivered a 27% increase in our annual AUM. Also, the important news is that credit quality has become consistently better quarter on quarter. And if you look at our position today, we are sitting with a between 1 to 90 DPD or overdue book of only 1.86%. Now, this is an extremely narrow range, and which signifies very good collection efficiency, very good business stability in our customer segment. Our customer segment is the MSME, but at the smallest end of the MSME. So these are the unorganized manufacturer traders, etc. And we found that they have taken on this year with robustness. We've seen collections improve. Today, when we look at even in what are considered from an MFI world as difficult states like Bihar, we're seeing very good collection efficiencies even in those states and consistently, not just in 1 month. But if you look at our trend from October onwards, we are delivering close to 99.5% plus collection efficiency on the non-OD book. So we're poised at a very good place as we start the year.
Okay, so that's good news, and particularly if that collection efficiency continues to pan out. Mr. Sharma, I'm just trying to wonder, at this juncture, we're anticipating that we might just be at the low point of the rate cycle, right? So things aren't going to get better than this. If anything, yields have actually moved higher. So for you, from that perspective, the costs go up. Is that going to impact your net interest margins in the fourth quarter, or do we see that pan out only in the first quarter of this year?
Sure. I think across the year, we do expect interest rates to harden a little, and especially with uncertainty in the markets. But we will make that up through operating expense efficiency, which we expect will add anywhere between 75 to 100 basis points of improvement across the year. At least that's what we are targeting. Also, the credit cost is coming down. In the last year itself, our gross NPAs have dropped by more than 1%. And this trend will continue. Today, our gross NPA sits at 4.6%. This, we believe, by end of the year, we will try to target to get down to 3.5%. So the reduction in credit cost and reduction in operating expense will more than compensate for the small fall in the NIM that we will see.
Good morning, Sanjay, this is Hiral on this side. So you're saying the drop in terms of NIMs, is that mainly on the back of the shift that you're seeing in terms of the mortgage portfolio?
Actually, that's an excellent question. In fact, our mortgage mix of mortgage portfolio is increasing. Interest rates drop. So borrowing costs may not really go up as for many other MSME players in the market because of the mix moving towards mortgage. Second is that as we have just done an IPO and we will be looking at a re-rating of our from the credit rating agencies, there's a possibility that that might also bring in some improvement in or lowering of our borrowing cost. But those I think that will play out during the year. I believe that the effect of squeezing of NIM will be very minimal in our business.
And quickly, in terms of the AUM growth, you've ended FY26 with what? A 27% jump. Your guidance was around 29 to 30%. So there is a slight deviation that has come in terms of your AUM growth. Does this actually impact your goal to double the book in the next 2 to 3 years, which you had stated during the IPO?
Yeah. See, we took a conscious call with the war looming around. We squeeze down on certain segments which have a direct impact on from oil or from fertilizers. We are short by roughly 100 crores only. And if we wanted, we could have done that 100 crores of disbursement when we have done almost close to 5,100 crores, and 100 would not have been that difficult. But we slowed down a little bit in March with that thought that let's observe these segments. The difference is only marginal. I think 100 crores is not such a big amount of deviation from what we were guiding.
I'm just wondering, Mr. Sharma, hi, Tamanna here. Do you have much MSME exposure when you're saying war impact? How do you see it panning out? Because you have a strong MFI book also. Are you seeing second order spillovers? Just wanted to get a sense of where those pain points are.
Tamanna, we have a 100% book which is MSME. We don't do MFI business at all. The MSMEs are very small and unorganized. I think the first level impacts we have estimated would be on our customers who run restaurant businesses, who dry cleaning businesses. So I think, and there are some segments which also use gas, especially in furnaces. So I think we estimate that is roughly 7 to 8% of our portfolio, because our portfolio is quite distributed, and that will help us see very little impact, but we are monitoring that in that space.
Okay, so this would be largely, when you say restaurants, laundry, etc., this would be because of LPG and all of those concerns. You're seeing that pan out?
Absolutely. I think it is because of the LPG problem. I think we believe that, that it will be a short-term impact, because finally the war will end and the LPG position will return, but there will be some interim stress on this segment.
Thank you so much for speaking with us, Sanjay, and coming in today. Those are interesting insights, really, about the kind of stress that you could see in the system and what segmentation of businesses see that kind of stress as well. All right, we're going to get a little broader now in our conversation. Shantanu Gupta, Chief India Economist at Goldman Sachs, joining us now in a market open. Mr. Sengupta, thank you so much for speaking with us. Always a pleasure to have you on the show. So many estimates have now come already looking at India's GDP, both GDP and inflation moving in opposite directions. So GDP downgrades, inflation's inching up. Is that something you have a consensus view on as well?
Yes. So since the start of the conflict in the Middle East, we have downgraded growth by about 1 point. We are around 6% now on GDP growth. We are we have moved our inflation forecasts higher, near about 5%. For the year, and we are baking in a couple of rate hikes from the RBI later on in the year. We also think that the current account deficit will expand towards 2% of GDP, or maybe slightly higher, and likely a second consecutive year of balance of payment deficit for India. This is all with the oil price forecast assumption, which stays quite elevated in the near term, at least for the month of April, and then slides lower towards $80 a barrel by the end of the year. That's the house view on oil.
Okay. Are there different scenarios that you're looking at, Mr. Sengupta? Because this is, it could get much better from here, or it could get much worse. So if it does get much worse and this continues, say, for another month, you have a blockade for another month, and you have crude prices heading to 120, what is the picture that you see then? Versus, say, that in the next 15 days or so, you have some kind of ceasefire and oil prices cool off significantly. What are those two ends of the spectrum that you're baking in?
So the house view already bakes in some kind of closure in the next couple of weeks or so. And that is predicated on that assumption. We think that oil prices will go down towards $80 a barrel by the end of the year. But that's the view on Brent crude oil. What we have done for India is that since India faces the Middle Eastern crude more, we have baked in a premium already in the near month, which fades away by the end of the year. So we have already baked in somewhere around a $10 to $15 premium currently, which will fade away later. So I would just say that our assumptions are already stressed for a higher amount of or a higher level of oil prices than what the forecast assumption is for the house view. So, for instance, right now we are already baking in about $115 a barrel. I'll just say that for a 10% move in crude further higher, GDP growth impact would be around 15 to 20 basis points odd from top-down macros models. But, again, there are various nuances of whether the government comes in with fiscal policy offsets, whether you have credit guarantees from the RBI and so forth. So that is more complicated. But, from a top-down view, I would just say that a 10% higher oil would mean about 15, 20 basis points of lower growth.
Shantanu, good morning, Alex here. I'm just wondering what, in your opinion, and you touched upon that briefly, and you said that it's complicated. Indeed, it is, which is why we're hoping that you might have an answer. What do you think that the policy response should be, either on monetary policy or on fiscal policy? Because already there has been a step taken by the government to protect the inflation print by not letting the fuel prices at the pump go up, but it's absorbing that hit by curtailing revenue. So there is going to be an implication at some point down the road. The question is, how long will you be able to sustain that? So what is the policy response in your opinion?
So any energy price shock, if you think about this over the last several years, it's divided between broadly three entities: the government, which is the fiscal authority; the quasi-fiscal, which is the oil OMCs, the energy PSUs, and finally the consumer. So depending on the duration of the shock and how what the magnitude is, the government decides, or fiscal policy authorities decide on, what to pass on to the consumer versus not. Currently, the government has taken the view not to pass on anything to the consumer. Again, it totally depends on the level of oil prices. So our view would be that if this sustains for a longer period of time, at some point of time, there'll be some pass through to the consumer, probably over the next quarter or so. However, if this resolves quicker and oil prices come down quickly towards, call it like $80, $85 a barrel, then we don't think a pass through to the consumer will be required. Currently, as you're seeing, it is being divided between the fiscal authority, that is, as you correctly pointed out, a hit on the revenues, and the energy SOEs giving up some margin, the oil OMCs giving up some margin. And we think that will continue for the next month or two. And thereafter, if prices are still elevated, you'll have some pass through to the consumer. I'll just point out that, an energy shock and a balance of payment shock of this magnitude, if it carries on for a bit longer, would, in our mind, require some form of monetary policy tightening. We don't think it'll need to be too much. We think about 50 basis points in the later half of the year is what we are baking in for now. But it's not going to be a broad brush because sectors which are impacted by this will probably be requiring credit guarantees or stimulus of that nature. But rates, in our view, will have to tighten by the end of the year by about 50 basis points.
Okay, so that's interesting. So that's the monetary response. I'm just wondering about what your opinion is on how the currency management has taken place and what implications that has down the road also for liquidity. Heading into monetary policy review tomorrow, what are you looking forward to in terms of commentary on both liquidity as well as on currency management, beyond, of course, the expectation that I think everyone is penciling in, which is a pause?
Right. So we are also looking at a pause in the April meeting. We think that the conversation or the tone will change from the RBI, from the lower for longer, which was there in the February meeting, towards a more neutral communication or a neutral forward guidance. We think the monetary policy statement will reflect both the downside in terms of growth, given the shock, and the upside in terms of inflation due to energy price pass-throughs. In terms of liquidity, our view is that the RBI has done a great job in terms of liquidity management, even as they were losing reserves given the balance of payment deficit. So they have always been replenishing liquidity and keeping the overnight rates below the repo. We think now is the time when the overnight rates will more permanently shift towards the repo rate and probably drift a little bit higher as you get into the second half of the year. We don't expect it immediately. We expect liquidity to be benign enough right now. But as you move into, let's say, a quarter down the line, we think that the overnight will slowly start inching at the repo or slightly higher in terms of their liquidity management going forward.
Good morning, Hiral. You mentioned about the balance of payment stress, and I think this is a potential, third consecutive year of balance of payment deficit that we are seeing since 1991, if I'm not mistaken. Now, how effective is the repo rate management that you're talking about as compared to the RBI intervention in the forex markets, number one? And part two of my question quickly is in terms of the liquidity strategy, because RBI has been significantly injecting right now. It's close to equivalent to 3% of your GDP. If the policy is shifting towards tightness, as you've mentioned right now, what is the risk to the banking sector's credit growth then?
So firstly, in terms of the rate action versus FX, look, we are not calling at all for interest rate defense of FX. I mean, then I would not have called for 50 basis points. An interest rate defense for FX is likely much, much steeper than 50 basis points. So we don't think, we are not penciling in that response at all. We think that rates will need to tighten by the end of the year because the energy prices ultimately will pass through into core goods inflation. This is less to do with petrol and diesel prices at the pump level, but it is more of the input costs of manufacturing companies which will ultimately pass on to the consumer. I mean, even through the current earnings season, you're already seeing some of these input cost increases coming through. You can see the PMIs, both manufacturing and services, where input costs have been elevated nearly at 4-year high levels. So that is the reason why we are calling for 50 basis points of rate hikes in the back half, in the later half of the year. In terms of liquidity management, look, again, if the RBI is, I mean, any central bank will ultimately be losing reserves when you're faced with a balance of payment deficit. I mean, that's just the math of managing the balance of payments. And to the extent that there is a reserve loss, we think that they will be replenishing that with domestic banking system liquidity. They have multiple tools at their disposal, OMOs, there could be FX buy-sell swaps, there could be longer-term repos in this kind of an environment, something that we have shown during the pandemic. So we think that liquidity is going to be adequate. The point that I'm making is that you probably will not have a situation the overnight is below the repo. It'll be probably at repo or above.
Okay, an interesting point that you make as well. But thank you, Shantanu, so much for joining in. Always a pleasure to speak to you as well. But moving on, Air India CEO Campbell Wilson has reportedly stepped down. This is making the second big airline CEO exit this year after the Indigo upheaval. Let's bring in my colleague Danish for more details. Danish, what are you picking up so far?
Well, that's correct. PTI reported suggesting that Air India CEO Mr. Campbell Wilson has resigned and he has put this intention in front of the board. Campbell Wilson had joined from Scoot to Air India way back in 2022, and under him, he was the CEO that had set Air India on a course of 5 years, a transformational course called Vihan.ai, in which his intent was to fix everything around Air India, right from IT services to the quality of the aircraft to the quality of staff. So these are the things that happened over the past 3-4 years under his tenure. The NDTV Profit has also tried to reach out to Air India to get a confirmation on this story, that whether Mr. Wilson has resigned and when is his last day. So we are yet to hear from Air India about this. But as per this PTI report, Air India CEO Campbell Wilson has resigned. And especially this resignation is coming at that point in time when we have seen that the last year has been really challenging for the entire aviation industry, which started right from the impact of Operation Sindoor with the Pakistan airspace being shut, and then we saw multiple incidents happening. In fact, the crash of Air 171 also happened under Mr. Campbell Wilson's tenure. So there were many challenges over the past 1 year, and we are hoping to get a final confirmation from Air India on the same.
Yeah, not a good time to be airline CEO. Thank you. Thank you, an Indian airline CEO. Thank you for that, Danish. All right, tough times for Jubilant Foodworks as well. Just pull up that stock price. Lowest point in nearly 2 years for the stock actually this morning. 7% down. So business updates have come. Mahima joining us with more details. Mahima, what is so worrying that the street is seeing in those update numbers?
Right, so Tamanna, overall Q4 is a miss for sure for Jubilant Foodworks, and this is after 3 quarters of strong growth that they've posted. Largely, I think what the street is not liking is the same-store sales growth, which is coming just at 0.2% for the India business. So weak performance in terms of where the domestic business goes in terms of same-store sales growth. International business, however, has done well for the Turkey business, especially. The like-for-like growth has also been, in terms of the overall context has been at a lower footing, and because of this I think the street is expecting that the sales per square feet with the kind of expansion that they're doing will come out to be on a lower end, and that is why the stock is seeing pressure. In terms of the overall update coming in, Q4 consolidated revenue growth at 19%, standalone revenue growth at 6.2%. FY26 as a whole, consolidated revenue has seen a growth of around 17% and standalone growth at almost 13%. Like-for-like growth, here is where the concern is, because India business just at 0.2% versus that of Turkey, seeing at least a growth of 9%, which is still slightly lower as compared to what it's done in the last 2 quarters. In terms of store additions, they are going very aggressive when it comes to store expansion. This is the story for a lot of retailers, in the recent past. 69 stores added to the overall Jubilant Foodworks group network. India added 59 stores and Turkey added around 4 stores. Now, in terms of what brokerages are making of this Q4 update, Macquarie has maintained underperform with a target price of 460 on this one. And they've said that they expect Indian margins to come under pressure given weak like-for-like growth, and Morgan Stanley has also said said the similar thing. So this is the overall view as to what's not worked for Jubilant Foodworks this quarter.
Thank you for that, Mahima. All right, another important factor to keep in mind is the SkyMet forecast that they've just put out this morning for 2026, the southwest monsoon. And it's overall going to be below normal. The September rainfall is at 89% of the long period average. August will be 92%. July at 95%, and June at 101%. In fact, GP Sharma is with us from SkyMet to speak through those forecasts which are coming in. He's, of course, President, Meteorology and Climate Change. Mr. Sharma, thank you so much for speaking with us. Can you just start by giving us a synopsis of what the forecast is looking like? Is this a below normal monsoon that we're expecting? And you've mentioned El Nino impact as well.
Thank you, Tamanna. I was with your channel that's last week also, wherein I did share the SkyMet perspective on the monsoon 2026. And I did mention that it looks that's going to be below normal. And earlier to that, we had the preliminary foreshadow given in the month of January also. There were early signs of below normal monsoon, subpar monsoon this year. And that's what we had shared in January itself. Yes. You're very right. In the forecast, we have given that below normal monsoon is likely. And you see, there are 2 factors which are very, very closely related with our monsoon performance. One is El Nino, the other one is IOD. Okay, El Nino has more often than not has spoiled or corrupt our monsoon, and so possibly this will do this season as well. Okay. Right now, we are in the La Nina condition, though fading fast. And quickly we'll go to also neutral condition and rapid transition thereafter to El Nino. But the start of the monsoon, by the time it takes place, we will still be in the neutral condition, and that is how possibly I will attach that reason that the monsoon may start a little on a satisfactory note. Maybe on the right on time also, on a satisfactory note also. Month of June, which is normally considered as a sowing period, that should be okay. It should have a decent start over the southern parts, the central parts also. And but the fear is halfway through the monsoon, these parameters, they are likely to become a little. Yeah. Okay, so that is how.
Got it. Mr. Sharma, so your point is well made. I just want to understand, and from a geographical standpoint, ultimately there is an overarching view on the monsoon, but as you've described very well in the past, it is all about the distribution of the monsoon, the spatial distribution of the monsoon. And so therefore, from that perspective, what is the data suggesting as to the pockets that could be vulnerable in this upcoming season?
Very important. Okay. I see a little switch over as compared to what we saw in the past 2 seasons. Last 2 seasons, monsoon was good, above normal. But then there were pockets which remained deficit, and pockets like East India, Bihar, Jharkhand, West Bengal, adjoining region, they have been perpetually rain deficit in the monsoon months. Very little and very late the rains came in Bihar and Northeast India. Once again, like the eastern parts, perpetual deficit rainfall is seen. But this time, as per the model, which just suggests it is going to be a change scenario wherein those pockets that look to be better, even Northeast India and all the eastern states, West Bengal, Bihar, Jharkhand. But the sad aspect will be that the core monsoon region, which we call it as the central parts, western parts of the country, they will face the crunch. Core monsoon months also, July and August, they may not be as we desire to be, and therefore the rainfall distribution, which matters more than the figure which we give, whether it is a 94 or 90%, spatial distribution matters most, but that is going to be skewed this time, I will say. Okay, the northern parts, western parts, central part, which will include states of Madhya Pradesh, Maharashtra, Rajasthan, Gujarat, Punjab, Haryana, Delhi region, all these parts, they will not have a very good monsoon, particularly second half. Yeah.
Okay, understood. Particularly the second half. Last season we saw an extended monsoon. Is that likely this time as well?
You see, monsoon in the what the pattern which we read nowadays, it is generally going beyond its normal dates. Though 15th of October, we take it as a normal date for the monsoon to completely withdraw from the country. From the northern parts, in any case, it is any time around the last few days of September, it's out, it is out. But then it is extending its stay over the central parts and the eastern parts. Okay, as of now, it's difficult to say. Okay, but then as we see, even if it extends its stay or so, in some pockets, end of monsoon, the last part of the monsoon is not going to behave as we desire normally. Around that time, it is going to remain a little inadequate rainfall over most parts of the country, barring East and Northeast India. Yeah.
Got it. Mr. Sharma, always a pleasure speaking with you. Thank you so much for taking the time.
Thank you.
All right. We have to slip into a very quick break. We've got our conversation with a geopolitical expert lined up on the other side. Very important and something we've been doing consistently. Stay tuned for that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboard
Welcome back. Let's get a check of where we could be headed in terms of a potential ceasefire. That is top of mind for markets, and that's what you're seeing on the screen, really. Despite some decent business updates, markets really struggling to find their feet off the lows of the morning, definitely. But that recovery is not going to be convincing till we don't have clarity on what's happening with the Iran war. Badri Narayanan Gopalakrishnan is joining us this morning. He's faculty member at the Boston College at USA, just to give us a sense of where he sees things going as a geopolitical expert. Badri, very good morning, and thank you for your time here with us on NDTV Profit. If you look at two sides of statements coming out, what the US President Trump is saying, their proposal for a ceasefire and the response from the Iranians, it would seem like we are as far away from a ceasefire than we were, say, 2 days ago.
Absolutely. I think that is very worrisome. And the way the US president kind of rejected the proposal that came from Iran. And it's kind of, like you rightly said, going back to square one, right? So the main conditions that come with the ceasefire from Iran is basically, the conditions are basically not at all acceptable. And we have this deadline for today, this evening Eastern time that President Trump has set for Iran, and the targets, which are very, very crucial, energy targets there in Iran. So it's just, I think at this point, we are in an escalation mode on both sides. So what we discussed a few days ago, assuming that the whole thing is going to be a relatively short-lived affair for the next few days or weeks, I think we have to kind of reconsider that, and we are moving towards a relatively longer period of escalation on both sides.
Okay. So, Badri, you're talking about escalation on both sides right now. However, you have Trump who's coming out and saying that these are the number of hours that you have, and if the deadline is not met, I'm going to take action. Iran, again, a similar tonality is what you're hearing from them. And I don't think so either of them are in the mood to even get to a ceasefire position. In this kind of a scenario, how are you seeing things move then?
Yeah, I think if there is a move towards some kind of agreement and some kind of common point for both of them, we could say that we are approaching some kind of an end. But right now, given the divergences we see now, I don't see a lot of possibilities to conclude this very quickly, right? For example, if Iran agrees to the US request, or maybe the push from the US on some of the aspects, and if US also gives Iran a little longer time to think and react, then things would be much better, in the sense that we have some time of stability before what happens next. But right now, given the very short time that Iran has to respond, otherwise kind of attacks that can happen on key important points in locations in Iran. And then you also saw the announcement by the Iranian government to have some kind of a human shield over the energy the energy centers and so on. So it's basically kind of one can think that if the US is going to be careful about not hitting the civilian targets, then this can be slowed down.
But I just want to get your take. Just want to get your take on what happens post a ceasefire, because by all accounts, Iran right now has a toll booth set up on the Strait of Hormuz. That situation doesn't seem like it will change even in a post-war scenario. This is not something that Iran is going to give up. Are we looking at a world where it doesn't go back to pre-war in terms of the passage through the Strait of Hormuz?
Yeah, I think that's quite close to what we can imagine. And if you see Saudi Arabia, for example, they're already trying to move a lot of their oil production to the west coast, and the capacity is increasing slowly. So probably it's like during COVID we used to talk about this new normal, and I think right now we are talking about this at least in the foreseeable future. Whether there is an extended ceasefire or not, whether the escalations continue, retaliations continue, the future of the Strait of Hormuz definitely seems to be predictably uncertain, right? So we all know that it's going to be in a difficult situation.
Mr. Gopal Krishnan, thanks so much for taking the time and for explaining that to us. Pleasure speaking with you.
Thank you. Thank you.
All right. Well, let's take a look at the markets, because we've come off the low point of the day and it's pretty much across the board. I'm looking at the small cap index. It has, in fact, just about broken and nudged into positive territory. It's just about flat at this moment. You have the mid-cap index. It's still trading with cuts of about 0.6%, but it's off as much as 0.8% from the low point of the day, which was very soon after the start of trade. The Nifty 50 trading now with cuts of just about 0.25% or so. And one of the stars of the pack today has to be the IT index as a whole, which is gaining as much as 1.3% at this point. And if you pull up the heat map for the Nifty 50, you will actually see that the tone and tenor, the texture of this index has actually changed quite dramatically. There are now 18 stocks that are gaining, led by Hindalco. But then you have the whole host of IT stocks that come in after that. Wipro with gains of about 2.5%, HCL Tech, Infosys, Tech Mahindra doing well, TCS rounding up that list now with gains of about 1%. The IT index as a whole now gaining as much as 1.2%. What is not doing well, however, is the banks and the financial pack, which was ruling the roost in trade yesterday and doing particularly well. But the metal pack is doing okay as well.
I wanted to add that the possible reason for the recovery that you're seeing in the Nifty, and I can't make a correlation, but these reports become important right now. Al Jazeera reporting, citing US media, that Trump may delay the attack on Iran if he sees real signs of a deal on the horizon. This is vis-a-vis his 8 p.m. EST deadline, which is 6:30 a.m. tomorrow. And he alone holds the decision on whether to attack infrastructure or not. Already, this coming out, quoting US government officials, is setting the stage for a possible nth delay of that deadline, because it's really like one of those, if you don't listen to me, I will do this, and then you have to keep pushing it, because what you're saying you will do is not really feasible, or no one is responding from the other side. So that could be something that's sort of lifting markets a fair bit.
But to add to that, Tamanna, you have Iran also, who's somewhere taunting Trump on the threats that he's giving, because they have come out and
they're
said,
only taunting.
Because they're only saying that we will not back down, and either you surrender or we send US back to Stone Age. They're trying to speak in the same language, but they don't have the powers to again look at that kind of an attack.
But they don't need to,
it's not that.
So they don't need to do any attack. They just need to do exactly what they're doing.
Yeah.
And that's the point exactly. Right?
They don't need to escalate anything. They just need to sit there.
So I think they've realized, and I'm not an expert, let me point that out, but then this is my reading of it. They've realized over the weekend, with the kind of blast off that he's had on social media, that by needling him a little bit, they will get a response. And you've seen the weaponization of social media play out over the course of this conflict.
But having said that, what's on social media and what's on ground are two different
Very
things.
different things.
And what the market reacts to is what's on the ground.
100%.
That's also what aluminum stocks are reacting to. In focus after JP Morgan has turned more constructive on the space, citing sustained price strength amidst geopolitical risks. In fact, Soumya Sarkar joining in to tell us more.
Well, as JP Morgan has come out with this bullish note on the aluminium producers, both Hindalco and Vedanta, it's an upgrade that has come in. to overweight weighting from neutral that was there earlier. Now for Hindalco, they have also hiked the target price to 1,125 from 875, and for Vedanta they have hiked the target price to 850 from 680. Now this major upgrade and the increase in target prices only on the back of the higher aluminium prices that we are seeing because of the issues in the Middle East. Now apart from that, for Vedanta they also say that the risk reward looks attractive, and energy inflation, which means that the raw material cost increase will not be a concern for Vedanta at this point of time. For Hindalco, they believe that the worst when it comes to Novelis is likely behind, and the India business tailwind should ease the debt concern as well for Hindalco going forward. Now for the fourth quarter, they're not expecting much of a growth to come in from Hindalco side because of the issues on the Novelis side, but for Vedanta, they're expecting a 24% growth on a sequential basis on the EBITDA front, and for Hindalco just a 6% growth. But going forward, if prices continue to remain at the higher level, they should benefit Hindalco as well as per the brokerage. So that's so increase in aluminium price is the major reason behind this upgrade that has come in for both the counters, Hindalco and Vedanta, and both the stocks have reacted to that.
And the assessment that increase in aluminum prices will not really impact any kind of demand. Vikas Khimani with us this morning on Talking Point, founder and CIO of Carnelian Asset Management and Advisors. Vikas, very good morning to you. Do you think that there is a bit of concern inherently with what we're seeing with Indian markets, considering the level of reaction compared to even US markets or some of the other directly affected nations? All things considered, our oil is coming through. We are relatively well placed, though crude prices, of course, are higher.
Hi, Tamanna. Good morning. I think we have to see it's not only one sort of isolated thing. It is the overall totality. Because of this uncertainty, whether it's getting over, not getting over, how far it can get escalated, there are a lot of things. The whole ecosystem breaks down. The supply chain gets broken, right? And I mean, there are always second order impact. For example, I don't know if you heard, but let's say because of LPG shortage, a lot of workers have gone back to village. That impacts now you can say what oil price has to go to workers migrating back to villages, right? But everywhere, most industries, this is being faced. Now, so there are always impact of whenever there is a disruption in the continuity of a ecosystem, which is what is, I think, causing a multiple level of impact. And so oil, of course, is coming through, but it's not coming through as India would need. I mean, that there is a shortage of gas, LPG and gas. I mean, there are many areas like Morbi shut down for want of gas. So it's not a normal situation. While, of course, we don't have as much crisis as some of the other nations are facing, but it is still a very big problem. So I think this uncertainty has kind of created a dent in the good corporate profit earning, which was expected, which was happening nicely from the December quarter onwards. To that extent, I think March quarter will get impacted. Q1 will get impacted. So that has brought down to this uncertainty. Now, how fast it gets resolved will determine the outcome of the pace of recovery. But it is quite obvious that at least Q1 and some part of Q2 might get impacted because of this supply chain disruption and overall uncertainty in the environment.
Vikas, very good morning. Alex here. And I read your posts online very keenly. You actually quoted Housel when you talk about optimists in this kind of a scenario and pessimists that sound intellectually astute in this kind of a situation. There is a narrative that is being created on social media that India is not necessarily the best market to be overexposed to. I wonder what you think at this juncture with the kind of correction that we've seen and with the valuation picture. Is this a market that you should be doubling down on?
This is not a new narrative. It's been around for, I think at least, if not more, at least 2 years. So I don't really necessarily subscribe to that. See, again, it depends on people's time horizon. But if you look, these kind of disruptions would take place and nobody can predict for that. We saw similar happening in the COVID period. We saw similar happening in Ukraine 22 war. So all those things we have seen from the benefit of hindsight that they tend to get over. The great part about, I think, India's story is that our demographics are in well placed. We are the only country which is growing at 6-7% kind of GDP growth. We have a lot of other structural drivers of growth in place. Of course, we have our own vulnerability in terms of dependence, for the energy supply, for the semiconductor supply, and unfortunately, gold price going up only puts more pressure on our currency reserves. That's the one thing probably, India does not stop importing. So I think all combination coming through has exposed our vulnerability in form of currency in the recent times. But, again, like I said, as it has corrected in the past, I do believe that once it gets over, we will be again talking back to normal situation. Think about it. A year back, I think it was only tariff. Today, nobody talks about tariff and things are back to normal. Same way, I'm sure, like it was about Ukraine War 22, market tends to bottom at the peak of the crisis. In COVID crisis, market bottomed the day of the lockdown. After that, of course, it took time to recover. But even when the bad news were escalating, COVID cases were rising, markets were kind of either holding on or recovering. The bottom was made much ahead of that. So I think we should keep this in mind that market bottoms typically gets made at the peak of the crisis. And I do believe that in this peak of the crisis is behind. Again, I'm not an expert. You never should take a call on the geopolitical, and knowing the kind of unpredictable leadership right now we have. But in the sense it appears that, peak of the crisis is behind. US wants to get out this war. Iran is holding power. US has less holding power. If you just get this construct, probably you believe in that, probably the worst is behind. Now, how long it takes is the only question. Whether it takes 1 quarter, 2 quarter, I don't know. But definitely the risk reward does fall into place. The valuations have come down. The India story does not change. So I think all those things are, of course, favorable. And again, investing is all about going down and finding best risk reward ideas, and that's where you kind of spend your time on.
Because, good morning, that's a very optimistic take as well when it comes to the risk reward being favorable, number one. And, I just read an article which you had written as well, where you're saying that FY27 presents a runway for earnings improvement. Now, all the corporates that we've been speaking to right now, they have butterflies in terms of what's coming up next, not in terms of the capacity to garner revenues, but it's the capacity and the momentum when it comes to the supply chain constraints and availability of raw materials when you specifically speak to manufacturing-led companies. And they're seeing an impact at least in the first half of FY27. Now, in that kind of a scenario, do you expect or bake in any derailment in terms of earnings expectations for FY27, number one? And in that kind of a scenario, how would you actually equate the valuation versus the growth that one should be actually looking out for if they're making investments right now?
Like I said, FY27 earning will get impacted. The article which you are referring to was pre-war initiation. So I think definitely, I think Q3 will get partly impacted. Q4 of this FY26 will get partly impacted. Q1 will get impacted, and potentially Q2 might also get impacted if this continues. And it really depends on how fast the situation becomes normal. It is wrong to say that earnings will not get impacted, because we can see all around supply chain is broken, raw material costs have gone up. Your delivery timelines are not in your control. So a lot of things are kind of up in air, and that has to impact, especially in some sectors, the earnings. Some will benefit for sure, but those are the part of the situation. So I would say that probably if it's overall FY27, the growth outlook may not be as bright as it was, let's say, in January when we wrote that note. But these are the situations you cannot predict, and you can never plan for it. But also, I would say that markets tend to price those things well in advance. So even if, let's say, tomorrow war gets over, markets not going to then look for only FY27 earning, but it will probably start looking beyond that, because this kind of would be taken as one-time impact. And other, if you think conceptually in a valuation terms, since you mentioned that, see, if you do DCF of any company, large part of the value for company determined by the long-term growth, which is terminal value of the company, which is depending on the company to company, 80 to 90% of the value of the company. Now, if let's say for a reason, or 1 or 2 quarter, or for that matter, 1 year's earning is compromised, and because of that, if you are getting a stock which is down 30, 40, 50% lower, I see this more as an opportunity, assuming that there is no deterioration which has happened to terminal value of the company. And that business model you have to assess and do that. So in my opinion, you will find many businesses where there is no deterioration which has happened to the terminal value of the company, but the short-term corrections do impacted by the short-term disruption in the profitability cycle do offer an opportunity.
So Vikas, therefore, and this is the last question, we're running out of time, but which are the areas that you're fishing in at this moment to do that bottom-up stock picking? What are the prime opportunities right now?
BFSI does not get much impacted with this. If this comes back, I think the sector will come back fast, and we have seen significant deterioration or correction in the sectors. I think that remains very, very promising from here. Aviation again, gets impacted directly, but I do believe that long term it has to come back. We have only one player with a larger market share and everything that's being intact. So I think those are the kind of players which are you have to see which have got impacted severely, but long term businesses are still fine. I mean, these are some of the even in fact, I believe that one should look at even IT as a space. We have seen a lot of today. Nobody talks about AI disruption, which was the talk of the town probably 2 months ago. Every interaction was that, but we've all forgotten that. But the currency of 8, 10, 9% depreciation helps IT company, which was otherwise today still the prices are reasonably available. We think that it's an interesting thing to look at there. Again, company specific. We'll have to study the company specific models, but generally speaking, I think there are interesting opportunity space there. So like this, you can find pockets of opportunities where you can find good risk reward.
All right. Well, on that note, on that opportunistic note, thank you so much, Vikas, for taking the time. Pleasure speaking with you as always. All right, well, that brings us to the end of this edition of India Market Open. We're ending higher than we started the market, or this show at least. We've got plenty of time for the market to close. In fact, if
the close will be very interesting to see versus what we've seen in
It is going to be
session.
expiry, yeah? So, but if you've got specific questions on stocks, then keep them ready, because up next is Ask Profit from Hiral, Tamanna and myself and the team that put the show together. Thank you so much for watching. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards,
welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachhajani and with me is Puneet Zaveri. Puneet, welcome back. You know, with regards to where the markets go as well, at least it's not been, the case as it was, in the last couple of days as we saw as to how the markets have been. On the Nifty 50, we're slightly down by about 0.3%, but there's steady recovery that's happening where the benchmarks go. Right now, we're just down by about 36 odd points, trading around 0.1% lower, in fact. And with regards to where the Bank Nifty go, let's try to pull that up as well. So there's sharp recovery that's coming from the day's low point for the Nifty 50. The Bank Nifty has also recovered from its day's low point, now trading around 0.7% lower. Just a downtick of about 370 odd points is what we are seeing. Let's try to pull up for the Nifty 50 heat map to see as to what are the counters that are contributing towards the gain and the recovery with regards to where the benchmarks go. Let's try to pull up the heat map. There you go. There's Hindalco leading that chart up 3%. Wipro, HCL Tech, Trent, Sun Pharma, Infosys, TCS, all of these seeing gains in that range of 1 to 3 odd %. But on the flip side, you have Titan, which is under pressure. Yesterday, it did see good gains on the back of gold jewelry updates coming in for a lot of companies. But today, seeing profit booking. Indigo seeing a downtick of 1.5% further. DRL, Eicher Motors, M&M are some of the other names. Max Health as well, down in that range, 2% each. But let's try to pull up the sectoral heat map to help us understand as to what sectors are doing in trade today. You have your Nifty IT topping that chart ahead of earnings, followed by metals, realty, media and pharma. But on the flip side, you have PSU banks, which is still under pressure, down by about 1.5%. Auto continues to be under pressure, down 0.8%, followed by private bank. And also, you have some consumption and oil and gas pack, which is not doing very well. Let's try to pull up the advanced decline ratio because that will give us a picture as to how the broader end of spectrum is doing. There is recovery when it comes to the small cap index, of course, but there you go. It's even the broader end of spectrum is it's everywhere. It's confused as to what's happening, but at least 2:1 is the ratio is what it's looking like right now.
Most certainly, it's good to be back on a day where we're seeing some recovery, especially from the lows today, and we've seen that across sectors. So the advanced decline ratio, the most volatile that has been in the last few days, but April 7, 2025, same time last year was an important day. We hit the low for the Nifty 22,100 odd 1 year ago. And if you look at the 1 year chart for the Nifty, you look at an M formation in that sense. We've gone up and we've gone down back to those levels of 22,000 1 year later. And the cause of that is the same. Last year it was the Liberation Day, the announcements by President Donald Trump. And today as well, that has been the case as well, right? The late night press conference on the Indian Standard Time gives you the perspective, has been a volatile counter. So while the US market largely flat to a tinge of green, you started, our markets in the red, down almost 150 points, and then recovery and some. The mid-cap and the small cap reflect that as well, right now, because it's been a very interesting day. We've seen both those indexes at the high point of the day from the lows. Much recovery there, and the BSE 500 also gives you that perspective. The small cap 250 is already in the green, so that's a good start. But there you go in terms of the gainers. Shyam Metallics, Rajesh Exports, some gainers there. Credit Access on the back of a strong update, and VMart continues to be on a stellar run since reporting Q4 updates. On the losing front, though, you've seen Jubilant down 7.2%, and the pizza makers, largely, as I was discussing with Mahima earlier today, have just been out of concern. So if you either way you choose a Pizza Hut or Domino's, the companies are definitely not showing that in terms of the like-for-like growth as of now. But let me welcome in our guest for today and start taking all your stock-related queries. Astha Jain, Senior Research Analyst at Hem Securities on the fundamentals. Swati Hotkar, AVP Technical Research at Nirmal Bang. Ladies, thanks so much for joining in. Let me go across, take the first query right away. This one's coming in from Sanjay from Bangalore. Now, his question is between Canara Bank as well as Bank of Maharashtra, a better pick for a 1 year horizon. Astha, very good morning to you and welcome to the show. What would your analysis be for Sanjay at this point of time?
Hi, good morning to everyone out there. Now, talking about between these two counters, I think first of all, we are positive on the banking space, and both of these counters are looking good to us. Now, if I have to select only one, then definitely I would like to go with Canara Bank. And the reason being, we all know the kind of performance they have been posting. It is very, very strong. In fact, the asset quality seems to be very strong, and hence we believe going ahead also the margins will going to remain intact for this bank. Although both these banks are looking good to us, but if I have to pick any one of them, then I would like to go with Canara Bank. However, we know that valuation point should also be taken into consideration, and there Canara Bank may look a little overpriced as compared to Bank of Maharashtra, but still the scope of upside momentum seems to be more in Canara Bank. So I would like to go with Canara Bank.
All right. The next one is coming in on Deccan Gold Mines, and this is from Ramesh, who's writing us from Chennai. He wants a short-term outlook on this one. He's bought 250 shares at the levels of 125, if that's correct. It's now currently trading at 95 odd rupees. Wants to know as to whether he should exit and go to some jewelry stock or continue to hold or maybe average. So I think I'll come to you on this one. The company, of course, is yet to, kind of start generating revenues and has, given tall targets for sure and has been giving in the past 2 years. But do you think it's wise to continue to hold this one? Because it's far from what the buying price of Ramesh stands.
Yeah, on the technical front, as of now, I'm not witnessing any major up-move rally as such, but definitely you can hold on this particular count that the stock has a potential to reach up to at least 105 levels, up to those levels can be, but you have to keep a strict stop loss of 92 rupees on the downside. If it's break those levels, then more selling pressures can be witnessed or the profit booking can be witnessed. So at the current level, I would suggest to hold on, but maintain the strict stop losses.
Got that view, Swati, but amidst what we're seeing in terms of the Israel-Iran war, the renewable energy space has been, back in focus because of energy concerns. And Shankar from Bengaluru is asking us a question on NTPC Green. Now, he's holding 1,000 shares at 98 and asking a view if it's a good time to add 500 another shares at this point of time. Asta, there has been some buying from the lower point for this counter, but largely revenue visible only in FY 27 and 28, as was stated in the IPO. What's your view on the stock now?
What we believe, yes, we can see the revenue coming in flow from some time from now. But other point seems to be very, very strong for this counter. First of all, what we believe that with the government focus on the green energy, definitely NTPC Green will going to be in a very, very sweet spot at this point of a time. And the kind of power demand we are witnessing across the world, I should say, rather than India, definitely that going to help NTPC and the stocks like NTPC Green. So my idea here is definitely one should stay invested in this counter for the longer term point of view, because in the short to medium term, maybe the profitability can be a concern, and hence we can see some, volatile moves. But for the longer term, definitely it is an industment call, and hence one should remain invested for the long term perspective.
Okay, all right. So that's the view coming in on NTPC Green. The next one is coming in from Indore. Rajesh Maheshwari is writing about Ola Electric. He says he has 1,400 odd shares, an average price of 49. Wants to know whether it makes sense to stay invested, add or exit. In fact, I think Puneet will be able to give some perspective on Ola Electric as to what's happening.
Well, the last month was strong in terms of the month of March on a recovery basis and on a month-on-month basis, but the trend definitely has been on a downtick. Stocks up almost 30% in this week. So if you look at the 5-year data, 5-day data, sorry. It gives you that perspective as well. So 1 month stocks down 42%, recovery seen in the last week up 22% as well. So has been back on, and this is the question that Mr. Maheshwari has asked us previously as well. But Asta, coming back to you, in terms of Ola Electric, is there something that you're watching out for in terms of Q4? Because has been a down and out here, right? For the company, sales down over 30 to 40%. What would be your view?
So if I talk about Ola Electric, they are currently offering Gen 3i scooters, Gen 3 S1 scooters and roadster motorcycles. We all know that. Now, what we have witnessed in the past also, when we had a festive season, definitely they have announce certain schemes, etc. But that all will not be able to reap any sort of benefit to the stock prices of the company. And what we are seeing that the company is still not able to perform strongly on the bourses. So my idea here is if one have bought this counter at the higher price, then it's better to just wait for some time and start exiting from this counter at every high point of price. Maybe like 29 right now it is quoting. So maybe at 33 or 32 levels, one should start booking, some or exiting from this counter in the 10% or 20% of the quantity. So this should be the strategy for the investor as of now, because we still believe that there is a long way to go for this company to show its performance or to prove its mettle. Right now, just try to exit from this counter at a very higher level.
Got that view, Astha and Mr. Maheshwari. Hopefully that answers your question. The first caller for today, dialing in from Chennai, Pankaj has a stock query for us. Pankaj, very good morning. Welcome to the show. What's your query?
Very good morning, sir. Actually, 2 months back, I bought RBL Bank 295 shares at the rate of maximum 340 rupees.
Okay.
Shall I accumulate at current levels? I want to know the technical outlook for short term and medium term.
Got it. Got your view, Pankaj. Swati, coming to you on RBL Bank, the counter has been focused. They recently just got an approval for majority acquisition as well by the foreign player. Your view on the charts, is there any up move in the near term?
Yes, looking toward the longer term setups on the monthly charts, the stock really looks very good. If you look towards the monthly chart, the flag pattern is under the formations, the body is under the formations. The upside, it has a very strong breakouts of 323 levels. If it surpasses those levels, then I believe the stock has a very strong potential to reach up to at least 370 to 380. So I will suggest wait for some more time. Stock is under the formation period. Downside, it has a very good support at 290 levels. So by keeping that as a stop loss, you can definitely hold on this particular counter for a target of 370 to 380 levels on the high side.
Okay, all right. So that's the view coming in on RBL Bank. The next one is also for you, Swati. This is on Hindustan Zinc. Our viewer Siva from Amravati is holding 5,000 shares at the levels of 535. Wants to know from a 6 months perspective whether he can continue to hold this counter or not. Considering this counter had rallied on the back of silver prices, today it's again bounced back at trading at today's high point, up by about 1.5%. In the last 1 month, I think it's seen a fall of around 7%, which is still lower as compared to how silver prices have fallen. Your view, considering the charts on this one, whether there is more steam left?
Ma'am, I'm really positive on this particular counter. If you look towards a monthly chart, the stock has given you breakouts of a pennant pattern in the last year, October 2020. And from there onwards, we have seen a very strong momentum rally up to at least 750 to 800 levels on the higher sides. So I believe the stock has again retested those supports levels, which comes to nearby 520, 500 levels. We have seen a depth of 480 on a downside, and slowly and steadily it's moving ahead. I believe at the current market price, those levels are very attractive to take a long positions as well. And if you're looking for a short to longer period of time, my target will be at around at least 670 to 700 rupees. So you can definitely hold on this particular count.
Got that view, Swati. But let's go across, take our next question now. This one's coming in on Container Corp. Now, a viewer, K. Parthasarthi, who is a senior citizen, holding roughly 50 shares of this particular counter at 570. Now, stock's trading at 452, so he's sitting at a loss and he's holding a considerable amount of shares of almost 8,000. Now, his question largely being what he should do now. Astha, would you recommend averaging down at this point of time on Container Corp? We've seen, of course, the volatility within the port space. What would be your view?
If I talk about Container Corporation, yes, we have seen the volatility, and what I believe that going ahead also, we should see this kind of volatility to be here, to stay here. This is what I believe. So first of all, if our investor is very much comfortable with such kind of volatile move, then definitely one should hold this counter. This is what I believe. And otherwise also, if I look after the fundamentals also, fundamentals seems to be okay, because now what we are seeing, that company is able to show some sort of a growth in their throughput. And I believe it is at around 11% of a growth, which they have shown in their throughput. So I think a decent growth of 11%. And in fact, whatever company has achieved as a throughput. It is one of the highest throughput which the company has achieved in their quarter gone by, that is December 2025. So I believe both their international and domestic business has shown some sort of a growth. So it is a good long-term story to bet upon. In the short term, definitely we believe that we can see some sort of a volatile move. If someone is comfortable with such kind of volatility, then definitely it's a case for here to stay invested in. So idea here is stay invested in for the longer term perspective.
Invested in Concord is the view coming in from Asta. We've got our next caller. Suraj is calling us from Gujarat. Suraj, a very good morning to you. What's your query about?
Good morning. So I have 100 shares of Paradeep Phosphate at 110 price.
Okay.
So what is the technical chart view of the same?
Okay, Suraj. What's the time horizon that you're looking at?
3 months.
Okay, got your question. Swati, your view on Paradeep Phosphates from a 3 months perspective?
My view is currently positive because we have already seen the price correction in this particular counter in the last few months as such. And now the counter is under the formation of the support zones, and it has multiple cluster support zone has been built up at around 105 levels. Upside, it has a strong resistance at around 118. If it breaks those levels, then a smooth rally upside can be expected towards to at least 130 levels. So at the current level, I will suggest to hold on this particular long positions with a stop loss of 105 rupees on the downside.
Got your view, Swati. But before we take any more queries and viewers, you can call us, speak to us directly for stock-related queries as well. Time now to quickly, dive into the BSE F&O market setup, and Sharad is joining us to give us that perspective. Sharad, good morning. Over to you.
Good morning, Puneet. And over the last two trading sessions, we have seen that the opening is always wobbly, but then a good recovery comes. Yesterday, we saw that, and today also, we are seeing a good recovery coming in, especially from the IT names, even Bharti Airtel holding that's fourth. Of course, the banking names haven't participated much as such, especially the drag coming in from HDFC Bank and SBI as well. But net, the market is at its recovery phase. But remember, there will be volatility as the geopolitical tensions and the RBI MPC, they still remain the main key factors. Let's pull out the BankX and see what's happening here and what are the stocks which should be in focus. And of course, there is no major contribution coming in, but there is, of course, long build-up happening, especially for Vedanta and Hindalco. Good broking upgrades coming in for most of the players in the metal space, and that is where we are seeing some action. Short covering for HCL Tech and LTM Mindtree. I had mentioned about the IT stocks where the interest is there, especially in the mid-cap space. That's where you should be tracking. And if you look at the long unwinding, we have Uno Minda and Bharat Forge. Of course, it's reacting to the numbers also in the global class 8 orders from North America as well. Short build up for K Fintech and Jubilant Foodworks. There's a significant positions building in the shorts. A sell-off is also happening, and of course, we will understand more about this in a deep dive as well later on. But these are the important stocks which you should be focusing on in the F&O space.
Got the view. Thanks so much for that, Sharad. But let's go across, take our next query. This is coming on Kalyan Jewelers. Now, Narayana from Andhra Pradesh actually wants a 3-month view on this stock. He's holding shares at 424. Swati, you've been bullish on this counter in the past. We also saw a decent update coming in, Mahima, for Q4 as well, right? I mean, the revenue growth was strong, but so was the same-store sales growth.
Yeah, I think it's buzzing on the back of that only. A 45% growth in terms of where same-store sales growth stand, which is quite significant. I think that is why the stock is also rallying in trade today. Otherwise, also, I think good festive season for the counter overall, plus gold prices rising has kind of benefited that 65% growth in terms of where domestic revenues go. So overall, a strong Q4 update coming in. Swati, your view quickly on the charts from a 3-month perspective?
See, on a 3-month perspective, the view, we are likely to witness some sort of a pullback rally, but I'm not bullish on this particular counter, and the pullback rally is likely to be extended towards to at least 450 to 460 levels. So my view is not much positive on this particular counter. If you're having any long positions, you can hold on by keeping a tight stop loss of 405 rupees on downside.
Got that view, Swati. But taking across the next caller from Delhi, Mayank has a stock query for us. Mayank, good morning. Welcome to the show. What's your query?
Good morning, team. So my query is I have brought Hindustan Copper 1,000 shares at 720. So should I average it out or for the time being I should hold it?
And is this a short-term pick, Mayank, or a long-term one?
So what I'm planning, maximum I can hold it for 6 months or 1 year.
6 months. Okay, got it. 6 months to a 1 year perspective, Swati, on Hindustan Copper, because he's bought it at 720. and holding roughly 1,000 shares. Would you recommend him to average down? What would be your view?
I would suggest to hold on for at the current market price, but average it out you can definitely do, but not at the current market price. If you're getting any dips towards to 450 and those levels are at the attractive level, risk reward ratio will be favorable. So wait for some more time because already the stock has just touched the fate of 20 DMA. We might witness some sort of a profit bookings because 80 points momentum has already been seen in a span of 4 to 5 trading sessions. So wait for some more time. 450, 440 levels are the good levels to take average out positions. For a shorter period of time, my target is at around 550 to 600 rupees.
Okay, in fact, he's bought it at quite elevated levels because the highest it saw was 760, I think in Jan end. And that's where he's probably gone ahead and bought, thinking that the rally will continue. And everyone thought that, right?
The copper prices have actually stayed in that sense, but you've seen a correction in those stocks. Quite significantly, and an opposite reaction to the silver stocks in that sense.
Exactly.
So it's a very interesting trend what's playing out in the markets at this point of time. So you can see the stock, this year of course has been flat, but you see the spike at 760 that Mahima highlighted, and then a consistent pressure on the downtick for Hindustan Copper continues to be one that we are monitoring here at Ask Profit. But the next question coming in from V. Murli from Bengaluru. He's holding shares in VST Tillers at almost 5,369. Astha, he wants a 18-month view on the stock. Stock's very close, now down to almost 5,100 rupees, but it's done very well, right, Astha, in the last 1.5 year. Are these levels elevated? Would you tell Murli to continue to hold at this point of time? What would be your view?
So if I talk about the business update, also what we have seen in the business updates, that business updates were not so much encouraging, which we have seen for the current period. So first of all, this is what I believe, that somehow their business updates are not showing that sort of a strength. Now talking about this is monthly business updates I'm talking about. And if I talk about the other fundamentals also, other fundamentals seems to be okay. But the kind of environment which we are into at present moment of a time, I believe that will take some more time for this company to show its performance. And hence, it's a pure long-term story to believe on, because in the Q3, definitely their performance was one of the highest quarterly turnover they have posted. In fact, their profitability was highest ever profitability for the 9 months. The cash generation has shown a very strong improvement, and power tiller sales which they have shown till Q3. If I take out the business updates of this month, then the previous updates for the 9th month was very strong. It was around 55% growth with the 18 to 20% growth in the domestic tractor sales. So right now, I think they are going through the volatile times, and hence maybe in the short term we can see some volatile move, but it is a good long-term story to believe on. Remain invested for the longer term point of view. Maybe in the short term we can see some sort of hiccups because of the monthly updates which are not very strong, but it is a good long-term story to believe on. Stay invested with a price target of 7,000.
All right, so that's the view coming in on VSC Tillers. But viewers, it's time for our first rapid fire round. Swati and Astha, you both know the drill. I'll start by taking the first question, which is on TCS. Mukund from Bengaluru is holding 100 shares at the levels of 3,800. Astha, it's set to announce its earnings. Your view?
View is positive, but 3,800 will take some time. So be patient and hold this counter for the longer term time period.
Ashapura bought by Muralidharan at 597. Swati stocks down 42% this year. Your view on this counter?
My view is positive at the current market price. Definitely you can hold on for a target of 540 to 550 levels.
Okay, Eternal is the next one. Akash's buying price is 273. He wants to know from a 2-year perspective, can he average at the current levels? Astha, your view?
Averaging at a lower level is recommended, maybe at around 210 or so. But price target can be set at 270 for the initial levels.
Jana Small Finance Bank bought at 450. Astha by our viewer Biswajit. What should he do for the next couple of years?
Remain invested in this counter. 450 is not a high price. Maybe we will see these prices in the 6-month time horizon. Remain invested.
Okay, KPIT Tech is the next one. Muralidhar from Bengaluru is holding 440 shares at the levels of 698. From a few weeks perspective, Swati, can you continue to hold?
Yes, definitely you can hold on for a target of 800 rupees.
Lalita holds Fujiyama. Astha bought at roughly around 228, so very close to the current market price. Should he continue to hold? What's your view on the stock?
I think try to exit from this counter, at least partial exit is recommended.
Okay, BHEL, 760 shares bought at the levels of 260 per share. Bought 1 month ago from a 2 to 3 months perspective. Can he continue to hold? Biswajit Thakur wants to know. Swati, your view?
Yes, you can hold on this particular counter, keep a stop loss of 230 rupees and immediate bounce back rally can be seen up to 260 to 270.
Jubilant Pharma, is it a good time to enter the stock now? Swati is what Sahib is asking.
Yes, 20-30% quantity are recommended at the current market price. The initial target will be 950, then 1000 rupees can be seen.
Okay, fresh entry in Avanti Feeds. Does that make sense? Vanita Bala from Kuwait wants to know. Swati, your view on the charts?
Yes, you can go for a long at this position. Stock is on the verge of breakout. 1350-1400 levels can be seen.
Ravi is bought into Polymedicure Astha at 1520. He's a long-term investor. What would be your view on the stock for the next couple of years?
There is a good long-term story to bet upon. Remain invested in this counter. He will definitely see his cost price.
Okay, Uday from Bangalore is asking about UCO Bank. 3,000 shares bought at the levels of 32. From a short-term perspective, can he continue to hold, sell, average? Your view on the chart, Swati?
I would suggest to hold on. Any pullback rally towards 28 rupees should be utilized to exit the longs.
Vijay wants to buy into MRF at this point of time. Astha, should he wait for Q4 given the volatility in crude?
He should wait before making any sort of investment in this counter. He can enter at a lower level, which is quite visible at this point of time.
Okay, the next one is on Laurus Slab. Our viewer wants to know whether he's bought it at the levels of 1059, but what's the nearest target that you can see on the chart, Swati, for this one?
Nearest target field will be at around 1140 and beyond at 1200 rupees can be seen.
Union Bank bought 174 rupees per share, almost 10,000 shares. Astha, should he continue to hold this counter?
Yes, one should remain invested in the Union Bank as private banking space is looking good to us and he can see his cost price coming soon.
Okay, Nalco is the next one. Sunil from Pune has bought 200 shares at the levels of 412. Short-term target and stop loss for this one, Swati?
400 rupees the immediate stop loss can be kept and upside at least 440 to 450 levels can be seen.
Okay.
Reliance Industry, Astha, is it a good time to enter? Is what our viewer is asking.
Maybe at a lower level of around 1250 is a good time to enter.
Got it. Well, that's the end of the first round of the rapid fire in this edition of Ask Profit. But Swati and Astha as well as viewers stay on. A lot more stock related queries after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
To understand the Tamil Nadu twist, Join me in the midst of people, language, and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go.
Welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either call us or WhatsApp us your stock-related queries, and we'll be more than happy to answer them. The next one is coming in on all cargo logistics. Our viewer wants to know whether it makes sense to take an entry right now from a 2 years perspective. Asta, I'll come to you on this one. Your view on all cargo?
I don't think that it is the right time to make entry into this counter from the 2 year perspective, maybe at a lower level, because the kind of results they have posted and the valuation I'm not very much comfortable. So let it fall more and then make any sort of entry. Even after witnessing the result, it will be a good choice or it will be a good decision to make an entry into this counter.
Sticking with you, Asta, for another query by Kalpana. She wants to enter into escorts for the long term. Now, volume growth has been quite decent, Asta, in the last year, underperforming Mahindra though. Stocks at a 52-week low. Is it a good time to accumulate?
Yes, escorts is looking good to us, and definitely I believe that one should start accumulating this counter at the present moment of a time. We believe that escort is such a counter where we can see the rise in volume growth going ahead also, maybe in the coming 3 to 6 months. So right now, the sustained tractor momentum is what we have witnessed in their results, which has shown some sort of a growth in their financial performance in the last quarter also. My idea here is escort is such a stock where one should start accumulating.
Okay, the next one is coming in from Sai, who's writing us from Ireland. Now, this is a question that we get a lot of times, Asta, to pick between ITC hotels and Indian hotels from a long-term perspective, and this is from a 5-year perspective. Which of these do you think it makes sense right now to enter? Of course, the hospitality space as a whole is getting impacted because of the West Asia conflict, but overall, from a 5-year perspective, which one of these do you like?
So we like Indian hotel as of now, because if I talk about Indian hotel company, first of all, the kind of results they have posted that were very, very strong. What we have seen that their revenue is continuously growing with a 12 to 14% jump, which they have posted. So strong revenue growth, strong pipeline is there for them to, show some sort of a growth. And the management has also showing some sort of, interest in the new business acquisitions, which will help company in sustaining margins. So idea here is Indian hotel is looking better between these two. And one should start investing in this counter, maybe in the tranches, not a lump sum investment is recommended at this point of time.
Dilip from Hyderabad actually has been eagerly waiting for his query to get answered. He's holding IRB Infra, bought at 36 rupees per share, stocks at 20 now, and holding 1200 odd shares. Now, he's asking if he should continue to hold. Asta, I'll just stick with you for this one as well. What would you recommend on IRB Infra at this point of time?
So IRB Infra, I believe that one should continue to hold this counter, because their O&M order book is very, very strong. And the kind of tall collection which they have shown, that will really help the company in showing or supporting the earnings in the coming months. So IRB Infra, I think one should remain invested in this counter, and whatever price target which we are setting for this counter is on the higher side. But right now, I'm limiting my price target to 25 to 30.
Okay, the next one is coming in on Precall Limited. Ramesh from Bengaluru is holding 20 shares, bought at the levels of 670. Currently, I think the stock is trading at what, 530, 533. Wants to know whether he can continue to hold this one or not. Swati, your view on the charts on Precall?
Yeah, at the current market price, Mahima, from the last 2 weeks, it's showing some sort of a recovery rally. So I will suggest to hold on. This pullback rally can be extended towards to 550 to 570 levels. So any rise up to those levels should be utilized to exit your long position. My view is not much positive for longer term duration.
Swati, also on Jupiter Wagons, actually Richa holds 1,000 shares bought at 320. Now she's asking a short to medium term view on the stock. We also had a brokerage note yesterday preferring Titagar over Jupiter Wagons, but on the charts, what's the view on Jupiter now?
See, from the last 3 to 4 trading sessions, it's really doing very well. If you look towards the short-term angle, as such, the stock has given the breakout of the pennant pattern, and this rally is likely to be extended towards at least 320 will be the initial targets, and beyond that, 340 levels can be seen. So wait for some more time. The stock is under the positive momentum, so you can definitely hold on the long positions.
Okay, the next one is coming in from Kurshid, who's writing us from Delhi, asking about SBI. He says he wants to invest 1 lakh rupees in this one and wants to know whether this is a good time to buy SBI from a long-term perspective. Astha, your view?
SBI is like one of the PSU banks which we are really positive on at this moment of a time, and hence yes, one should start accumulating this counter and start buying this counter, because first of all they have shown the record earnings growth, their asset quality as its best in the last few years, what we have seen. And the most important point, if we talk about the margins are showing some sort of a resilience. So SBI is one of the bank which we are really positive on in the PSU banking space, and definitely one should start investing in this counter. But I would like to recommend again that don't invest lump sum amount, because if markets remain volatile, then SBI can be available at lower prices from here as well. So there will be opportunity to invest at those levels. So start investing in tranches, maybe some investment at this price and some investment at the price of 980 to 950 odd levels.
Got the view, Astha, but another caller now from Bengaluru, and our viewer has a stock query for us. Vinankat, I hope I'm pronouncing your name correctly. Welcome to the show. What's your query?
Yeah. See, this is regarding the query of Natco Pharma. And I am holding 150 stock at the rate of 1052. That is the average pricing. But I bought it about 2 years back, 24 March, I bought it.
Okay.
And I am today only slightly, the profit has come. And this is about slightly more than 10% of my portfolio. Should I hold it for about more than 1 year or 2 years to make a good, at least about 20% margin? Will I be in a position to make it in about a year time?
Got it. It's a very pertinent question, and let me go to Astha for this. Astha, on Natco Pharma, he's patiently held on for the last 2 years, and we seem to be seeing a lot of positive price action now coming in on a clutch of these names. Would you recommend him to continue to hold at this point of time, because it's very close to his buying price as well? What would be your view on the stock?
So if I talk about Natco Pharma, first of all, what we are seeing that the Revlimid is seeing a strong competition from other peers as well. So there we can see some sort of moderation in the revenue. But what is positive about this company is the Pomalist, which is one of the key drug of the company, or generic Pomalist. So I think that will going to help the company in posting good set of numbers going higher. And management is also very much focused on their long-term growth stories, along with the domestic momentum which this company is witnessing. So I think going ahead, we can see this momentum to continue or expect some improvements also, because now the company has started making partnerships in their generics business as well. So we believe Natco Pharma is well placed to show some sort of a movement at this point of a time. The only thing which we believe that the valuations are now appear to be on the higher side. So the scope of upside momentum is limited, but remain invested in this counter with a price target of 1150.
Okay, so that's a view on Natco Pharma. The next one is coming in from Sudhir, who is writing us from Mumbai, asking about Godrej Agrovet, whether this is the right time to kind of make an entry into this counter. Astha, I'll stick with you for this one, because rising crude oil prices will kind of benefit its vegetable oil segment, but at the same time, the food and crop protection segment will get impacted because of rising crude prices. Your overall view on this one?
So, if I talk about Godrej Agrovet, first of all, I would like to throw some light on the results. What we have seen in the results were good. It was a margin, expansion which we have witnessed in their numbers in the Q3 of FY25, along with the growth which this company has posted. So their operating performance was very, very strong. Margin expansion was there, and they have shown some sort of operational efficiency as well. My idea here is, yes, this is a counter which seems to be good on the long term perspective, for the long term perspective, and hence one should remain invested in this counter. Maybe buying at a lower level of around 550 to 540 is recommended also for this counter. So this counter is a long term story to play upon, but buy at the lower level is recommended.
Okay, all right. So that's the view coming in on Godrej Agrovet. We've got our next caller. I think Pavitra is calling us from Bengaluru. Pavitra, very good morning to you. What's your query about? Hi, Pavitra. Can you hear me? Okay.
Yes. I can hear.
Go ahead. Ask your question.
Yeah, I'm holding STL Networks, 1200 shares. So at the rate of 32, around 32 rupees. Currently, I'm at around 40% of loss. So actually, this I bought it for short term, but after my purchase, it's the stock is falling down. I couldn't book the loss. So now what I should do? I still book the loss. I should need to book the loss, or can I wait?
Okay, Pavitra, got your question. I'll take this up with Swati. It's a slightly, small company, 900 odd crores of market cap, but nearly half for Pavitra, right? Swati, your view on the charts?
Currently, the counter is under the momentum from the last 2 to 3 trading sessions. The overall view is little bit cautious, but yes, this pullback rally or say the bounce back rally can be expected to be continued till at least 21 to 22 levels. So every rise towards those levels should be utilized to exit your long positions, rather than you better switch this particular capital into some other quality counter.
Got your view, Swati. And viewers, you can also call us for stock related queries. Last 15-minute stretch here in the morning edition of Fast Profit. Next query coming in, from Balaji. He's asking about FINA, which is the other company of Federal Bank, the subsidiary as well. Now, his question largely being that he's holding shares at 150 and bought almost 100 shares at this point of time. What he should do with this counter, Astha? The numbers have been strong. Gold loan exposure has been decent for this counter, but stock's not showing any of that movement, right? What would be your view on the stock now?
So what we have seen in the FINA, because the IPO came, few months back, I suppose. Bank Financial Services, it is by the name of Bank Financial Services. So the IPO came, but it was not able to perform that strongly on the bourses, first of all. So that is the main thing. Now, if I talk about the Bank Financial Services, we have seen some sort of an improvement in their return on asset. But that was in the previous quarters. Some sort of credit cost moderation was there. That helps the company. In fact, the gold loan was also very strong. But afterwards, we were not able to see that sort of a performance which they have posted 2 quarters back. Hence, we have seen a moderation in the stock prices also. Right now, Bank Financial Services or FINA is not looking very, very strong to us. So idea here is either wait for a very long term, maybe more than 8 months to a year time horizon. Otherwise, I think this stock can see some sort of pressure in the shorter term horizon.
So that's the view coming in on FINA. The next one is on HDB Financials. Our viewer Sandeep Vaidya has bought at the levels of 740. Wants to know whether they can remain invested or sell. Swati, your view on the charts for this one?
My view is not a bit cautious at the current market price, because the counter is facing a very strong resistance nearby 590 rupees. I will suggest to place a stop loss of a 575. If it's break those level, then more profit bookings likely to be seen, which will take a stop loss to 560. So keep a stop loss of 575 and hold your long positions.
The next question also coming in from another caller from Delhi. Dimple has a stock query for us. Dimple, good morning. Welcome to the show. What's your query?
My query is it the right time to enter Dhanuka Agritech?
Got it. And would this be a short-term bet, Dimple, or a long-term one?
It can be for long-term also. More than a year I can keep.
More than a year you can hold. Got it. Astha, on Dhanuka Agritech, would this be a good time to add this counter?
So if I talk about Dhanuka Agritech, first of all, adding this counter at the current level, I would not suggest, because I should wait, or I recommend that one should wait for some more valuation correction in this counter, as we have seen like other counters like Sharda Cropchem in their peer group is looking more reasonable at this point of a time as compared to Dhanuka Agritech. So their valuation is somewhere at around 16 or 17 price to earning multiple, while the other counters are quoting at a lower level. So first point regarding the valuation. Secondly, what we have seen in the Dhanuka Agritech is that their quarterly sales numbers were not very strong. In fact, they have shown the degrowth in their sales figure. So again, not very much optimistic. Not only degrowth in the sales, but also in the profitability. So my idea here is that don't enter into the Dhanuka Agritech at this point of a time. It is a better choice to just wait for the numbers to come in and then make entry into this counter, because past performance is also not very strong.
Okay, all right. So that's the view on Dhanuka Agritech. The next one is coming in from Rajesh, who's writing us from Bengaluru, asking about Brainbees, that is First Cry. Wants to know if this is a good time to make an entry into this counter. Swati, I'll come to you on this one. The stock is up almost 14% as we speak. Does it make sense to make an entry right now?
Not at the current market price, because already we have seen a very positive momentum in this particular stock. Wait for some more time. If we find out any correction towards to at least 450 levels, then 240 levels, then you can go for a long positions. Wait for some more correction, and then you can add on the quantity at 240 levels on the dips.
Okay, Astha, any quick view on Brainbees?
So if I talk about Brainbees, I think the stock has already shown very strong momentum, and from the valuation perspective also, it has now start showing some sort of a stretch valuation. So right now, don't enter into this counter at this point of a time. Already valuation wise, it is on the higher side.
Valuations high for Brainbees is what Astha's view is on the stock as well. But another caller from Delhi, Sanjay, has a stock query for us. Sanjay, good morning. Welcome to the show. What's your query?
Yeah, morning. Yeah, my query is regarding RVNL. I bought it a few days back.
Okay.
And still it is not going up, and it is falling each and every day. At the level of 270, I am having 1,000 shares. So my short-term view is for next 3 months. Shall I buy more to average it out, or shall I exit?
Well, got your view, Sanjay. But Swati, stocks down 28% almost in this year itself for RVNL. Is there any chance of an up move even from these current levels after this downtake? What would be your view?
See, the downtick has been witnessing from 2024. The stock is slowly and steadily under the pressure, not showing any sign of a reversal, whether it's on a daily or the weekly charts. I believe it might find out a support nearby 240 to 220 levels. So more downside is expected at the current market price. No need to initiate the long positions at the same way. Wait for some more time. If the stock manages to build up the support at 240 levels, then we will see some turnaround, and which will take a stock back towards 300 to 340 levels. So at the current levels, my view is little bit cautious. No need to hurry, book the losses, or even create the long positions at the same way.
Okay. The next one is coming in on Timex Group. I mean, I don't remember if we've gotten a question on this one for the longest time. Yeah, it's been a while. Our viewer Jayesh Parekh from Mumbai wants a view on this particular counter considering the current market price. Astha, would you recommend an entry into this counter at this price?
So valuation wise, it is quoting at a price to earning multiple of 45, which seems to be on the higher side. If I talk about the valuation of peers like Kalyan Jewellers for the sake, or maybe PN Gadgil. In fact, PC Jeweler, I should not consider that counter because the fundamentals are not very strong. But Kalyan Jewellers and PN Gadgil, they are showing good valuation figures right now. So my idea here is let it correct more and then make entry, because valuation wise, it seems to be on the higher side. With the price to earning multiple of 46, it seems to be on the higher side.
Got that view. You also had some kind of promoter selling, also pairing stake. They still hold over 50%. But in December, very close to the current market prices, where you saw some reduction and stake sale by the promoters as well. But another query now, and another caller actually from Andhra Pradesh, and Bharat has a stock query for us. Bharat, good morning. What's your query?
Good morning, sir. I am holding 727 shares of SPM Infra at the price of 203. What is the target and stop loss of this stock?
And would this be a long-term bet, Bharat, or a short-term one?
Long-term, sir.
Long-term, got it. Astha, on if you have any coverage on SPML Infra, Bharat holds shares at 203. What would be your view on the stock now?
So stock seems to be okay because what we have seen in the financial performance is sort of a growth on year basis. This is, I'm talking about the top line as well as operating profit. In fact, if I talk about the margin as well, margin has shown a very, very strong jump because it was 11% operating profit margin, which they have posted for December numbers, while these margins were very slow if I talk about their last year numbers. So I'm in good stock at this point of a time from the financial performance point of view. But now, from the valuation point of view, it is quoting at a price to earning multiple, which seems to be on the higher side as it is quoting at a price to earning multiple of 23. So higher than its industry average. And hence, I think we are not seeing this strong performing so strongly. Let it correct more and then make any sort of decision in this counter. Meanwhile, we'll also get the numbers. So I think then it will be a right time to make any sort of decision after the numbers.
Okay. All right. So that's the view on SPML Infra. The next one is coming in from Satya, and he says that he wants a view on Inox Wind, bought at the levels of 180. He says every time I've been advised to hold it from a long-term perspective, but wants to know a combination view. So, Swati, firstly, your view on the charts for Inox Wind, what would you recommend?
Hey, looking towards the current market momentum, the counter is under the formations of the positive divergence, and I'm witnessing that the counter is stuck within the range of 75 to 85 or 84 rupees. So it is under the consolidation phase. Any move on either side will decide the clear trend of this particular counter. But I believe the stock has a potential to reach up to at least 90 levels in a short period of time. So if you're having any longer positions, you can definitely hold on. Downside, you can keep a stop loss of 77 rupees and for a target of 90 rupees on high side.
Asta, your quick view on Inox Wind?
Inox Wind, I believe that their profitability should show some sort of more increase, and hence Inox Wind right now not very much comfortable for entering. Maybe at the lower level is a good choice to enter into this counter at the price of around 70 to 72 rupees.
Got the view, Astha, but time now for the second round of the rapid fire in this edition of Fast Profit. Astha as well as Swati, you know the drill. The first question coming in from Anita from Vijayawada on Eicher Motors, holding shares at 6625. Astha, is there a good time to add more at every dip?
I think adding at a dip is recommended rather than at present moment of time.
Okay, Chair is the next one. Jeet from Kolkata wants to know whether he can continue to hold this from a long-term perspective, and target price has got 63 shares at the levels of 4247. Astha, your view?
I think one should wait into this counter and don't accumulate at this point of a time, maybe at the lower level. Must remain invested in the whatever quantity investor is having.
Okay.
Mr. Iyer is holding shares of Mahindra Finance at 354. Astha stocks trading at 276. Should he average?
At a lower level of around 270 to 265.
Okay, Tex Macro Raid is the next one. 16,000 shares bought at the levels of 196. Can I continue to hold this from a long-term perspective? Astha, one more question for you. Arun is asking this.
From a longer-term perspective, its recommendation is hold definitely, but it will see some slow moves. So be ready for that.
Rahul's holding Irida at around 160. Swati, what would be your view? Should he average now?
Yes, he can average around current market price. The short-term target will be 135 to 140 levels.
Okay, the next one is from Narasimha Reddy. He wants to know whether he can increase his investment in something like a Marico at the current levels. He already owns some quantity, but Swati, your view on the charts?
I would suggest to wait for some more time. Any dips towards to 640, 650 are the good attractive levels to build up fresh long positions, not at the same.
Tata Motors commercial vehicles bought at 423. Astha, we've seen a correction from the 500 odd levels. Is it a good time to add?
A lower level because correction I think can be witnessed more in this counter. So lower level of 370.
Okay, Vishal Megamart, does it make sense to make an entry right now or wait for some time? Swati, your view on the charts?
I will suggest to wait for some more time. The stock is under the positive phase. 125 to 130 levels can be seen very soon, so you can hold on.
Okay.
Ekambarai, who's a regular viewer, is holding shares of Patel Retail at 225. Astha stocks trading at 172, a very small counter. Should he continue to hold?
Since IPO, this company has came with I don't believe in the fundamentals, so I think start exiting from this counter.
The next one is on Vodafone Idea. Can I invest 1 lakh right now in the counter? Swati, your view on the charts?
No, I will suggest not to take a long position at CMP. Apart from this particular counter, Bharti at 10 looks good. So buy in the installment, not at the idea as such.
Okay.
Harish is holding on to NSDL at 1,050 Astha. He's asking a good time to buy more if we'll come back to his buying price.
So 1,050 is the cost price that she is holding, and 890 right now it is quoting. So I think buying more can be recommended, which can make its average cost price at the lower level, but at around 850.
Coforge is the next one. Anwar from Andhra Pradesh wants to know if he can invest 1 lakh rupees from a 3-month perspective. Swati, your view?
Yes, at least 50% amount can be invested at the CMP. The stock has a very strong potential to reach up to 1400 levels. So you can go on.
Okay.
Nancy wants to add an auto ancillary stock. Astha, what would be your recommendation for the long term?
The Uno Minda is one of the counter, but Motherson is also looking good to us.
Yes Bank is the next one. Astha S. Das from Bengaluru wants to know if she can continue to hold the 2,700 shares that she's bought at the levels of 19.5 from a 1-year perspective.
Yes, from the 1-year perspective, Yes Bank is a hold.
Parikshit holds Wockhardt Pharma. Is that a better pick at the current market price, Astha?
Wockhardt Pharma is looking good. We are positive on the pharma space, but we are very much positive on Granules India.
Okay, Jubilant Food. Is this the right time to buy for the next 6 to 9 months perspective? Swati, are we on the charts?
Jubilant Food at the current market price, buy at least 20-30%, not at the whole amount as such, because more depth can be seen towards at least 400 to 380 levels. Those levels are the very attractive. But if you don't want to miss out the position, then 20-30% are recommended.
All right, so that's the view coming in on Jubilant Foods. Of course, trading at its day's low point almost. Probably could hit a lower circuit as well today. But Swati and Astha, thank you so much for taking our time and helping us answer all those 65 queries on this edition of Ask Profit. Viewers, we are completely out of time on Ask Profit, but do stay tuned. KYC up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, the hottest show amongst all the KYCs, and I get you very interesting companies. Some make you money, some keep you alert so that your wealth is preserved. But let's see which company is there today. But before that, I'd like to give you some hints. Try to guess it and it's very easy. It's the only listed player in the IVF space. You have been hearing about it, you have been seeing it in your cities, and now we are going to talk about this company. It was recently listed February 27, 2026. सिर्फ एक महीना ही हुआ है listing का. But from there onwards, the stock price has been stable. It's trading flat near the range of its IPO price as well. And the company in perspective, which I'm going to talk about, is very important because it's the first mover. But does it have the first mover advantage? That's the question. The company in focus is Gordium IVF and Women Health. This is the company we are going to talk about. But why are we calling this company right now? What's the main rationale? Abhi kyun la rahe is company ko? First and foremost is, of course, it's recently listed. So we want to know a little bit more post its IPO, what happens, what are the industry key growth triggers, how is the company positioned, does the company have a moat, especially on the B2C front? These are the questions we'll be asking. The second important reason is why the margin saw a big dip in Q3. IPO के पहले अच्छे numbers थे, IPO के बाद क्या margins कम हो गए? क्यों? That's the question. Another question is, of course, going to be on the return ratios as well. What happens here? What's the guidance ahead? Company hasn't given much of the operational numbers, so we need to understand which operational numbers should we be tracking in the future going ahead if there is an interest in this counter. Also, the expansion plans for 2027, we know that the IPO proceeds will be used in that. They have international presence also, so we'll understand how does this hub and spoke model actually work when it comes to expansion and the key trends which are there in the Indian IVF industry. We know it's there in tier 2, tier 3 cities, and bigger places are there. Even I have visited, tier 2 cities like Siliguri, Bagdogra. Everywhere I have seen a lot of these IVF showrooms popping up. So it's a very important trend for the India and our modern lifestyle as well. To give the industry perspective and also about the company, we'll be joined in by Dr. Manika Khanna. She's the chairperson and MD at Gordium IVF as well, where she will help us out with how the company is going to go ahead with. But moving on, let's understand the company first. What does the company do? IVF as a whole, we know what it is. It's a very important portion of our modern lifestyle right now. It's engaged in vitro fertilization treatments and women's health services. This is an ancillary as well, but IVF is something which we'll talk about, and this is gaining traction everywhere. This operates on a hub and spoke models with 30 plus locations. There is international expansion at play also. We'll understand that more from Doctor. And the alliances which they are having is with the infertility experts, where they are going to raise awareness for art and IVF. These are interestingly announcements around this industry, and we'll understand a little bit more. थोड़ा technical होगा, इसलिए हम डॉक्टर से पूछने वाले हैं, डॉक्टर खन्ना से, कि ये क्या डिटेल्स आने वाले हैं. There are several international patients, and this is the angle of the medical tourism which I'm talking about. It is still cheaper to do IVF treatments in Asian countries. Even Thailand is there, India is definitely there. So this is a good angle for growth. So we'll understand this as well, how things pan out. And the company was incorporated in March 2015, having a pan-India presence going forward as well, and it's India's first publicly listed IVF chain. First mover advantage, or some issues are there with the bigger players coming in, that time will only say. Now the IVF is for the non-acute episodic care business, means it's not very recurring. There's no customer stickiness, just to simplify it for you. So this is type of a model if I compare with other medical services. And of course, the recent announcement was AI has been introduced in the infertility treatment. It seems very technical, so we will understand from Dr. Khanna about the entire procedure and what actual benefit comes in and definitely the stakeholders will slowly understand as well. And these are the key development happening recently for this company. But AI integration is something which we will talk about, and this is something we should definitely talk about in our families as well. Complications do happen. Erica, this is the embryo ranking intelligent classification assistant as well. But enough of AI, let's go back to the industry. Potentially कितना बड़ा industry है. भारत के market size देखे almost $0.9 billion. That's the industry size we are looking at. But let's look at the other data also and see what's there in store. Projected growth, it's decent, not a very massive expansion. 12 to 14%, that's largely in line with what the other industries are doing. And industry potential, the margin generally is 10 to 12%, but interestingly this company is having a higher margin. Why? We'll understand that. Cost per center, if you open it, आपको दुकान खोलेंगे तो 3 से 4 करोड़ रुपए का लागत लगेगा और 3 से 5 साल में वो पैसा वापस आएगा. That's the payback period I talk about. But why is Street skeptical about this? There's a lack of analyst coverage. It is of course a small cap, and that's why it's my duty to get you these companies in KYC so that you understand and make informed decisions. The larger IVF players, they are lining up for IPOs. A lot of PE and VCs have taken positions, so they might have a better pricing power, or they might come in with a lot of interest moving towards them. Scarcity premium right now the company is having, but that may come off. And if that comes off, then we'll have more players coming in, and we're already seeing a lot of competition happening, and that's the key reason we are coming to it next. But Street is also skeptical of other reasons also. We'll try to understand, and the company should make us understand why the overall situation is a bit changing. The patient acquisition and retention, this is on the lower side because they have a lot of competitions, and generally this is not a recurring revenue model, and this is potentially low. This is like a one-time kind of an investment coming in. And there's one more thing which kind of viewers wrote to me and they want clarity, is the legal overhang of an IPO related matter. What is that? Is there an overhang on the stock, or is it some small issue? We need to understand and get that from the management. But right now the Street is skeptical of Gordium IVF as well. But nevertheless, it has the benefits of the first mover advantage. Only time will say. But let's see the ratings, how we'll judge the company here. And of course, I have tweaked it because it's a recently listed company, so some parameters are tweaked. Of course, the holy grail of financial numbers, income statement, balance sheet and cash flow, these three will be recorded. We'll look at the return ratios, how things are panned out. And remember, most of the data we have taken is from RHP because company to abhi list hui hai, naya data aaya kahan hai? Shareholding, we'll see what has happened. Street trade, of course, from the IPO price, we'll talk about it. Largely, it has been flat. Key ratios, this is what I've taken instead of taking the valuations. I've of course added the valuations, but I've added a couple of more key ratios, and we want the company or the industry to give us more details about this IVF industry when it comes to the operational parameters. Then it becomes easier to quantify a company. It's not just going to be income statement, balance sheet. This is a request to all the IVF players who are coming in for their IPO, and the outlook, the industry and the company's growth, ये अलग कैसे है? क्या business mode है company का as compared to the industry? 8 parameters we'll be judging this company on. First one, let's start with the income statement. Largely, most of them from RHP, the data has been taken. The revenue, EBITDA, they have been doing well. That's roughly around 24 to 31% of growth coming in. And if you talk about the PAT numbers, that's also roughly 28% growth coming in. So this number has been decent. We have seen it from the IPO, but my concern starts coming in is not till the IPO. Till the IPO, everybody knows the story. After the IPO, the story changes a bit. And this is where a little bit of my concern comes. Of course, the net profit has done well, but revenue margins, there's a big dip in the margins. Why is that? Is this a one-off, or is this going to sustain going ahead? The entire calculations changes because before the IPO, the story was different. Post-IPO, Q3 numbers are not satisfactory at all. And even the margin trajectory, we are expecting something in 35 to 40% margin trajectory. And then suddenly there's a big dip of, and it's coming in at 28%. Is there any kind of adjustment? That's what we need to ask from the management. Is one of the first questions I'll be focusing on because it's very much important. Post IPO also, company comes out and gives us clarity. So we need a lot of clarity here for the company. So net income statement, past has been good, present has been weaker. So let's give in a balanced view and give a neutral rating when it comes to the overall income statement. Let's talk about the balance sheet. And of course, the company's IPO proceeds were used for the debt reduction, but right now it seems like the borrowing is on the higher side. That was one of the concerns, and I think they will retire this debt by the end of FY26. Largely, it seems well capitalized, around 7 odd crores is there in the cash balance. Of course, remember, there's a hub and spoke model. The company claims it's asset light. We'll understand the model first, how this works, because we have studied a lot about diagnostics, hospitals and special services. But how different is this company? And remember, earlier we had done a dialysis company also. So this is a unique model. So we'll understand that. As of now, let's give it more time and give a neutral rating as well for balance sheet. But let's talk about the cash flows. There is a sort of lumpiness also in this business, and we try to understand what's the payment cycle like. And of course, post the IPO, the company's payment cycle did improve as well, but that's one of the other rating parameters we'll get in. For FY25, overall, you could say the numbers, they seem decent, but of course in FY23 there seems to be a good watershed year, but then after that, did it continue or not? That's the big question to be asked. So clarity is not coming in my analysis also. So to just give it a benefit of doubt, I'm giving the cash flow segment also a neutral rating. We need to understand more. This business model needs to be understood more. That's why let's keep a very independent view right now and not go harsh on the company. Let's give it more time. Apart from the cash flow, the ROC segment, that's where my concern starts coming in. It's a 50% plus ROC business, the way it came in the IPO, and it's been, kind of a downhill. I'm not understanding whether we'll be back with it or is it because of some expansion. That's why the ROC question and the margin question mark comes, and that is where I'm going to give this a thumbs down as well when it comes to the return ratios. And of course, the return on net worth, this is also something to be questioned about. So these are the important return ratios, nothing much happening here. So there is a little bit of concern definitely coming in. But apart from the return ratios, let's talk about the shareholders. Retail shareholding absorption is good. Of course, public understood the perception is the first IVF company, so that's good. Promoters are having a decent 71% stake. FIs and DIs, that's a good sign actually to having this participation as well, and that is something which you'll be watching out for, but it's just too early. So it's a neutral rating as well when it comes to the shareholding segment. But apart from the shareholding segment, let's talk about the street cred. It's just been, the listing came in just 27th February. So it's not fair to, get that numbers in. It's a wrong thing. It's not balance sheet. It's the street cred I'm talking about. Yes. Last 5 days stock has been decent. And remember, the month of March was really very stressful for the small caps and mid caps. And in that sell-off, the company is still maintaining its flat position. So of course, there is some good strength. There was a lock-in period expiry also where the absorption was held nicely. And, since the IPO price, the stock is flat, nothing much to actually talk about. So that's the neutral rating I would like to give for street cred. Let's wait it out and see what happens. But let's see the operational numbers. This is something where we can judge the company, what the company has done. The valuation, something which I picked up as per the calculations. There is a bit rough calculation. It's around 29 times P. For this industry, maybe this might be a median P because the larger players, PE/VCs, are on the higher side. I have confirmed those numbers also. So it's priced decently as of now. Debtor days, there seems to be 130 days. That's in the month of March 2025. Has that improved or not? But that's on the higher side. And the cash conversion cycle, that has actually improved. That means there's a mixed, trends coming in the operational numbers, which is given and calculated. So these key ratios to track is still neutral as well. The last one is important because that is where the management spoke with us also when we had interviewed them around a month ago, and from there we have taken the outlook. Largely the strong focus is there on the tier 2 and tier 3 markets. That is where you're going to see a lot of action in the IVF space. Aggressive expansion plan, 19 hubs and equivalent spokes across India. So the story of IVF and Bharat is really long. We understand that higher competition is coming from larger players and startups also. That becomes a concern because there is no major barrier to entry in this business or mode. So definitely the company needs to differentiate itself from others, and that is when the price discovery will happen in this counter. 97% of the business is B2C driven unlike the largely B2B industry players. Now what does this mean? This is why the margin profile is higher than the industry. Then why did the margin come down in this quarter? All these questions will definitely be answered by the management, and no dependence on star doctors at all. That's what they've mentioned. All doctors are employees. Now, what does this mean for an IVF industry, and what does it mean for a viewer like us? To understand this, we need to understand that an IVF sector is still 70% unorganized. That means organized players will have better chances if regulations come, and maybe that positive effect might come on this stock as well. This is what we are talking about. So outlook, it's a neutral rating when it comes to Gordium IVF. But pura rating kya hai? Let's talk about that. How things have panned out and what's the analysis looking like? Kya iska total jo hai summary hai? Income statement, balance sheet, cash flow, it's been decent. There are some good points, there are some weak points. We have tried to collate that and give it a perspective. Return ratios and margins is something which has been a concern for me. While shareholding street cred, let's give it more time to judge the company, and key ratios also, we could say the valuations are pretty much decent and the stock is holding up, but certain ratios, they need some more time to be judged, and outlook is also neutral. Of course, there's a good growth, and we have barely scratched the surface when it comes to IVF and how the modern lifestyle comes in, but there is a lot of competition also in the market. Then overall, I would like to give it 3.5 out of 8. It's largely, we can say, slightly lower than the average numbers which I generally give to the company. So this is the number coming in for Gordium IVF, and joining us on the show will be Dr. Manika Khanna. She is the chairperson and MD at Gordium IVF, and an interesting detail about her, she has spent more than 15 years in this industry, and she founded this company, Gordium IVF, in the year 2009. And a very strong experience she has, especially in the reproductive medicine. And one interesting fact about her, she's a strong advocate for women's health, gender equity and social change as well, and it's much needed. And she of course has the trust as well. To put that entire thing in perspective, we are joined in by Dr. Manika Khanna. It's always a pleasure, ma'am, to have you here. But I would like to understand first this industry, the IVF industry, because the stock market also needs to understand how different you are compared to a hospital business or say a diagnostic business. So just want to understand, just to give us an entire picture of how this IVF industry actually works, and then later on we'll talk about your company.
Okay. So, the IVF industry is basically treating one of the largest disease burdens that we are carrying. Globally, we all know that infertility is rising, and in our country, a country of 1.5 billion people, 15 to 20% of our population is infertile, and for the first time in the history of our country, our birth rate has gone below the replacement rate of the population. So it is high time that we wake up to this fact, and we have to make this treatment more and more accessible across the country. Not just accessible, it has to follow global standards so that you actually end up giving results to the patient. So you'll be surprised to know that only 2% of the 15% are coming forward for treatment as of now. So there is a huge scope of expansion here. There's a whole market lying there which is untapped. And we are different than hospital businesses because we are comparatively much lighter on infrastructure. So the infrastructure and overhead costs are much lesser than a hospital. Break-evens are much faster, and Gordium IVF has one of the highest EBITDA margins in the industry. So these are the major differentiators, and it is the era of super specialty that is coming up. So we are seeing eye chains, we are seeing dental chains, and similarly IVF is also a super specialty. And very unique thing about IVF is that till now, that some amount of taboo is still there. So the people don't want their relatives and too many friends to get to know that they are undergoing IVF treatment. So they feel more comfortable coming to a dedicated IVF facility than a general hospital where they might meet a neighbor or a friend who's come for some other reason. So that is how IVF is positioned uniquely. So,
Dr. Khanna, definitely we understood a little bit about the industry. But you spoke about that your margins, of course, higher than the industry. But I did check the Q3 numbers. There was a dip in the margins, and Street is also a bit concerned on the following return ratios. What's the reason for it? Is this a one-off impact coming on your margins in Q3, or is there something else?
No, it is just a one-off thing because as I just told you that people don't like to discuss within family and all to get to know. So what they do is that during the festival quarter, the number of IVF cycles typically get affected. So if you can see that though there has been a dip, the IVF dip is from a 39% margin to a 22% margin in this quarter. 39% was the previous quarter, the September quarter. But our average PAT will come at that 30%, which has been coming year over year, and we've been having a consistent 30 to 35% growth every year. We are going to maintain that. And so this is just a one-off thing because October is a month of festivals and that spillover carries to November. So that is why the impact. Otherwise, there is nothing major here.
So that's a very important concern which Dr. Khanna has actually solved it out. There are a lot of concerns on the investors. But then it feels like there is a taboo element involved, and because of this taboo element, we are seeing, lesser work or maybe the margin impact coming, especially during the festive season. So that's a very important number, and you see how social activities impact financial impact. This is what Dr. Khanna has explained us. But apart from this, just to put that in perspective, we had a discussion in the IPO as well. But I just want to ask this question again. How different is Gordium IVF and Women Health if I compare them with the larger IVF players or even the mid-size IVF players? What is the moat or what's the difference between your company and others right now? Because you are the first fully listed, you could say practically the first listed IVF player right now. So you are setting the momentum.
True. So, I take it as an onus and a responsibility that we have because we are the first player from the industry. What is very different about us is first and foremost our clinical excellence. So, we spent 17 long years on working on our foundations. Foundations have to be very strong before we start an aggressive expansion. And the 58% success rate at the first cycle that we give is at par with the global best. These are not success rates which are just advertised. These are actual data. And to maintain these success rates, we have made the organization completely SOP driven. So there are SOPs right from the embryologist clinician down to even housekeeping. So whether you enter a center in Mumbai Gordium or you enter like a tier 2 in a Srinagar Gordium or a Patna Gordium, the level of excellence of treatment that you're going to get is the same. Thirdly, we are specialists in multiple failed IVF cases. So that makes us very different. So, half the competition is wiped out because even if there are too many IVF units in a particular city, there are going to be failed IVF cases because not everyone is getting pregnant. And we are specialists in giving results in multiple failed IVF cases.
Right. Dr. Khanna, we understood how different you are from the other players as well. They will be coming with their IPOs, larger players. Nevertheless, we'll wait for that. But post your IPO, there were some proceeds for expansion. And I see that money, is it getting deployed? Where are the expansion happening? Is it the tier 2, tier 3 cities? Or anything in the maybe international expansion?
Yeah, so as of now, we have already started, as we had said in our RHP, we plan to open 10 new hubs in this year, and work has already started on 3 of them. And very soon we will be announcing whenever they are nearing completion, we will be announcing the particular cities. Of course, we are going to stick to our doctrine of getting more and more accessible in tier 2 and tier 3 cities because as I already said that infertility is there everywhere. In fact, you'll be surprised to know that it is there at the village level also. So it is very important that accessible global level care reaches the tier 2, tier 3 cities. And the more accessible and available we become, the more untapped market we will cover.
Right.
So,
and Dr. Khanna, definitely we understood the growth aspects of the industry, your expansion plans, your business model is different, and you of course explained us why the margins and the ROC numbers are there. But there's a little bit of concern coming in. A lot of viewers have written to me about a legal overhang for an IPO matter. We haven't understood that, but a lot of exchange filings has come on that. If you could just explain us what it is, maybe it's an overhang, and is it sorted? What's the situation on that?
Yeah. So that appeal has already been disposed of by the High Court. So I really don't need to speak more, and it will be disclosed on our exchange thing also. And also, very importantly, I wanted to mention that just very recently on the 1st of April, we launched the AI tools Sid and Erica for the first time in this country. The launch was done by Shri Nitin Gadkari. And so with this, we have done another industry first, I could say, that the Sid and Erica are two tools with which we have brought AI inside the human IVF lab.
Just a short update. We have understood, you have explained that to our audience regarding our AI announcement. What's the incremental benefit comes to your company because of that? If you can quantify, it'll be good.
Yeah, so what will happen is that with the use of these tools, we are going to increase the success rate at the very first cycle. So, when you increase success rate or at the very first cycle, the cost burden on the patient decreases. More patients get pregnant faster, more word of mouth generates, and hence more business generates. That's the whole idea. So it is really going to increase our numbers.
Right. Dr. Khanna, it's a pleasure to talk with you, and it's been, you have given the industry perspective, and the thing which touched our heart of our viewers is the social taboo element in which you are trying to erase, and hats off to you. Thank you very much, Dr. Khanna, for giving your views about the company, and best of luck for the future. So that is Gordium IVF clearing some important doubts about the company, and also the legal matter which was there regarding the IPO issues seems to be sorted. That's what the management had stated. But let's wait it out and see what are the operational parameters which the company does. It's too initial stage to judge it. So that's all, folks. In KYC, stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to Watching Prime Time with me, Aisha Said. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's
Dalal Street sees smart recovery today with Nifty trading above 22,900 levels. Broader markets mirror the benchmarks with mixed moves. A solid recovery in IT boosts the index with support from media, realty and metals. PSBs and auto continue to trade under pressure. Amid turbulent times in the aviation industry, Air India Chief Executive Campbell Wilson has resigned but will stay on with the company till a successor is found. Strong fourth quarter update from Kalyan Jewellers. Consolidated revenue rises over 60%, led by sharp growth in India and overseas markets. Momentum remains strong with same-store sales surging. Jubilant Foodworks under pressure after Q4 updates missed the estimates. Weak India performance and extremely soft same-store growth dragged the company. International operations remain the only silver lining. Oil prices edged higher after President Donald Trump doubles down on his threat to destroy Iran's civilian infrastructure. Brent trades above $111 a barrel, while WTI Brent surges past $115 per barrel. Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar. Let's take a look at the market. And yes, recovery it has seen today. And at the current moment, it's flattish in trade after recovering quite a bit from the losses in the earlier part. But still, finding it difficult to hold above the 22,950 levels when it comes to Nifty 50. When we talk about the sectors which have really performed well, it's the IT sector which has really recovered in trade, and that particular gain, which is by a huge margin compared to the indices, over 2% gain in the IT sector, and that has really carried on with the momentum and given that edge to the market today. Because the banking sector, the bank index, that remains softish and weakish in trade, 0.75% down, and it is a huge underperformance to the key indices today. While certain pockets of the market have been performing well, like IT, which is taking the lead, even metals are rallying. There are some good reports also. Brokerage is also betting on the metal prices remaining at elevated levels, and Nifty Realty also doing well. Pharma is recovering slight bit, but remember the banking pack, autos are the ones, and even consumption seeing a weakness in the day today. All right, when we talk about the overall markets, remember IT as well as metals are really leading the pack, and some of the banks are the biggest draggers. Let's take it straight across to market expert joining in on the show, Dhananjay Sinha, who's the CEO and co-head of equities and head of research at Systematic Institutional, joins in now. Dhananjay, welcome to NDTV Profit. What do you make of a very volatile market where there is a spurt of recovery on a consistent basis, but also there comes a selling pressure when the market gains? So how are you reading into this volatility, and what's been your strategy?
So I think the market is trying to look for a bottom. I think people are sort of pricing in the various contradictory news that is emerging because of the global disturbances in the Middle East. So I would say that there has been a sharp correction and loss of market value that has happened because of the war and even before that. So Indian markets may have lost about something like a 60 lakh crores from the peak that we saw in September 2024. So I think right now the market is trying to sort of price in the end of the war. Because there are certain statements that are coming from the US when President Trump is saying that it could end in next 1 or 2 weeks. I think market is trying to find a certain value at this juncture, given the sharp correction that has happened. So that is the broader context of the market. I would say that the market is trying to price in various news items, etc. But I think the broader context is that there is a likelihood of global crude prices remaining elevated because there has been loss of capacity, and the shortages that we are seeing in the oil supply has been most intense since the oil shocks in 1970s. So I think the likelihood of the oil price remaining higher is for longer is something that is a probability that we are pricing in. As a result of that, we have to really understand what the impact will be on corporate earnings, on overall demand scenario, on fiscal scenario, and the policy support that would come about. And our view is that the current context implies that if the crude oil remains at $100, and that's almost like a 50% rise in crude price over last year, let's say that prolongs for a year or so, then it's likely that the margins for the non-finance companies will come down. Currently, it is averaging about 16%. It can come down below 10%. So that could imply a considerable erosion in the profit growth going forward. I would say the consensus is still hoping for a 15% growth, whereas we are seeing that major research houses have actually started to prune that down. But I would say eventually it is likely to be flattish at best. There can be a decline as well.
Yes.
So I think the value erosion that has happened is because of the multiples that have fallen. People think that there can be improvement in multiples, but I'm not too sure if that is the case. So we need to be very selective about which sectors to really look at.
All right, we have to be selective. So Dhananjay, which are the sectors which you have really been cautious on, especially because of this changing environment when it comes to the war, and we don't know how soon the war is going to end, and even if it ends, many capacities may not come back, so the crude prices also remain on the elevated level. So my first question, since you mentioned that certain sectors you'll have to keep a watch for, what's on your radar right now and what you are most cautious about with sectors?
So I would say the macro context will be very important to really look at. At this juncture, we are saying that if the crude oil remains at 100, that would imply that the total oil bill for India on an annual basis could exceed or increase by roughly about $100 billion. So that's almost like 10 lakh crores. So this is a major shortfall that would arise. There will be implications with respect to how it passed on in terms of end product price, and there is rationalization that is happening. So I think what we have seen is when the crude prices go up and the inflation eventually pans out over a period of time, it would have an impact after a couple of quarters after the elections. So there can be an impact on the overall real income for households that has been very flattish. So I think there can be further impairment out there. So I would say that we are penciling in a sort of a slow growth for consumer companies or consumer-led companies, including consumer durables, non-durables. There can be narrowing of margins for consumer companies, also for autos, because if the crude price goes up as a derivative, metal prices also go up, so cost of production could rise. So as a result, I would say the auto sectors might actually see sort of impact over a period of time. We know that in the fourth quarter, because of the GST deduction, there has been a very healthy rebound in volume. So as that dissipate and the margin compression pans out, I think that is another sector that could be vulnerable. I would say derivatives of crude goes into multiple sectors, which includes fertilizer. It can get impacted. I would say paints and subsectors can get impacted because of the higher fuel prices and input costs. I would say with respect to, so the energy cost, if you look at it particularly, what will happen is that the demand for electricity would go up, the coal prices would go up. As a result, the power cost can go up. So sectors that are susceptible to higher fuel cost or energy cost would be cement, metals, fertilizer, chemicals, textile, and paper.
Yes.
These are the things that we are seeing. On the flip side, what we think is that there can be increased allocation by government on subsidy on the rural sector, so there can be some protection that can come about from there. But I would say structurally there can be significant rise in defense spending across the world, including in Middle East and Europe and in Asia as well. So those sectors that are dependent on export of defense products, they can benefit. I would say the other side is that because of the rising energy costs, people might switch into conserving energy consumption. So non-conventional energy, including solar, wind, those kind of things, and nuclear. These are the sectors that can actually benefit. So I would say those are the broad thoughts that we have when we look at the markets. Of course, we also have a view implication for banks. So I can talk about the banking sector as well if you want.
All right. So, Dhananjay, you have very nicely bifurcated the entire, industry, entire market into the ones impacted by the war. And the next one is on the ones which really stand to benefit. Very quickly, banks today under pressure, even though the market overall is recovering, and it's also a quasi-investment into the economy. Does that show some bit of nervousness about the market as well as the economy?
So yes, I would say that if the economy faces stagflation, as you are saying, because you have high inflation and low growth, which means there will be stagflationary pressure. I would say the banking sector has been reeling under, I would say, narrowing margins. So if you look at the spreads, it has been reducing, and despite the fact that RBI has cut rates, etc., the GSEC yields have gone beyond levels where the rate cuts started and where liquidity infusion started. So RBI has done roughly about 14 lakh crores of liquidity infusion through OMOs and CRR cut and forex swaps, etc. I would say in the context where the current account deficit widens, trade deficit, as we have estimated, can rise to 10% or more of GDP, which is highest in several decades. And BOP deficit happens for the third successive year, the RBI would need to sort of scale down its reserves, and there can be tightening in liquidity. On the other hand, we are also expecting that because of the food shortages, there can be rise in inflation, and general spillover effect of inflation would happen. So in that context, the banking sector will face a scenario where yields are rising, so spreads can continue to narrow. And it's possible that the credit growth that we are seeing today, it's largely because of a pressure with respect to working capital for the non-finance companies. But I would say that as that slows and the margin pressure emerges, there can be increase in NPAs as well. So I think that's the broader context of the banking sector.
All right, that's definitely there. And how much of the bad news is really baked into the market also ahead of the next earnings? Because 1/3 of the last quarter gone by has really seen the war situation, but maybe the impact is going to be just trickling in. But Dhananjay, always a pleasure chatting with you. Many, many takeaways coming in from you. And thanks so much for joining in. So he mentioned about the RBI's role and also the interest rate cycle. So let's shift our focus on that as well towards the ongoing US-Iran war. The Reserve Bank of India's Monetary Policy Committee is expected to keep its interest rate steady at 5.25% in the April review. Before we get you more insights, Piyush, my colleague, is right here with the key monitorables and what's expected from the RBI tomorrow. Piyush, tell us.
Yes. So the majority of economists polled by NDTV Profit, the 10 of them, show that, they say that the RBI will likely, MPC will likely hold on to repo rate. In fact, they say that we are headed for a longer pause. And 5.25% may be the terminal rate going ahead. Market participants will closely monitor the RBI's outlook on inflation and on growth, both in the upcoming policy. If in case the Middle East conflict continues for a longer period and inflation challenges persist, the RBI may actually start hiking rates in the later half of this calendar year. The currency also is a key monitorable because RBI has taken significant measures not seen over the last decade to arrest the depreciation in rupee, and RBI's commentary on currency volatility and the level that it sees rupee at will be keenly monitored. And finally, market participants will also assess the RBI's commentary with regard to the recent happenings at HDFC Bank. We understand that the bank's former chairman had resigned, citing certain differences with his ethics and the bank's certain practices. These are some of the key monitorables.
All right. Thank you so much, Piyush, for getting us what's really lining up from the RBI's front that is going to be announced tomorrow. Let's take it straight across to another expert to discuss the economy, the impact of war, and how is RBI going to react to that? What's expected from there? Sakshi Gupta, who is the principal economist at HDFC Bank, joins in now. Sakshi, welcome to NDTV Profit. Of course, RBI has a very tough task with inflation concerns rising. On the other hand, the impact of war and rupee depreciation. How are you seeing and what are you penciling in terms of what's expected from the RBI tomorrow?
Right. Hi, good afternoon. Thanks for having me on the show. You're absolutely right that this is going to be an extremely, the RBI finds itself in an extremely tough spot ahead of the monetary policy meeting tomorrow. Of course, our view is that there is no need for the RBI to, be overtly reactionary at this point and look at changing anything from their interest rate stance or, the policy rate itself. So we are expecting no change in stance, as well as the policy remaining unchanged at 5.25. I think it's still early days, and the real challenge right now for the RBI is to kind of decipher whether this present conflict is going to turn out to be an inflationary shock for India, or whether it's going to lead to wider supply disruptions that ultimately has an impact more on growth, right? So one of the things that I'll be watching out for in this policy is RBI's assessment and their commentary on how they see the inflation growth trade-off going forward. The second thing is, of course, for the RBI also to kind of, talk about or signal, about their comfort level around the rupee. Of course, they've hold on to a view where they do not, come in and target particular levels, but, step in to curtail volatility. And I think some amount of market conditioning or confidence building on this front perhaps is important at this stage. I mean, the rupee has, rallied in recent days with the regulations that had come in. But with the conflict kind of continuing, clearly the underlying pressure on the rupee, could still return. And the problem is that because right now this is an inflation shock, then imported inflation becomes greater risk as the rupee depreciates further and further.
Right. So, Sakshi, have you already started seeing enough impact and as expected impact of the RBI's unconventional measures to really arrest rupee's fall?
Right. I think it's pretty evident in the way the rupee has moved, over the last couple of days, right? Since the regulation kind of came in and there's a deadline where, banks are supposed to kind of unwind their position by 10th of April. And despite the fact that you see in global markets where the dollar is strengthening and a lot of emerging market currencies are actually weakening, the rupee has actually been fairly stable, currently trading below the 93 level. And just a few days ago, we were touching closer to 95. So I think the impact of the regulation that, is already quite visible in the way the rupee is moving over the last couple of days.
Right. When you talk about the RBI's policy, do you think there could be some change in the stance as a first step if this war situation continues? Inflation comfort also is lost for the Reserve Bank. So what are those important comments that you are watching out for, Sakshi, tomorrow from the governor? And also a change of stance even though no action is taken on interest rate cycle turn at this particular moment.
Right, fair point. But I think it's too premature even for the RBI to look at changing the stance, because any change in stance would effectively be a signal of where it's going to take interest rates in the future. At least that's how markets are going to view it as, right? And as I highlighted, that at this point, we really don't know whether this will be purely an inflationary shock, in which situation the RBI might have to tighten policy rate, or alternatively, whether this is more like a growth, production and supply shock, in which case the appropriate monetary policy response would be to actually keep liquidity very, very comfortable, or lower, or even lower the policy rate in an extreme scenario, right? So, my view is that at this point, the risk to the policy rate is actually two-way, depending on the duration and the impact of this present conflict. And under that backdrop, I don't think that the RBI is currently in a situation to even change, their stance at this point.
All right, so no change, it's too premature is what you're saying. And finally also, Sakshi, looking at the overall macro data, what are the teething and the pain points that are already surfacing for you to keep on your radar if the war and the elevated oil prices were to continue for some more time?
Right. I think primarily two things. The first is on the inflation front, right? So I think we have been tracking a lot of, daily prices, from food to some of the items in the core basket. We are now estimating that for March, the retail inflation print might be as high as 4% already. And there's an upside risk to that forecast. So I think over the coming days, what we'll be assessing, one is clearly what is the pass-through on domestic inflation that is already beginning to happen. Secondly, at the same time, I think, as the PMI numbers suggested for the month of March, if you look at PMI manufacturing, that softened quite a bit, right? Although it is still in the expansionary zone, it does kind of indicate that there's been some impact on production in the month of March already. So I think some of the readings around, index of industrial production over the PMI over the coming weeks, as we start getting data for March, I think are going to be very, very important to start assessing what's happening at the growth front. So it's some of these indicators that I would watch out for. Just a final point on the RBI policy in terms of macros. I think I will also be looking at what they say in terms of their inflation forecast, because this is the first policy where we will get RBI's full year FY27 inflation forecast, right? So we are anticipating that there might be an upward revision to Q1 and Q2 numbers that they had given out earlier, which were close to 4.2%. We are estimating that there could be a 50 to 70 basis points increase in the projections that RBI makes for inflation going, into FY27. So that's a critical macro number that we'll be watching out for.
That's the most important takeaway, Sakshi. While other things may remain the same, of course, the commentary and also inflation projection being elevated higher for this financial year will be important to watch. Thank you so much, Sakshi, for giving your perspective on the overall economy and the expectations from the monetary policy. We'll touch base with you again as the things develop. Thank you so much. All right, moving on, Credit, Axis, Grameen and also Gallant Ispar are in the spotlight today after a strong set of Q4 updates coming in from these companies ahead of the earnings. Sharad joins in with all the details on what's really making these particular counters gain in trade. Sharad.
Thanks a lot for that, Nisha. First of all, Credit Access Grameen, a strong operational update coming in. If you look at most of the parameters, they have done well. The GLP growth, the gross loan portfolio, that was up almost 14% on a year-on-year basis. And they added almost 9.8 lakh new borrowers as well. There's the strong quarterly disbursements coming in from Credit Access Grameen. And the retail finance share, that's also seeing a good up move. The gross loan portfolio, looking at it, the Karnataka state, that's gone up 8%, a little bit of MFI stress definitely there, but other states have done well with a 17% year-on-year growth coming in. So largely net, the numbers have been on the stronger side. I'd also like to point out Gallant Ispat. This stock we had actually covered in KYC also last month. Since then, the stock is up more than 20%. And after that, we see the Q4 numbers which have come in, the production numbers, so the billets and the key other operational parameters have also stood out. And some of them are there in the multi-year multi-quarter high levels as well, and that is what the street is liking, and a good jump is coming and good buying volumes also coming up. So these are the two stocks which are buzzing on the back of strong operational update for the March quarter.
Right, Sharad, thanks so much for getting all those details, but let's not lose sight of the market, because a large part of the recovery is being given in also 0.23% down on Nifty 50, but of course it has been a tight range choppiness that we are seeing in the last few minutes of trade. So some bit of gains being given up. When we take a look at some of the internals, well, Reliance Industries is a drag again today after ending the day 3.3% down. So that heavyweight is really putting a fair bit of pressure on the Indian, on Nifty 50. And when we take a look at some of the other aspects like the IT sector, that has given up a slight bit of gains from its top level in the trading session, but still over 2% gain in trade, and this is really taking the market momentum forward. But the pain point today, that is the banking sector, and bank index is down almost close to 1%, and that is the one putting pressure on the benchmark indices. With that, it's a wrap on this edition of Markets at 12. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey standing at the NDTV Profit Market Pit with all the action in the market today. Sharad, good afternoon. A good recovery that's come in from the day's lowest levels, but how sustainable it is anyone's guess, because it's mainly IT which is firing across. Apart from that, slightly somber moves.
Right. Good afternoon, Hiral. And yes, there is a recovery, but that was just a gap down. After that, it's a very, very narrow range of movement happening. And of course, IT is holding the pack. But remember, there are other global triggers also. And that's why market is taking a breather. Nifty Bank, let's see how things are panning out. And let's see where the momentum is there. And of course, the Nifty Bank, the recovery is not strong as Nifty. So that is something to be a concern definitely on. But we'll definitely be focusing on the Q4 updates. And remember, interest rate sensitive stocks are in focus this week as RBI MPC meets. Final outcome comes tomorrow. Recovery attempt was being made by Nifty, but remember there is an expiry at play for NSE also, so there will be a movement for the Nifty expiry in the closing. Nifty setup is still better than the Nifty Bank looking at the technicals, and you must be wondering what should be the technicals for Nifty Bank, because of this immediate support levels is coming exactly at 52,000 levels. That's where we saw the bounce happening on the technical charts as well. But let me take you to the other key factors which is important, which you should note. The broader indices are still seeing buying. The ratio is still 3:2 in the favors of the bulls. IT is leading. Hiral had pointed out PSU banks. That's where the lagging is happening. A little bit of sell-off is happening in the private banking space as well. But nothing alarming as of now. We expect a largely range-bound movement unless something comes from Iran, something comes on meditation, or something comes from Donald Trump. But apart from that, right now, there isn't much trigger there in the market. Remember, the technicals and the short covering has been strong in the last 3 trading sessions. So bounce back and pulls back will definitely happen in the counter unless something big swing happens. And the reaction to the Q4 updates, RBI MPC meets tomorrow, is something which should be focused on, especially the interest rate sensitive stocks. But most importantly, Donald Trump, 2 important events are happening. And if you are awake at night, 4:30 a.m. there's a Sergio Gore meet, and there's a war deadline ending at 5:30 a.m. Indian Standard Time. So a lot of action is there, and maybe journalists like us might be awake whole night as well. Back to you, Hiral.
Absolutely, all eyes are going to be in terms of what's happening with regards to the war. But let's quickly take the viewers through the watch list. IT sector seeing some buying interest ahead of the quarterly numbers that are expected to trickle in. You have ICICI Bank and HDFC where BOFA has maintained a buy, but they've gone ahead and cut the target price on both these companies. You have Hindalco where JP Morgan has upgraded the stock to an overweight versus a neutral, and likewise Vedanta has seen an upgrade as well. Sham Metallics, Gallant Ispat, strong set of quarterly updates that have come in. Jubilant has been a miss, and that's the pressure building up. GCPL, the growth is in line with Indonesia business, and that stock is seeing some smart moves. Credit Access Grameen, a strong update is what they have reported in terms of AUM growth as well. Kernex Micro, the Kavach deployment of 1364 crores. Kernex is one of the beneficiaries, so strong moves coming in there. And Jefferies has maintained a buy on Indigo but cut the target price. That stock is trading under pressure. Max Health, volumes are pretty strong on this one, along with a Brainbees, which is first cry. volumes are at 11 times its 20-day average. Titagarh has got a nod for a brownfield capacity expansion, and that stock is buzzing in trade. And along with the Titagarh, Jupiter Wagons is also buzzing in trade. In fact, yesterday there was a brokerage note on both these counters. Swan Defence, India's first ammonia carrier order, is what they've got, and that's the reason why the stock is up. Brigade Hotels has signed a MOU with Hayat, and Force Motors and Biocon, both of them buzzing on the back of strong volumes in today's session. NMDC Steel, the government is easing norms for mining, and this could be a beneficiary. So that's what we are watching out for. But Sharad, over to you for the rapid fire.
Thanks a lot, Hiral, for that. And joining us is Saumil Mehta. Good afternoon, Saumil. It's always a pleasure to have you. We'll start our rapid fire segment, and Interglobe Aviation is something which is focusing on. Of course, a lot of developments are happening, and the domestic travel also is going to be in focus. There's a good hike coming in the domestic prices as well. Technically, is there any trade right now being made for Interglobe Aviation, or there's a little bit of consolidation on the charts?
Good afternoon to everyone. Yes, there's a lot of consolidation actually in the last couple of weeks. I'll be expecting a small bounce, but this is just a bounce because overall the trend still remains negative for Indigo, and I'll be expecting this stock to bounce till at least 4,560. That is the resistance, that is the previous swing high on the weekly charts. So that would be my target. If it sustains above that, then probably it will go to 4,665. However, this is just a bounce. I'm taking it as a bounce, and overall trend still remains negative.
Right, and the next stocks, Max Healthcare, the stock itself, if you focus on that, there is a good volume happening. Is this going to be sustainable, and if yes, any trade?
Yeah, I'm avoiding the stock at this point of time. It is in the downtrend. Till the time we do not see a basing out pattern or a reversal pattern, I would stay away. There is a very crucial support around 900 and 880 levels. However, I would stay away.
Right, of course, stay away from Max Health. Your view on First Cry? The stock is buzzing in trade.
First Cry, yes, there is a bounce. There was a big consolidation which is broken on the upside. I'll be expecting this stock to go up till 290, and if it sustains around 290, then the next target would be 310. Positive in the short term, but in the medium term outlook, the trend still remains negative.
Right, and next stock, Titagarh, getting an expansion allowance in West Bengal, and recently brokerages were also bullish. Your views on that? Any upside more from the current levels?
Yes, absolutely. An expanding ending diagonal pattern has broken on the upside. Now, it was at a very, very crucial levels around 600, 550 levels. There are a lot of supports at that level. I'll be expecting the stock to go up till at least 800 levels. The stop losses would be very deep, 678, and the next support is 634. However, my view would be positive in Titagarh.
Right, and another counter, Swan Defence, I'd like to talk about. There is a bounce happening here, but at times this becomes a low volume counter as well. Your views, should you stay with a trade with this counter or avoid it? Saumil, the stock is Swan Defence.
Swan Defence. See, overall it is in the uptrend. I don't see any issues here. I would not suggest for a short-term trade, but in the medium term to long term, I'll be bullish.
Right. Right. Next stock we'd like to talk about, and the next stock is your Brigade Enterprises. That's what we talk about it, and important development coming in their hotel business as well. There was a good operational update also earlier. Your views on that?
Brigade is still consolidating. I will wait for a breakout. The breakout is above 712, 713 levels. You're talking about Brigade Hotels, right?
Brigade Hotels, yeah. It was recently demerged. I'm talking about that company. I think the technical history will be less on that.
Right. So Brigade Enterprise. I have Brigade Enterprise. I don't have Brigade Hotels right now.
Okay, fair enough. That's it, Somil, for this rapid fire segment. But to get you more stocks on the Google trends, Hiral is there with the list. Hiral, what stocks are there in that?
I know it's interesting always to see which stocks are actually trending on Google currently and get a technical check, because that's what is on investors' radar as well. That's what it tells you. Trent, Kalyan Jewelers, Hindalco, IEX, Bharat Forge, all of these that have been in the news. Bharat Forge, yes, on the back of the Class 8 truck orders. I know, the exposure is quite less. Somil, anything that you're picking up specifically when it comes to Hindalco or a Bharat Forge, or even for that matter, IEX?
I'm more bullish on Bharat Forge and a reversal trade in IEX. Hindalco is doing great, of course, but at this point of time, I'll be more bullish on Bharat Forge. It is forming an ending diagonal pattern. 1600 levels is a very, very crucial support for Bharat Forge. I'll be expecting a short-term target of 1820 and above that 1900 levels. So yes, bullish on Bharat Forge, Hindalco and IEX. Let me give you IEX levels as well. IEX has broken out of a small ending diagonal pattern on the upside. I'll be expecting this stock to go up till first target would be 130 and the next target would be 137. Support would be around 123 and 120.
Okay, so that's with regards to the strategy on this one. But thank you so much for joining in. Always a pleasure to speak to you. But moving on, sources tell NDTV Profit that the ED has registered a PMLA case in Chandigarh FT fraud linked to Kotak Mahindra Bank. Shrimi is here with more details. Shrimi, good afternoon, and what are you picking up from your sources?
Yeah, hi Hiral. So ED has registered a case under PMLA, and this is important because they are probing the fixed deposit fraud linked to Kotak Mahindra Bank, and this is the latest in a string of financial irregularities involving public funds both in Chandigarh and Haryana. And this case is pertaining to discrepancies of nearly 150 crore flagged in fixed deposits belonging to Panchkula Municipal Corporation, held at Sector 11 branch of Kotak Mahindra Bank. And now ED sources, ED investigators are examining whether these municipal funds were diverted and laundered through fraudulent ED move comes close on the heels of 590 crore fraud linked to IDFC First Bank and similar irregularities involving AU Finance Bank and as well as Kotak Mahindra Bank. And together these cases are accounting to around 950 crore. And also what ED source is pointing out at this, that there is a common playbook used to siphon off government funds, and prelim finding actually suggesting a recurring modus operandi. A couple of points quickly: that government funds parked in the bank FDs are targeted, fake or unauthorized FDs are created using forged documents, funds are diverted to they suspect that it's getting diverted to shell entities, and money is then routed into other assets, including the real estate. So that's the suspect, and that is why now ED is formally launching the investigation under PMLA. So that's very, very crucial.
Thank you so much for that. And, this is going to be an interesting development that we're going to be tracking as well. In fact, we've got a response from Kotak Mahindra Bank as well, where they've said that they're following instructions from the Municipal Corporation of Panchkula, and Kotak Mahindra Bank is examining the matter in subject. The bank is cooperating fully with the Municipal Corporation, government and law enforcement agencies. That's the word coming in over there. But Sharad, lots brewing when it comes to IT.
That's right, Hiral. Everybody's excited about the earnings season, and let's see what are the commentary coming in from the IT players. But before that, let's give you the perspective of the preview which is there in the IT sector. And joining us is Jasmeet, who tracks this sector thoroughly. Jasmeet, what are the expectations in the preview in the IT sector?
Well, sure. Thank you for that. So we are following these 5 key trends that will be a key thing to watch out in the Q4. The first one is the overall AI overhang that still continues in Q4 as well. But on the positive side, we do have rupee depreciation that will support the overall EPS growth, and we also have the overall valuation that's cheaper at this current point in time. If we look at the next key takeaway, we do make a note that the acquisition that the companies have done so far in the Q4 will be something to watch out for. How does the overall commentary pans out, and how does the management plans to further acquire more companies in the AI space? Now, if you look at the Accenture commentary altogether, which is generally a bellwether for Indian IT company, we do make a note that the Accenture as a company did not see any material change altogether. So overall demand remains the same, but a very important factor would be the overall AI uptake. So Accenture did note an overall increase in AI booking, which will be a key thing to watch out for. Talking about the numbers lastly, we are expecting TCS to lead in terms of revenue growth at 2.78%, followed by Tech Mahindra altogether. And for Tech Mahindra, the in this particular year will be something to watch out for. Lastly, we look at the mid-cap company size. Again, in this particular quarter, in this particular year, will be something to watch out for. Lastly, we look at the mid-cap company size. Again, in this particular quarter, we can expect Coforge to lead the pack with a growth of 6%, followed by Emphasis in the picture. So all in all, we do see a positive quarter for IT coming up. That's why we have all the IT stocks rallying in today's trade.
Thanks a lot, Jasmeet, for that. But I would like to give a little bit more perspective to it, especially the mid-cap IT stocks. They're expected to do better than the large-cap ones. And remember, this is the word coming in from Sumit Jain. He's the senior research analyst at CLSA India. While speaking to NDTV Profit, do listen in.
The issue with mid-caps is there are some companies who are executing extremely well, the likes of Coforge or Persistent, whereas there are a lot more other players which are not doing that well. So we are more positive on those two companies in the mid-cap space where they have been consistently gaining market share for the last 6 to 8 years under the current management. And they have a unique business model where they are doing proactive selling and not relying on typical requests for proposal or the macro cycles. These mid-tier IT companies, what I talked about, will be in a better position. And from the earnings growth standpoint, we believe they will give a better earning growth than the large cap players.
Earnings growth better for mid caps versus large caps. But moving on, aluminium stocks are in focus after JP Morgan has turned more constructive on the space, citing sustained price strength amid geopolitical risks. In fact, the brokerage has upgraded both Hindalco and Vedanta, pointing to improving fundamentals and a favorable risk-reward setup. If you see in terms of the target price as well, that has been increased on a Hindalco and a Vedanta. Strong moves coming in on both these counters. In fact, let me get in Chakri Lokpriya to talk to us about both of these counters as well. Chakri, good afternoon and welcome to the show. Always a pleasure to speak to you. You know, a lot of buzz when it comes to metal counters, you know, in the last couple of months. You have a JP Morgan which has turned constructive when it comes to aluminium-based companies. How are you looking at them and would you be a buyer at current levels?
Good afternoon. Thanks for having me. If you look at the metal companies, you know, cyclically just before the war, they were well placed and, you know, the valuation of the companies was very reasonable. Now, once the war began, basically the supply chain disruptions had led to a further loss of production or potential production, leading to a slightly improved pricing. So now there are two things going on. One is that will demand sustain going to the rest of the year, or will a prolonged war cut down demand? But right now we are assuming that the demand will continue. The valuations are reasonable, especially for aluminum, alumina. The spreads are still very good. Therefore, Hindalco and Nalco are preferred plays in the aluminum.
QSR space also the updates have started coming in, but it was not a very strong update for Jubilant Foodworks. What are the key details about it to give it entire perspective? We're joined in by Mahima. Mahima, this time the pizza is not tasting good.
Well, that's true because, you know, Q4 is completely a miss for Jubilant Foodworks. Overall weak performance in terms of where India business is concerned, and the international business, however, has done well. But the concerning factor is the like-for-like growth, which has just come in at that 0.2% mark for the India business. For the international business, the like-for-like growth has been at 9%. Overall, if you take a look at the numbers, Q4 revenue growth stands at 19%. FY26 revenue growth stands at 17%. For this is on a consolidated level basis. For standalone, the growth is just at 6.2% for revenue, and FY26 stands at around 12.8%. In terms of store additions as well, 68 stores overall were added this quarter at the entire group level, of which 59 were in India and 4 were added in Turkey. Now, with regards to where brokerages go, Macquarie has maintained underperform with a target price of 460. What they're saying is that because of like-for-like being weak, margins will get impacted, and overall. There's limited room in terms of expanding the delivery business because of the entire war impact, the LPG crisis as well. Morgan Stanley has maintained overweight.
QSR players, is there any value emerging here, or you'd like to stay away from this space?
The stocks are correct.
Thanks a lot, Maya, for that, giving an entire perspective of Jubilant Foodworks. But Chakri, just wanted to get you on this.
Fairly significantly on the back of slowing sales, and even in the current quarter, basically the expectation is which are likely to at about 9%, a volume growth, same-store sales growth expected about 11-12%. So there is a sizable fall, miss of expectations. Second is the margins are likely to be weakened because of higher LPG costs and. For industrial companies, I mean, when I say industrials, mean for businesses, and therefore translating into lower margins. And thirdly, the sector itself, the category itself, is not as unique as it was, let's say, a few years.
Actually better than street estimates. To give in more perspective, again, we are joined in by Mahima. Mahima, how the numbers looking like actually better than street estimates? To give in more perspective, again, we are joined in by Mahima. Mahima, how the numbers looking like GCPL? Any kind of forward-looking statements from the company?
No, not really. Not any forward-looking statements.
GCPL, any kind of forward-looking statements from the company?
No, not really. Not any forward-looking statement, but largely Q4 numbers are in line with what the management had already guided for. Indonesia business is something that's now recovering from them, which has been a concern in the last couple of quarters. In terms of where the numbers go, consolidated revenue is expected to close in double-digit revenue, and they're saying that EBITDA will also be in line with this revenue. In terms of standalone, double-digit sales growth is what they're expecting, and volume growth in high single digits. Volume growth except soaps is going to be in double digits is what they've said, and EBITDA margins likely will sustain in the same range as they were. Indonesia business is kind of showing signs of stabilization. Underlying volume growth is expected to be in mid-single digits. The overall, Africa, US and Middle East business is going to see double-digit sales growth and single-digit volume growth. In terms of, commodity prices, crude prices have, kind of put pressure on Q4 margins. They expect cost hit of around 6 to 9% due to higher crude prices, and they remain cautious considering the war situation. So this is the overall view. Of course, a good update coming in, but it's a wait and watch situation for the entire sector per se.
Thanks a lot, Mahima, for that. And that's Mahima for you. She covers the consumption space very thoroughly. But Chakri, I just wanted to get your views also in this GCPL. Is there some kind of, update has been strong? Do you think there is a medium-term, scope, potential for more up move here?
GCPL has two legs of businesses. One is the international, second is the domestic. The international business, clearly the margins are better and the volume is better. And of course, there might be some amount of supply chain disruptions because war related and increased freight costs, because unlike India and international, the pass-throughs of the freight costs are far more immediate. But overall, as a category, whether it is the various segments, whether it's a consumer related or whether it's a hair dye related, they are still fairly holding up fairly well. Valuations have corrected, so it's worth looking at a Brokerage consumer at current levels.
How are you looking at the private banking space? ICICI Bank, HDFC Bank, BofA has gone ahead and maintained their buy. However, the target price has been cut on both these counters, and they're still preferring these two counters in that space. And you have a Credit Access Grameen, where the Q4 business update has been very strong. Your views on these three names?
Whether if you look at an ICICI or an HDFC Bank, big banks, so therefore the credit growth of the 13-14% will continue to remain. Some of story thus far. Now the NIMs are likely to be stable because in this current quarter is only the last month which got a little bit impacted because of the war. Now going forward, the NIMs are likely to continue to remain more or less, assuming that credit growth does not really fall that much. The valuations have corrected for with HDFC Bank as well as for ICICI. And therefore, from a 12-month perspective, I think still are worth buying. Credit Grameen as a space, I think I'll still stay away from, because the trends in the lower end of the segment are still not as strong as they should be.
There's an interesting group of stocks. That's the Kavach related stocks I'm talking about. Government has announced roughly 1,365 crore rupees Indian Railway has approved, signaling modernization and the Kavach 4.0 scheme. And Next Microsystem, of course, KEC International also has exposure here, and you can see a significant order book, kind of allotment coming in for Kernex and HBL Engineering. Chakri, anything on these two counters on this Kavach orders? How do you see these, and is there any alpha here?
Railways as a space and railway suppliers as a space have actually corrected quite a bit. There, the order book is fairly strong. Given that India as a country wants to expand its push into the northeast as well as in expanding the existing rail network, and therefore companies look at KEC. Increasingly that company also is supplying to the railway industry, is worth looking at. HBL, well, I guess it's already done a fair bit, but these companies are well positioned.
A pleasure to speak to you. With that, we're completely out of time. We'll quickly slip into a short break. A thank you from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit with lunch.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Where I break down the day's biggest business stories. What happened, why it matters.
Conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance.
Conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance. You can watch us.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life. Prime Agenda. We'll be deep diving into this topic to tell you what's at stake. Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Two leaves and lotus bloom. Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of politics and people. Vanakkam Tamil Nadu. Here we come.
biggest business stories. What happened, why it matters, and what it means for your money. Biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
New year. New power panel. India market open. Now in its new year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better.
Dalal Street sees smart recovery with Nifty trading above 22,900. Broader markets mirror benchmarks with mixed moves. A solid recovery when it comes to IT, boosting index with support from media, realty and metals. When you talk about PSU banks and autos, they continue to trade under pressure though. And amid turbulent times in the aviation industry, you do have Air India Chief Executive Campbell Wilson, who's resigned but will stay on with the company till a successor is found. Strong set of numbers in the fourth quarter in terms of the business update for Kalyan Jewellers. Consolidated revenue rises over 60%, led by sharp growth in India and overseas markets. Momentum remains strong. The fourth quarter updates miss estimates. Weak India performance and extremely soft same-store sales growth drag. International operations remain the only silver lining. Infrastructure, Brent trades above $111 a barrel, while WTI surges past $115 per barrel. Me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, and all while you grab lunch. But before we do that, a very quick look at the so that's the kind of recovery that you've seen, at least as far as Nifty is concerned. When you talk about Sensex, though, on the flip side, that's actually lost about 160 odd points thereabout. When you talk about the sectoral picture, in fact, that's also 0.8% cut coming in on that particular sector as well. Nifty, bank, auto, financial services, oil and gas, all on the back foot. What's holding up quite well right now is IT, real. But with that in mind, let's also talk about some of these stocks that are buzzing away in trades. Something like a Titagarh Wagons with that Kavach push also coming in, NMDC Steel, Coromandel, Emphasis, bunch of those counters, even well, you're looking at Wipro, HCL Tech and TCS, Tech Mahindra, Infosys, all of your IT counters in great shape right now, up anywhere between 1.5% to about 3%. Sun Pharma, Bharti Airtel, IT losers as well, Quality Walls, Dr. Reddy's, Max Healthcare, into Globe Aviations, something like an Eicher Motors and M&M from the auto pack was also on the back foot, and even some of your banks, heavyweight. The entire stock picture and the sectoral picture right now. But with that in mind, let's also get you the commodity check going, because you do have oil prices that are extending gains. When you talk about oil, and even Brent is in good shape with that $110 a barrel being broken when you talk about Brent as well. So largely that's the kind of setup that you have when it comes to oil prices. When you that policy uncertainty, in fact, we'll get you a check going in terms of what's the way forward. And we do have Tejas Anil Shigrekar, Chief Technical Research Analyst, Commodities and Currencies, that's Angel One, joining us. Good afternoon for gold, but we'll come to that in a bit. First things first, I wanted to get a quick check going as far as oil is concerned. The war premium is back in the spotlight, and very much so when you talk about crude price. Looking at the trajectory for this entire week.
First of all, thank you very much for having me on your show. Let's see how exactly the panning out from the international level if support. So it will be the again pressurized for the spacious middle, as well as when we are looking forward the crude oil prices is sustaining about 116. So it probably MCX level, if you're looking forward the crude oil April contract, if somewhere, if you're getting the enhancing level around of 10,400, so that is a best buy to go for the long side. On the upper hand. If you're looking forward the on the other hand, on the crude oil and the other energy pack like natural gas, again having the supportive numbers. So in
Right now, absolutely. That makes a lot of sense when you talk about oil prices right now. But I just want to also understand if you think that higher for longer oil prices is something that you're penciling in at this point in time, because just a few. Do you think that the war has really reset the entire fundamental picture when it comes to oil prices?
If you see the daily move in crude oil prices is completely gap up and gap down. Completely supporting toward the prices. So we are really going to be soon looking forward to $120.
No, absolutely. And that you've mentioned that, 120. And what do you think about the entire prompt spread as well? Because you did have that entire gap between WTI and Brent that was in focus at one point in time. During this particular war, it was at
Yes, both of space is both the production and the deproduction on the both side is depending on how exactly panning out from the other hand. And it's both higher range.
Absolutely, and that makes a lot of sense in terms of how the entire picture has really functioned when it comes to prompt spreads as well when it comes to oil. But I also wanted to try and get what kind of trajectory are you then mapping out when it comes to gold prices?
Group on an international level, if suppose we look forward 4,500 and again it's on that particular level, and it will be the more again aggressively buying happening on a high level around a 4,700 mark. And the on a domestic level, we'll see them again pressurize levels. It's going to be happen around of 1,55,000 mark. For the today itself, if we're looking forward the trading call, so 1,50,000 selling position over there, and keeping the stop loss of 1,52,300 level. Looking for the target for the evening session. As per the data is concerned from the US, around of the profit inching.
Absolutely, and that makes a lot of sense when you talk about gold as well. I also wanted to get a quick check going as far as silver is also concerned. And, you know, you've mentioned some of those levels when it comes to gold. Be it in terms of support or resistance levels or in terms of any factors, if you can comment on those.
Yes, when we look into this war situation, how exactly is panning for all of the export import is impacting. If suppose this panning out on the silver on a domestic level, somewhere the support level as 2,20,000. Side, silver could be take the resistance up to the $76, and it will again saying the selling pressure from the industry if the industry level is not supporting that demand. So somewhere, if you're looking forward, selling pressure for the evening session is 2,35,100. It is the best level to go for the short side, keeping a stop loss of 2,38,300.
Just wanted to get a wrap up in terms of copper as well, if there's any levels that you have in mind here.
See, when we're talking about the international level on the industry, supporting towards the numbers. As somewhere on a domestic level, M6 April contract 1170 is the right time to go for the selling side, keeping a stop loss of 1170.
For taking time out and joining us. So there you go. Those are some of the levels to keep in mind, not just when it comes to gold and silver, but also copper and oil. So it's quite the technical Tuesday that you have right here on Lunchtime Trades. But let's also get your check.
We start with Titagarh Rail System, wherein the company's arm has approved a brownfield expansion for West Asia, and company will receive 129 crore as government subsidy. Taylor, wherein they're expecting to drive almost to source volumes of almost 450 crores. Then you have Brigade Hotel Ventures, wherein they've signed a management agreement with Hyatt. And this follows its previous deal for Grand Hyatt Chennai. Then also you have Pace Digitech, wherein the stock is under pressure, because of share lock-in expiry. 13% of total outstanding share with HBL, which are buzzing. This is on the back of Indian Railway, which has approved 1,364 crore for coverage deployment and signaling modernization across some stocks which are buzzing on the back of news flows.
No, absolutely, and thank you so much, Varsha, for getting us that entire list. So there's a bunch of those counters that are buzzing away, including the likes of something like a Titagarh Wagons as well. But let's sector amid rupee depreciation and also optimal valuations. In fact, you do have Jasmeet who's standing by with some of those updates coming in as far as some of those counters are concerned.
be the overall AI overhang, which is expected to continue in the Q4 as well as we have seen in the past quarters. But on the positive side, we do have rupee depreciation that's supporting the overall EPS growth for the IT pack alongside the valuation. The overall management commentary in terms of the merger and acquisitions, and also on the acquisition ramp-up commentary, given that Q4 we did see a lot of companies coming out into acquiring entities in the AI space and to help them grow in an inorganic way. That first time in 8 years, this will be the quarter where the focus will be on the overall revenue guidance of how the companies see FY27 going ahead, which will be watched very carefully. While in the Accenture commentary, overall demand commentary, but we did make a note stating that the overall AI booking is something that's ramping up really well. So AI booking in client commentary around the AI will be in focus for Indian IT as well. Now quickly moving in terms of the revenue, we expect TCS to report a 2.7% up move in terms of the revenue. If we look at the other key numbers, the net profits are expected to jump between 10 to 35%. Given in Q3 we saw a low base. Of the tier 2 companies, we do note that Coforge continues to be the top gainer and expected to grow the most in terms of tier 2 companies. We expect Coforge to have a growth of 6% in terms of the revenue. Now in terms of the key commentary, lastly, if we look at the other key mid-cap IT players, they expected to do really well compared to the tier 1 companies. So all in all, what we extract from the Q4 preview is that we expect a good quarter for the companies. Even stocks are
Absolutely. Wait and watch we will, and Jasmeet, we'll get all of those updates from you as and when they pour in. But let's also focus in on something that's quite important right now. Reserve Bank of India's Monetary Policy Committee is expected to keep it. Let's also, before this particular RBI MPC and that entire outcome, let's also get you what is really being penciled in and some of those key monitorables. In fact, Piyush is standing by with just that.
All 10 economists have unanimously voted that RBI will hold on to the rates. In fact, they expect that RBI will hold on, have a very long pause, and if inflation challenges persist, then watching RBI's outlook on both growth and inflation dynamic, considering the heightened tensions in the Middle East region. We also are aware that RBI has taken a lot of significant steps. ₹95, 95 level versus dollar earlier last month. The media and the market participant will also be questioning and viewing the RBI's resign, citing differences between his ethical practices and some business practices of the bank.
Right, absolutely. And thank you so much, Piyush, for getting us all. Get you the word coming in from Sakshi Gupta, principal economist at HDFC Bank, on whether the RBI is likely to change its stance. We've gotten you a heads up in terms of what is being penciled in, but let's also go across.
This point, the risk to the policy rate is actually two-way, depending on the duration and the impact of this present conflict. And under that backdrop, I don't at this point.
All right, then there you go. So that's the key word coming in terms of what is being penciled in at this point in time when it comes to the monetary policy action. But let's also take a look at the markets. When you talk about Nifty 50, let's also quickly zoom in on the sectoral picture right now. So it's IT yet again that is standing out with that entire 2.5% uptick also coming in. Realty and metals also in India that may now face higher compliance hurdles, and a change in income tax rule is something that you're penciling in that has made PAN applications more stringent, requiring foreign firms to appoint a local. What's really changed and why does it matter? How it could be impacting foreign investment flows as well? Nimit Dixit is standing by with all of those updates.
Yes, absolutely. So the big change is that there is now a requirement to have a local address and a local authorized representative or representative assessee. Now what this means is, earlier when a tax consultant or a legal consultant they could put an address or a representative number of a foreign director of that company who lived abroad. Now, because it's mandatory to put an Indian number on it and an Indian from the tax authorities. Now, if the main company or the applicant becomes non-communicative, then will that liability fall on the local authorized representative? That is the big question that's out for another layer of compliance burden on these foreign companies that are looking to enter India. The important thing also to notice, there is an exception for foreign portfolio investors who have to do a separate filing, but for PAN, and that PAN requires a local address, which adds a huge compliance burden on them.
No, absolutely, and thank you so much, Nimit, for getting us all of those important details. That's an important update that you're looking at when it stepping into the second stage of its nuclear power program with the prototype fast breeder reactor at Kalpakkam coming alive with first criticality. Now you're looking at the fully indigenous and the reactor also produces more fuel than it consumes, and that's the key headline that you're picking up here. It's positioning India among a handful of nations mastering fast breeder technology for long-term who's earlier been given the rare access to this particular facility. Here is the exclusive ground report.
What you see is India's prototype fast breeder reactor, which will use plutonium as a fuel. This is the reactor which kicks in India's second stage of the three-stage nuclear program. Totally made for atomic research. And beyond that, 4 more reactors called the fast breeder reactors will also come up. We are standing very close to using a fast breeder technology is in Yekaterinburg, which is a little far away from this ocean from here. Yet, Chennai and Yekaterinburg using a fast breeder reactor. But what is a fast breeder reactor? A fast breeder doesn't run fast and doesn't breed fast. Have a higher velocity. And why is it called a breeder? Because the fuel it takes in, suppose it takes in 10 grams of fuel, it gives out more which will power India's second stage of program, and beyond that help India go to the third stage of program for generation of electricity. What you see will come beyond these forests called the fast breeder reactor 1 and 2. After that, the government has already cleared another few reactors to be made in fast breeder technology. And India hopes to maintain its leadership position in fast breeder technology.
All right, then there you go. So that's Let's also talk to you about some of these aluminium counters that are in the spotlight after JP Morgan turned more constructive on the entire space as a whole, citing sustained price strength amid geopolitical risks. In fact, the risk reward setup. Somit is standing by with all of those important details.
Well, as JP Morgan has come out with this bullish note on the aluminium producers, both Hindalco and Vedanta, it's an upgrade to 1,125 from 875, and for Vedanta they have hiked the target price to 850 from 680. Now this major upgrade and the increase in target price is only on the for Vedanta. They also say that the risk reward looks attractive and energy inflation, which means that the raw material cost increase will not be a concern for Vedanta at this point of time. For Hindalco, they believe that the worst as well for Hindalco going forward. Now for the fourth quarter, they're not expecting much of a growth to come in from Hindalco side because of the issues on the Novelis side, but for Vedanta, they're expecting a 24% But going forward, if prices continue to remain at the higher level, this should benefit Hindalco as well as per the brokerage. So that's the, so increase in aluminium price is the major reason behind this upgrade that has come in.
An update coming in as far as both of those counters are concerned. Let's also talk about some of other buzzers as well as before we end the show. Something like a Gallant Ispat is standing out with that almost 14.5% that have risen about 59% on a year-on-year basis when you talk about pellets. But when you talk about sponge iron, you're looking at the volume uptake of somewhere close to 38% on a year-on-year basis. So that's Gallant. Access Grameen is also standing out with the entire update of the retail finance share also rising. So that's largely the update coming in as far as both of those counters are concerned. But that's all the time that we have on this show. Thank
हर पल मनाओ केसरी त्योहार विमल।
Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi. And meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter finance.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no
Of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use. That you can actually use.
Tech has changed. So should your tech show.
The Tamil Nadu twist. Join me in the midst of our people, language and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. Welcome to watching Prime 5 Nifty Raisha Sehgal. What's happening? The show that sets the prime time agenda. We'll be deep diving into this topic to tell you what's at stake. Join me, Raisha.
Good afternoon, you're watching take you through the most important small cap stocks that have been buzzing in trade. So which are those counters that we'll be talking about today? Firstly, we'll be speaking with the management of Crizac. Now they have committed around 2 market. So how will this help the company and what is the growth looking like going forward is something that we'll speak with the management on the show today. Apart from that, we'll be also discussing stocks like PDS. Now they have signed a SaaS news. Apart from that, they have also the deal is likely to drive sourcing volumes of over 450 crore rupees, and that is the reason why the stock has been gaining in trade. Apart from that, we'll be also speaking Kavach development contract of nearly 1400 crore rupees. Then there is Global Spirits that has been buzzing on the back of the launch of the first tequila brand called Terai, and that stock has also been gaining in volumes. If you look at the volumes, they are nearly 19 times its 20-day average. So that is one of the reasons. Now, if you look at the market, the Nifty, it has been largely a flattish trade, 22,950, 23,000. In the last couple of hours of trade. But if you look at the sectoral indices, it's Nifty IT, which is the top sectoral gainer, more than 2% up in trade, while Nifty PSU Bank continues to decline on trade, down around 1. Varsha, which are the stocks that are seeing action in trade today?
Well, you know, a lot of stocks are actually buzzing on the back of volumes and, of course, the news flows that we are seeing today. Let me start with Lux Industries. Stock was up. The stock is up almost 9% in trade. Now, this is, of course, buzzing on the back of volumes. Volumes are trading at 6 times of its 30-day average. You have Kesaram also buzzing in trade. You have Bombay That's a huge rally that we have seen in Bombay Seed today. Also, if you see, the stock is up almost 10%. PDS, of course, is buzzing because it has entered into SaaS contract with major US-based value retailer. This is under pressure on the back of lock-in expiry. You have Hariom Pipes and Ruchi Infra, which are under pressure. But moving on, NDTV. IPO, the company is still testing the water before moving into formal filing. Nimit has more on what this means and what comes next. Nimit, over to you.
So it's an in-principle approval that Zepto after Zepto approaches SEBI, after the process which it is currently doing, which is it is testing the waters. Now, testing the waters is a regulatory allowance that the SEBI gives companies to gauge investment to SEBI. So right now what we have learned from sources close to the company is that Zepto has an in-principle approval for its IPO from SEBI. It is currently still testing the waters. After testing the waters, it will go back. Of course, is looked at about a $1.2 billion IPO looking to be filed later this year.
Okay, that's the news coming in on Zepto, a new kid coming out to raise funds in the primary market. So firstly, to start off with this $2.5 million commitment that you have given for AI development, and also you have said you will be entering high growth regions like Latin America and Africa. Could you just give us some understanding?
Hi, Somit. With reference to commitment for AI development, we have decided to create an independent vertical, which would be very much dedicated and student much better. It can help to give a real-time multiple solutions. Say, for example, if a student wants to go to a country, let's say UK, and want to go to Australia, what will be my career prospect? With these developed softwares, system would be able to tell them on a real time that these are the opportunities, these are the things which will which humanly it's not possible to map everything, because people will have a limited knowledge of particular destination, particular country kind of thing. So we believe we want to use as much as AI to the universities where they want to go. Okay. With reference to our expansion plan, yes, the company is expanding into Latin America. We believe that's a very big opportunity. Where US was one of the popular destination market, but a lot of students from there wants to come to UK and other places. So we have already acquired a company called Study Planet, and we are looking at expanding more.
Revenue that you could see, say 2 years down the line?
Sure. We as a company normally don't bifurcate region by region, but because of that region, we should increase the revenue by 2 to 3% for the company.
Right. Hello, Mr. Agrawal. This is Varsha this side. Well, hello. Take this contribution toward geographical mix too, considering you are expanding into different geographical markets as well?
Sure. We have already expanded into USA, though US has not. Year, the company has gained a lot of contracts for New Zealand. Today, the company would represent almost most of the institutions in New Zealand. we are looking at expanding into Australia in a big way, and hopefully in Australia. That will make our company multi-destination company. As said, we are strong in UK. We have everything in Ireland. We have everything in USA. Isaac has got will be done. Our company has grown largely in Middle East as well, though because of this war and other thing, Middle East will be a bit of a challenge for next 1 year for sure. And we're looking at expanding into
service that you also provide. I believe it's on you get some commission out of it whenever the deal gets done. But I believe that is present only same in New Zealand. And will you launch the same service in Australia as well when you go in big in that continent?
That's very much true, Sumit.
Okay, but in when you are planning to launch this in
with New Zealand. So hopefully in 1 or 2 quarters we'll have those ones in place as well. Company has also started with.
Sorry.
Yeah. We also facilitate loan for all our students in all the different geographies.
How much these two segments contribute to top line right now, and how much do you see them contributing 2 years down the line?
Almost 6 months back. So it's a work in progress, I'll say. 2 years, 3 years down the line, you'll find them contributing roughly 3 to 4% of our
Studies Planet and Global Tree, which is tilting more towards B2C. Is that the new lever of growth, or you want to take that contribution up to, or you want to be a B2B company only?
So we are a market leader in a B2B segment, but we also want to become a leader in B2C or D2C segment, you call it. So company has a vision that they want the profit margin on D2C is much higher compared to what we have in B2B.
Right. On to financials now, considering the Q4 contributes almost almost 430 odd crore in Q4, which will take to your overall revenue to around 1,085 crore in FY26?
In FY26, we had given a forecast of 1,040. Even though there is challenges because of Middle East and slowdown in the industry, but as a company, we are very strong in our pipeline, and we believe whatever
financials would be, what are the margins expected for FY26, and also the growth for FY27 also, if you have some target of there?
Sure. In terms of margin, we'll maintain the same. In terms of growth, again, the guidelines was 20% increment year on year. So roughly 1,200 crores in 12 to 1,250 crores in.
Conversation with us, and all the best for the business.
Thanks, Vasha.
Well, this was Cryzek, expecting almost 1,040 crore of revenue in FY26. But moving on, hi Gaurang, welcome at NDTV Profit. Now, you heard the management of Cryzek. What's your view when it comes to this counter, considering companies expanding into the different geographical segments?
As well. A small disclosure that all recommendations that I'll be sharing with you this afternoon on the show, Varsha, are a part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal interest. So 2 points. First of all, the acquisition that they are going to do, how soon it's likely to contribute. That's going to be something that we'll have to wait and watch. And in terms of the business, increase their footfall or market share, but at the same time, a lot depends on various countries in terms of regulations. And while whatever the management has guided towards augurs extremely well, but I think a lot will depend upon how the future delivery is.
Before we go on to our next small cap stock, let's get in Sharath to
Right, and Somit, for the last 4 trading sessions, we have seen the same thing playing out. There is uncertainty in the opening, and then again the technical levels, the short covering starts coming in, and now IT. Because there was almost 40% only was there in the green, and now that's moving towards 60 and 60 to almost 70 odd percent. What's dragging is definitely going to be Reliance and Interglobe Aviation, but the drag has become very the way the markets are behaving for the last 4 trading session. But in this, let's point out the stocks which should be on your radar. Let's just pull up the key long build up of what's happening here, and its emphasis and prestige estates. Realty counters. Supreme Industries, there is a reversal happening at play. Short covering, there was big shorts made last trading session. Now Fortis Healthcare also makes it to the list after a really long time. And let's see what's there in which trade is there in the shorts. We have Jubilant Foodworks. Sell-off has intensified. Last time we checked, it was down 7%, and now look at it, it's down 10%. So there is an extreme sell-off pressure, selling. To see a big sell-off as well. It's continuing in today's trade also, but nevertheless the broader indices are doing well, and we are at the day's high level.
Well, thank you, Sharath, for that F&O snapshot. Moving on to development which could lead to sourcing revenues of close to 450 odd crore rupees. How does that benefit the company? Let's get in Just Meet to understand more.
Well, thank you for that. Somit has rightly said the stock is buzzing on the back of